walking. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Oh, see, that's nice.
Nothing like a long weekend to, refresh you a little bit.
I know. It's my first week back from my vacation the prior week, and it feels like it's so much longer after you have only a 4-day work week. I don't know what it is.
We'll know that
It's an optical illusion.
No.
And today we'll both need like a bathroom break in between.
Yeah.
It screws up the schedule. The schedule gets all funky.
Yeah, my first day back, I needed a little bathroom break on that Monday. Yeah, that was good.
It's 7:01.
Oh, no. Did you say?
You can't wait 5 minutes to talk about the bodily functions. Like you can't just ease into it. Just be
Planning,
like,
we're
hey,
planning
how was
for
the
the
ham?
future.
How was the ham? No, just
No
get it right
ham.
to-
We didn't do ham. We just
Lamb.
did rack of lamb. It was really good.
Okay.
I did good. I actually did
A lot of them.
A lot of them. We only had 7 left
We could have
over. and I
fed
think
about 14 people
I think I had.
if we weren't all fat.
Who
we
cooks
ate
the
about
lamb?
I did.
Oh, you did?
Yeah.
Okay.
On the barbecue, I had 50 of them, and it was only
You had
10 of us.
50 lambs? What?
A whole herd, basically. Yeah, a whole flock. Took
I
them off.
had a rack,
Like
but
a
then we
shepherd, he just
chopped them up. So I mean, I made them into like lollipop kind of.
Oh, okay.
Yeah.
yeah.
So you had 50, and then wait, how many did you have
10
left?
people. One was a child, so 9 real people.
Yeah.
9 real people.
Was it 9?
It was 9.
Yeah.
It was 10 of us. I mean, but yeah, 7 left over. 7 left over.
It's pretty good.
Yeah.
Yeah.
You do like the mint jelly or?
No, but I did them more kind of like Greek style. They were really good.
Yeah.
They end up coming.
Garlic, rosemary.
Yeah, garlic,
some thyme,
rosemary, some thyme.
Olive oil.
Olive oil, let them marinate overnight.
Almost burned down the house.
Almost burned down the house.
For a
Yeah.
second.
Well, they get a little greasy. They get a little greasy at
That's
the
the
end.
oil from the marinade.
Oh, the
Yeah.
flashback.
Yeah. But I got it. I handled it.
Yeah.
I handled it.
Yeah.
So what else
We
did
almost
you
burned
have?
them too. I saw the smoke.
Yes. You
I
did
caught
save
that.
us. Yeah, you did
Saved
save
it
us.
for a
I would give you
second.
that. I'll give you that.
It was almost.
Yeah.
But he likes them burnt. Like
I do.
It's like hockey pucks. Like,
Yes, I do.
Well done.
But I made them 2 ways. I made them
made 'em good.
my way. I made like a dish my way, and then a dish the way normal people like them, I
it
guess.
was good. It was
Yeah,
good.
and some chicken cutlets. Gotta have chicken cutlets just to walk around with.
Yeah, little chicken.
And what was your contribution?
My girlfriend made carrot cake.
He brought eye candy. Yeah, he brought eye candy.
Nope. We are not going to reduce women to just that. Nope.
No.
Carrot cake, homemade.
Carrot cake. Oh, that's impressive.
Yeah.
Carrot cupcakes. They were excellent.
Cupcakes.
In the fanciest box I've ever seen.
I was supposed to bring them in today. Forgot.
I was supposed to bring some in today too, and
You go home right now, Nicholas.
I can bring
because
I'll
he
bring
did
them
say Vanetta will be happy because I'm bringing in these cupcakes.
I'll bring them
I
tomorrow.
don't have Chick-fil-A, but that's exactly what he
Yeah.
said at the dinner table. You were the
Topic of conversation.
that's what I was looking
yes. Yes.
I can't help that you're obsessed with me.
for. Yes, we are obsessed with
We were like,
I want the carrot cupcakes.
Yeah.
They were very
They're
good.
very good. They're very good with
Oh.
secret ingredients, which I'm not going to tell you what they are, but they're with secret ingredients. Very good.
Yeah.
Excellent.
Oh.
Very moist.
Okay.
Yes.
Very nice. They really were very good.
Yeah.
Very good.
But she did bring them in a nice. We got like a nice box to put them in, and I was like, "Listen, my family is a bunch of heathens. Like, you could put these on a paper plate, and they'll get attacked." So
We don't even care if the saran wrap gets all over the icing or anything like that. We'll eat them. It's going to be fine.
doesn't matter.
Did you get to play golf, Nikki?
No golf.
No golf. It was nice yesterday. It was a little cold, but
If anyone out and hit balls, what if anyone out and hit
Yeah.
balls? Yeah.
it was like rainy Saturday, but
Mm-hmm.
crappy.
Soon though.
Soon, okay.
You could feel the golf air in
You can.
yeah.
You can.
It's there. It's
I got a couple extra pool loungers. Like we ordered a couple, got 2, ordered 2 more. So we're getting ready, kind of feel it.
Would they go in the pool or outside?
No, outside
of
the pool.
Okay, I don't know.
It's not really. So we all stay covered now. Everybody. I mean, when you get to our age, you're not like hanging out in the sun. Kind of
Sure,
thing.
yeah.
We stay in the palapa. But my son,
Says the man who is literally so friggin' tan right now. Mr. Yeah, no, I stay out of the
rest
sun.
of the family is very white.
Okay. Well,
Very pale,
Very
fair
pale.
skinned.
gotta put
Yeah.
sunscreen on. You got
Oh,
Present
they need,
company
like
excluded.
An umbrella.
Yeah.
They need one of those like head umbrellas.
Yeah.
You know, they're like
they do need it like
Yeah.
one of those head umbrellas.
yes.
There are those people.
Yeah.
with the sun shirts
Like
in
ghosts.
the pool.
Yeah.
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 But my son, the little guy, the 16-year-old, they still like lay out a little bit.
sure.
He needs it for the ladies, you know.
Yeah.
Are there ladies?
He's trying. He's trying.
Yeah, he's working on
He's
it.
working on it.
Okay,
He's working
well.
on it. He's working on it.
Yeah. I could hear it in his voice that it's about to start.
No, he made fun of him. My Vinny
Yeah,
was
I-
upstairs talking to him, and he's like,
Well, no, I walked in and I was like, Vinny, where are you? He was like in the bathroom or something. He's like, I'm in the bathroom. I was like, what is that? A man up there? Like, who is that?
he was giving you his best.
Because he
voice.
hasn't, he's been like a little baby, but he got a little taller.
Oh.
Voice
Is
is
he taller
dropping.
than you now?
No,
No.
he's still a little.
I don't know.
Midget, little small.
Okay.
He'll spread up.
He's
but
5'9". He's getting there. He's
5'9" with shoes on.
Oh, so he's already started the lying. Like he's
Yeah.
already gaming the height.
Yeah.
Like,
Oh, he's learning.
why do men do
He's
that?
learning, I'm
Just
sure.
say how tall you are. Just be
I was a
honest
late
about
bloomer
it.
too.
Just be honest about it.
Only Nick was the early one in the family that I can remember. He was.
Gina was taller than me until I was 16.
I love that for Gina.
This is true. This is
Not that long. It was like,
It was
what are you in 8th grade? 13? 12?
Yeah, you're
13,
13.
14.
Yeah.
Yeah, 13,
It
14.
was probably like 7th grade.
Whatever memory you want to have.
Yeah, it was
I
like
have the
6th
same kind of
grade.
memory.
Yeah,
It gets
yeah.
better and better my way.
That's funny. I mean, I was only 5 feet tall in the 8th grade, and then
Forever.
I know. Well, no, and then I got the extra 2 inches.
From the high heels or from what?
No, I was just like in high school. I grew, but I was 5 feet tall. When
Did you do like on
entered high
the
school.
door?
No,
Oh.
it's not very high. It's
Yeah, I was
not
going
very
to say,
high.
did it like stop out and
It
like.
stops. Yeah, that's fine.
What about you? You saw the parents, I'm assuming?
I did. It was great. Got to.
Did you go to the basketball game? Because you were in Indiana, right? They live in Indiana.
Do you not know that how big the state is that's in Indianapolis? Like 3 hours away.
No, it's
Oh,
3 hours.
nothing.
That's
Do
not.
you not know?
Get there on your bike, right there. Easy breezy.
In the rain and the cold? What do you think is happening one state away?
I actually took your car.
That is like a different climate than
It is a lot warmer down there. Don't lie. It is.
I live in South Bend. We're on the same.
Oh, you're right there.
Like the same
Yeah.
latitude. Like we
Yeah.
have the same weather. Actually, their weather's worse because they get the lake effect sno.
Oh, you're by the lake. I'm sorry. Yes.
No, we're not actually by the lake.
Kidding you.
Do you not want to? Like, I don't have to say anything.
I'm trying to get you to say something.
It was very good to see my parents, and
Beautiful.
yeah, that was
Very nice.
Lamb chops?
No, lamb chops. No.
Ham?
My parents did have ham. My dad made a turkey breast for me, so it was very good.
Smoked? Mm-hmm. Yeah, he's good at that.
Yeah.
Good at that.
Yeah.
Very nice.
You got to get your smoker out.
I'm running out of time. I don't know if I have time for smoking anymore.
Running out of time?
I think so.
Gonna die?
Yeah, what
What's-
is
Yeah, I can't donate all that time to the smoker anymore. Although I'd like to.
Oh.
There's
I
apps
should.
for it all. You just put it in there, and then your phone tells you when it's done. And then you're fine. It's
And
all,
I've got one of those now, like pellet ones. I know
Oh, you got 14 of them.
the true aficionados make fun of the pellet ones, but they're really easy.
Yeah.
You put it on a dial. It's almost like an oven. I mean, it's great.
bada boom, bada bing.
It makes it almost fail proof.
Hey, congratulations to UCLA. The Bruins are the women's NCAA champions. They just straight dominated. I think they only lost like one game the whole season. But it was weird because I heard that they won the Big Ten championship, and I'm like, how did UCLA win the Big Ten? And I was like, oh yeah, yeah, I know, but it's weird.
like all over the place.
I know. I was like,
They
what?
don't make any sense anymore.
Yes, but hoping, because the last time the Big Ten men's team won the national championship? Do you know?
Ooh. I mean, it's got to be one of the Michigan states, right?
Yeah, it's Michigan State, but when?
2004. I have no idea.
Probably close
Close to that.
Yeah.
I have no idea.
Probably
2000.
2000?
2000.
Really?
The last time a Big Ten team has won the Natty Championship. Connecticut versus Michigan tonight. Connecticut hoping to continue their dynasty. They've won 3 out of the last 4. They've been 3 at 2.
Yeah, I think
2 out of the last. I don't know.
I saw
but
some stat
it's
that
a
like
lot.
Michigan and UConn, one of the two, have either won or been in the game like the last like 15 years.
Wow.
Like, there's been
We have to be going for Michigan because they won one of the square pools for us.
Yeah.
So we got to go with them to win the
just
whole.
go 5-2.
Yeah, we don't care who really wins, but 5-2 would be nice.
Yeah, I don't know what the line is. I don't know what the
7.5.
Oh,
That's where it opened at.
You would think it was going to be bigger than that. Michigan does look great.
Whooped on
Arizona.
I think
Yeah.
that it would, I mean, 7.5 is probably right where.
Like, they beat Arizona so bad, the Arizona social media account didn't even tweet the final score of the game.
Yeah, that was just a.
Right out of the gate, too. I mean, it was just, they myrtleized them.
Yeah.
It was bad.
So how did you do overall with your March degeneracy?
I hate to give it to him as a lucky charm because you have to have a rich guy to really like it's money goes to money.
Mm-hmm.
You know?
It does seem to be like a magnet. I'm not going to lie.
Money goes to money. So over the last he did absolutely nothing.
Okay.
He did absolutely nothing to warrant this
Windfall.
windfall. We have had a stellar,
Except provide
stellar run.
all the reasons why we're winning.
What is that? Because you have a horseshoe up your
Yeah, exactly.
Cookies?
Exactly. Yeah.
That's about it.
So we've done good. We've done good.
Okay.
It's been good.
I haven't seen anything yet because
What do
possession.
you mean? I paid you cash for the Super Bowl.
The Super Bowl, I
Yeah,
spent that money already. I mean, now I need this money because possession's 9/10 of the
Yeah.
law, and it hasn't come back to me
Yeah.
yet.
And
There might be
then-
an extra tax on top.
And then what portion will you be donating to a charitable cause?
That's where the cupcakes. That's where the cupcakes.
It's all my tax dollars, okay? Those are
Okay.
you get those every year.
Okay, all right.
That's it.
All right.
That's
Well,
it.
I tried. Good luck to both
Yes.
teams tonight as they battle for the best team in college. I'm rooting for Michigan.
Yeah.
Just gonna put that out there.
I'll probably take Michigan too.
Yeah, I want the Big Ten to win. So that's it.
Yes.
And then the Masters starts on Thursday. So
There you go.
you got that, Nikki. You said golf was in the air.
Yes,
So are
golf.
you betting on the Masters?
I will wait till my consigliere Mikey gives me his picks.
Oh,
Follow those.
okay.
Vinny wants to go to the Masters next year, so
You ask Uncle Tony. Ask Uncle
yeah.
Tony. Yeah.
Hey, you want to go?
Would I want to go to the Masters?
Yeah.
Yes, I would like to. Should I try and win the lottery on the Masters picks? I don't know what you're asking. You
No,
want me
'cause-
to go get them for you? Is that what
I just
you're
want
asking?
swag. Just bring
Yeah.
me back swag.
I will talk to you offline. I guess.
Yeah.
I should
sure.
talk to you about this.
Sure. Yeah. Would I want to go to Masters?
I mean, if you're at the Masters now, I am a size small. Anything that's pink. Thank you.
Yeah. They ship
Pink,
like-
Yellow.
Right, you're
And I
just
like the
going
yellow.
yellow,
Yeah,
right.
yellow, pink,
Think Easter
green.
colors.
Yes, love it. Love it all. Anyway,
Okie-dokie.
we got a good show for you today. It is a magnificent Monday here on Tasty Live and a lot of great content headed your way. Back to a full week. We will see how this goes. We were forced to work 5 days in a row. No promises. But at the top of the 8 o'clock hour, we have an options jive. Got a little research corner, Kai's outlook, I guess, for the markets for
Kai
the
is
week.
out though. I was just notified.
Oh, so he's not going to be in.
He will not be in for either segment. So we are on our own for the SPX.
Oh, no.
Which is a really
Okay.
good
I
one.
was going to say what you loved. You were even
Yes,
told me about
very
it all
good.
weekend at the dinner table. You were telling me
Yes.
how good this is
Yeah,
going
I
to
was
be
like,
for the
wow.
0 day.
And you see this SPX.
9 o'clock.
Yeah, okay. Well, can I
Sorry.
get to the other?
So may I interrupt you for a moment? Do we have to
I can't stop
preemptive
you.
make a trade? It can't stop me for SPX prior to the market measure segment?
Sure.
Okay. I was asking, is it that?
It's our network. We do whatever the hell we want.
Okay. All right.
You want to make a trade in SPX? Yeah, sure.
Okay.
And then 8:40, we got the skinny on options, abstract applications. Dr. Jim in the house. Delta, static versus dynamic.
Nothing.
Choose your fighter.
Dun, dun, dun. It's like the Street Fighter.
Well, basically, the segment speaks for itself. Because
Yeah,
about
it's
Delta, static versus dynamic.
It's pretty much about that.
Okay.
Yeah.
Love it when a plan comes together. And then 9 o'clock, on your own, no Kai, 0 DTE breakout match performance. Why were you so excited for this segment?
It should be March performance. It could say match.
It does say match.
I'm really sorry about that.
No, that's okay.
It's close. It's kind of one of those words that's right in the middle. So
Yeah, match, March, March, match.
AI just fixed it for us. It was a problem.
So we're just recapping March, which has been super, super volatile. The average VIX was at 26 through all of March.
Ooh,
which is,
that is juicy.
That's juicy. And a lot of big swings in both directions. So I think the takeaways will be very interesting because it was actually a really good month for 0-day trading. So
Okay.
some people think you got these huge moves, you got to be getting killed on these. That's not the case.
And then around that 9:30 time frame, live from the trade desk, we got Quentin Q in the house counting down the top trending tickers over at Tasty Trade, and Glenn G Money on the Tasty FX side of things. But I would be remiss if I didn't mention this. At 10 a.m., Liz is going to be joined again by Tony Rehan. Great off of his performance when he sat in when Liz was gone with Jenny. Now Tony from Mexico. TFM is going to be with Liz. If you have trading questions for Liz and Tony, make sure to tweet at them. They will answer your questions live during their show. Use that hashtag LIZJNY. That's at Liz and Jenny Show on Twitter. But yes, always great when Tony from Mexico is
Last time he was on, he talked about like hedging deltas, which is a good conversation. So we'll see what comes up with this time.
He is the best. And then Mike and Jamal will also be joined today by Kevin Devitt.
Beautiful.
So good job all around. Just guests on guests on guests. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Our leading story. Top story. Just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's April the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
The sudden increase in U.S. gas prices felt by American consumers is set to be on full display in key inflation data that is due out this coming week. We had the jobs report that came out. You like my artwork there? Thank you.
Both. Yeah.
Thank you. We had the jobs report that came out Friday, but we weren't here because the market was closed. So whatever that did. But you're gonna get your core CPI and the Bureau of Labor Statistics report that is due on Friday, and other economic reports today. What do you think's going to happen?
My Taiwanese sources told me that jobs gained 186,000, whatever that means. The consensus was 70,000.
You could change it.
You can make it whatever you
Yeah, you can
want,
make it whatever
but
you
it
want.
looks great on paper. And then March hourly earnings was up 3.5%. The other gained, U.S. March factory jobs gained 15,000 jobs. Consensus was under negative 5,000.
Sure.
Who knows? It meant nothing. Even the S&P's opened down around 45 or so. Oil was trading around 115 a barrel on the
it was up like
opening
$2 or $3
last night.
at the open.
It was a weird, as we talked about on Thursday. Oil didn't open all weekend long. It didn't open until Sunday, where some of the other
'cause it was
futures.
close.
I will get to oil. But
Crazy. Well, you're talking about gas. Sorry.
Sure.
Yeah. They interviewed one of Vinny's 16-year-old friends for TV. He just happened to be at the gas station. He's like, Vinny goes,
He's like, yeah, my mommy is really upset about this.
That's what Vinny said. He goes, it used to take me $30 to fill up my tank. Now it's taking $40, and I'm really young. It's the first time I'm experiencing this, that. And Vinny turns to me after we listened to the whole video. He goes, Dad, his parents pay for his gas. He doesn't even pay for it. He has no idea how much his tank of gas is.
Of course.
But he was on
It
TV.
was $1 cheaper in the suburbs. I filled up after I left your
There
place.
you go. Beautiful.
385 in Indiana. So yeah, I was like, "You
Bring some
coming
across-
back with me?" I'm like,
Yeah.
"You coming back with me,
Pull up the
gas?"
drum in the
I was
back.
like, "Let's go." That is like $2 cheaper
Yeah.
than. But I do want to talk about treasuries because that's inflation. That's tied to like we talk about there.
They continue to go lower.
Uh-oh.
We got into the 14 handle on Friday, and now we're back, low 113.11 right now on the bonds. So it's been bonds have been weird.
Bonds have been weird. Ivy rank at 26 is good, not great, but yes, bonds have been weird by weird. A lot of action, and it's
Yeah.
been to the downside.
But they've
mostly.
stayed right in this 113, 114 has kind of been the spot.
Yep. Now they're at the low end of that spot. Not the low end where it got into 112, but 113 and change, lower end.
Yep.
Oil prices rise as Trump warns Iran to open the Strait of Hormuz by Tuesday at 8 p.m.
crazy
Eastern
bastards.
time. Yeah, you friggin' bastards, or face hell. I love a lovely Easter message. And then he just tweeted a bunch of war crimes because you cannot bomb like their critical infrastructure because of a thing called the Geneva Convention, but that's neither here nor there. But oil prices did rise Sunday with crude topping 114 per barrel. I guess maybe it's down now.
It is
this
110 and
morning.
change.
Yeah.
Off of its lows of around 109. Let's just call it just under 109.
But where do we go from here? Because if last week the president says he doesn't care about the strait being open and that's really for Europe to decide, but then he flip-flops and then is like, now it has to be open by this deadline. Like, what is
Don't
anyone
listen to what he's
supposed-
saying. Listen to what he's thinking. You know this. I mean, come on. We've dealt with greatness before. Same thing we have here.
It's just hard. But what are you doing in oil?
I am,
Small oil positions, not huge.
I got MCL. I have.
You do.
So I'm
Yeah.
short upside volatility is really where I'm at. I mean,
Okay.
I would ideally like to see 100 on crude. That would probably be like the sweet spot for everything because I have
In what
ratio
time
spreads
frame?
and butterflies. Like in the next couple weeks, next like 2-3 weeks.
Okay,
would be-
so you have about a $15 expected move
Yeah.
for the next couple of weeks, 2 weeks or so. Just put it in perspective, and you're 110. So your 100 is in.
But I'm not. That's not delta. Like it's short volatility, so you want to have a little bit of a pullback.
or stagnation where we just sit
Yeah.
here.
Yeah.
You're short upside vol, which has a lot of skew.
Yes.
Okay.
Yes.
I think it's an intelligent trade. It takes a little bit of buying power, but I think it's the intelligent
Yes.
trade.
Yes.
Yeah.
Gotten big.
We will see what happens. The dollar looks to be steady as traders fret about the escalating war in Iran. Dollar seemed steady on Monday while the yen flirted with a crucial 160 per dollar level as nervous investors took stock of the escalating situation in the Middle East. All eyes are now on the latest deadline from Trump to open the Strait of Hormuz. What are you doing in the realm of currencies?
What's the latest deadline? Because wasn't
At 8 p.m. It's 8 p.m. tomorrow. I just said it. And
I don't know, but
you
was
pay
it supposed to be
attention?
today?
It's 8 p.m.
No, he pushed it.
It's 8
Push it.
It
p.m.
was supposed to be
Eastern
this
time
morning sometime.
tomorrow.
Okay.
Yeah. He forgot about the time change.
Like daylight savings time.
Yeah, it's like daylight savings.
Basically.
Yes.
Yeah.
Yes. Okay.
They're all unchanged. Euro, yen. I mean, they're up small.
Yeah. We have some short premium in the euro.
Most of Asia and Europe, I'm so sorry to interrupt,
Yeah,
are closed for a holiday today.
Yeah.
So
Today.
yeah,
That's why he
right,
pushed
yes.
it back to Tuesday.
Yes.
Yeah.
So they get back from their holiday.
You got to
They
make
wanna
sure the
ruin
European
holiday.
markets are.
Yes.
Well, yes.
So they can also get annihilated.
Yes.
Yes.
We're trying to share everything.
Okay,
Yeah,
cool,
We got to
cool.
share the,
Cool,
the,
yeah.
the fun.
What about gold? I'm just staying here on the same story, but what about gold?
Yeah, gold has. It looked more interesting last night, but it's been sitting here at like 47 ish. But I think gold looks interesting here. You've had a big move to the downside. You had volatility expand into that move, which is like kind of contrary to what you'd expect with oil. Typically, you see volatility expand to the upside. I think some of it is obviously the move in bonds. Rates have increased, which kind of drags on gold and to some respect silver as well. But I do think it's interesting here. I'm kind of neutral / slightly long. I've been trading the micro gold futures kind of back and forth. Now I just have the GC options.
Okay.
Slightly.
Volatility in there, 81 IV rank.
Yeah.
Oh, wow.
Yeah.
Yeah.
How is that gold silver ratio?
It's been weird because it hasn't really moved all that much because silver has also gotten killed. It is sitting right now at 63.90, and it's been like here.
I think that's the last time I quoted. It was around the same price. It's been there for the last week or so, maybe even a little bit longer. Sitting right there. Now it's had some movement, $1 one way or the other, but it hasn't had any.
But they're both moving in tandem to like basically the same degree. Which
Yep.
is kind of
Yes. 100%.
change.
In an interesting move, the Commodity Futures Trading Commission says they are suing the states of Arizona, Connecticut, and Illinois. What did we do? Over its ability to exclusively regulate prediction markets. The lawsuits come amid mounting scrutiny of prediction markets. CFTC says, hey, this is our domain. We run this show. We do what we want. But the states, the attorneys general, of the different states are like, hey, this is tantamount to gambling. This is unlawful. And then the CFTC says they have exclusive authority to oversee event contracts through the Commodity Exchange Act.
Well, I was thinking during the Illinois-UConn game, I was like, if Illinois wins, you then can't bet on the national championship game in Illinois. Because Illinois has that rule where you can't bet on any Illinois college team. So
I didn't know that because I'm not a degenerate.
Illinois.
Got to read the fine print, Vanetta.
Yeah, but it Illinois, Northwestern, Loyola, whatever in the tournament again. DePaul, yeah. So you can't bet on any of the games. So that would have been a debacle if you have them in the national championship game. You can't bet on the game.
Oh, okay.
Which is weird. So what I was trying to say was that Illinois maybe has some weird stuff.
Yes. Yeah.
That's why they're trying to stick their finger into this.
Yeah. Okay. Well, that is interesting, and we will see what happened. A group of congressional Democrats last week introduced legislation banning prediction market bets on topics including elections, war, and sports. But we'll see how far that gets. Hey, good news from the jobs report that came out on Friday. It was surprisingly strong, but one part of the tech sector is doing better than expected. Tech job openings rebounded sharply in 2026, challenging the narrative that AI is wiping out engineering roles. Data from TrueUp says that more than 67,000 software engineering job openings are available. That's the highest level in over 3 years.
Wow.
Sounds good. Take that, AI.
So good job.
Yeah, I would not have expected that.
I would not have expected that.
Yeah.
I would not have expected that. Unanimous.
Yeah.
I guess that's good. A lot of these stocks have just gotten killed. All the software stocks are still at lows. The IGV is at 80 and change here. It's gone nowhere. So, still has
Microsoft up $1 this morning.
Microsoft did?
We need a
Oh, there you go.
74.60.
The astronauts stuck in space, their Microsoft went out.
I know,
No way.
It did.
Yeah, it needs like
It did. I think it was their Teams or their I think it was Outlook.
Yeah.
But they had to call Houston, we have a problem, and that problem is Microsoft.
I thought Netflix is going to stream it.
Oh, the Orbit?
Yeah.
Oh, maybe.
I think that's today.
Okay. Yes, they will be. Yeah. Well, they're in space. Yes.
Yeah.
But yes, they're yes.
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 Yes. Yes. Any other plays in like software or chips or anything that you are looking at to start the week? Like cyber or?
Yeah, I've been trading them kind of sparingly, those stocks. I mean, I've got some short premium in Apple. Last week was kind of across the board, and through the last month, high volatility across the board. So you've had opportunities in your Apples, your Amazons, your Metas, all the Mag 7s. I got some positions on in like CRM and CrowdStrike in that realm. IGV, I went straight to there for some trades. IBM. I mean, I got a position on in everything. Some of the memory stocks too. Microsoft.
You're locked and loaded.
I'm locked and loaded. I mean, it was high volatility across the board for sure.
Nice.
Yeah.
Amazon is adding a 3.5% fuel and logistics surcharge for sellers as the Iranian war drives up energy prices. The surcharge will take effect April 17th, Amazon said, according to a notice to sellers. Elevated costs in fuel and logistics have increased the cost of operating across the industry, Amazon wrote. Of course, who do you think will eventually end up paying for the surcharge? Probably you and me.
Yeah, this is you just use a different name for inflation. That's how it doesn't factor into the actual number, right? So you call it a surcharge. It's not inflation, it's a surcharge.
Right.
Okay, so
It's transitory.
it's transitory. It's a surcharge. So 3.5%. This is just like, the skim.
Special compensation.
Yes, like this is not inflation, okay? Definitely not.
What are you guys doing in Amazon?
I got some long delta. Diagonal spread. Call diagonal spread. It's a pig. It's been sitting at 210.
And that's where it sits right now,
Yeah.
up about 30 cents. But you're right, it's gone sideways since that big drop of around, I don't know, from 240 down to around 200 or so. And it's been sitting right here at 210.
Coiling,
since
as
February.
my guy Mikey would say. Coiling.
Whaling.
Yes.
Delta is going to kick off earnings season focused on surging gas prices and the war in Iran. Delta Airlines will kick off the first quarter earnings season on Wednesday as the air carrier's results and forecasts will offer a deeper look into how well U.S. customers and companies can withstand surging oil and fuel prices due to the war in Iran. Delta, along with Levi Strauss and Constellation Brands, will report earnings this week. It'll be interesting.
I'm a big hater of Southwest.
Big hater of
I
something.
used to be a hater because I didn't like the whole.
Now you're a big hater? You know my sister
was-
works there.
I know I was a big hater just because I didn't like the whole you gotta
Line up
Oh,
your seat.
I'm A20.
Oh yeah, you have to write it midnight. Yeah, you have to log in and.
Just let me buy a seat.
They've changed that now. They
I know,
I know, but now it's worse
I know.
because now they're charging for bags and you got to pay to pick your seat. And
Yeah. Well,
they don't even have TVs. They don't have a lounge. You may as well just fly another airline. And
I don't know. They had a 1-day sale. I booked some flights. They were very cheap. I was
I don't
very
like their
surprised.
1-day sales. It's the only place you can go. It's look, if you need to get to Memphis real bad, we can maybe
got
do something
Phoenix.
for you.
I'm flying to Phoenix.
For how much?
They were I think it was $400 round trip.
It doesn't seem like a deal to me,
450.
but I guess in this environment, it is a deal.
Sounds pretty good.
Yeah.
I guess.
Amazing deal.
Yeah.
Yeah.
I mean, on United, they're $900.
Yeah, right.
Because you don't have status on United.
I have status on United.
You don't have a status on United.
Yes, I do.
Doesn't change anything.
Yeah, it doesn't change it.
Love around 37 and a half. Earnings are on the 22nd. Delta Airlines has earnings on the 8th, which
Yes,
is this
Wednesday.
week, I believe, coming out 66 and change, basically unchanged. They're both more on the low end of their range, although Delta's kind of hung in there a lot better than Love.
United also announcing they are going to launch a basic business class. So you could get business, the seat, you pay a little bit less, but you don't get the Polaris lounge. You don't get to go into the lounge, but you still can go into the United lounge and you don't get to pick your seat, but you still get business class. So, yeah. I mean, they're trying it.
Sounds like a conspiracy to me.
Well, no, I mean, if you want to fly business, but you don't want to pay premium, and I don't know, it's like a weird sort of middle ground.
It's like the boat comment. If you're going to buy a boat, you don't worry about the gas.
Yeah.
You're going to fly business, you fly business. You don't fly Johnny business. You know what I mean?
United's trying it,
you just
so-
do the business class.
Don't go against the family, son.
Nikki, I put this story in for you.
Find yourself in this room.
Celsius Holdings has dropped 25% this year. Is this a generational opportunity or is this trying to catch a falling knife? The energy drink company has an averaged annualized return of 47% for the past 10 years, including a 74% return in 2025. But this year, the stock has sputtered down around 25%, hovering near a 52-week low.
You said that this was for me, but really, I need the inside info as I am not currently a Costco card member. Might be in the near future. Who knows?
Yay!
We'll see what happens. But have you had them yet?
I haven't had the Kirkland ones. No, because I still have a bunch of Celsius that I bought the last time I was at Costco. So I still have those in my fridge. So I'm not going to buy new ones till I drink.
But you've
all of
had
those.
them.
No, I never had them.
Oh, you've never had it? Oh.
No, because it's been new. So I because I buy Celsius in bulk quantity, so
Yeah.
I have a lot of
You were going
Celsius.
to be my inside source. I was excited to hear.
I know.
if it was comparable or not. So that'll.
I don't know, but what can you do in CELH?
CELH. I mean,
You've traded
it's not
this
trading at
before.
34. Yeah, we've traded in the past. I haven't traded it recently, so maybe we look at that on the open here.
Earnings are until May. Got a good IV rank of
Sure,
74. It's on its butt.
Hey, I told you it's near 52-week lows.
Yeah.
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 So I like that.
I
Yeah.
might have did something.
Might have done did something.
Hey, you're welcome.
Ooh, can I give you an update on the whole space exploration?
Sure.
They're going to go live at noon.
Oh, okay.
I thought Netflix,
Yeah.
right?
Yeah.
Yeah.
That's awesome.
According to the NASA site. I don't.
Okay, great.
And my Taiwanese sources, who's celebrating the wrong Easter next week. That's Dino.
Greek Easter.
Greek Easter.
Fair enough.
I don't know why we want to offend people of Greek nationality, but that's a choice.
It's a playful argument that we have.
That's bat
for
at
somebody
Tasty
who's
Live.
not religious.
It's bat at Tasty Live. Look, dude, I wouldn't want a Greek curse put on me. So
They are.
like
they
I'm just
are
saying, like you
addictive.
put that out there. So
And me without my
me
eye.
for one, like me to all the Greek people, I say
Opa.
You need a horn. You need a horn to keep it.
I need-
Yeah.
I
I
need something.
got.
I'm just saying.
I'll give you
Yes,
one. Keep
yes.
that.
No, you
Dino's
already
funny.
put it out there. There's no taking it back. In-N-Out, the beloved burger chain, is continuing its steady nationwide expansion with 4 new stores across 4 states. I've never been to an In-N-Out, but
Really?
In-N-Out, I don't eat hamburgers.
Oh, yeah,
I eat
true.
chicken and fish. I do eat meat. But In-N-Out is opening more locations in Madison, Tennessee, St. George, Utah, and Vancouver, Washington, and then another one in Vegas. So
In Georgia, I was just there.
St. George, yeah, it's great.
Yeah.
You
Why
tell-
don't we get one? We're too far in the middle.
Yeah.
Yeah.
Yeah. I haven't
There's a
been to one in
Whataburger.
years. I have to go back.
There's a Whataburger in Orland Park.
Yeah.
I don't know. I don't eat burgers.
What
Yeah.
a burger.
Okay.
Overrated. I don't know why they like. It's just
But do you like In-N-Out? Is not overrated?
Oh,
Does it live up to
yeah.
the hype?
in and out.
Okay.
It slaps.
Okay.
As the kids would say.
It slaps. Wow.
Slaps.
One day with a 16-year-old, one night with a 16-year-old. Look at you picking up all the lingo.
Yeah, here's my viral video of the day. Go ahead.
Yeah.
Yeah, here it is. Yeah, you're
Good.
welcome.
Let's do it.
Oh, now it's broken.
Oh, that's you. I can tell by the wheels.
This is very impressive. I don't know how he can see, but somebody call the doctor because the Easter Bunny is sick.
Is this like Bam Margera on it?
I don't know who this is. I couldn't do this with full vision.
Nice work.
I know. I just like his little scrunchie holding his ears.
Very nice.
Yeah,
Very nice. Bunny's got hops.
Yeah.
You got one of the bunny heads.
Yes, yes,
and I
yes.
put it on, and it was very hard to see.
It
in
was-
general,
it
and I
is.
was not moving on a small little.
Yeah, we did that.
Nikki, did you get an Easter basket? Oh no, I'm so sorry.
Pseudo. You got some chocolates.
No, the Easter bunny.
Oh my God.
Oh,
you are
no.
you didn't even bring it home with you. You
Okay,
Oh, it's
Yeah.
okay.
all right.
the 2-year-old got the Easter basket. The 32-year-old, we'll just take some liberties with the age there, did not get an
It's
Easter.
because he doesn't know how old I am.
You're 36.
I will be 36.
We'll be 36. Yeah, you're born even.
Good job.
Yes, thank you.
Cats in the cradle and the silver. Hey, what's going up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got a little recap.
Little
daily
recap, the
And the
confirm and
confirm and
send after
send.
that. We'll be
Yeah.
good with an option jive. We'll
Yeah,
be
we
back
got
in
a
90
little bit of
seconds.
everything.
Even the S&Ps are up 8. NASDAQ, the leader in the clubhouse, up 103. Russell and the Dow, just waking up, basically unchanged. Dow down 20. We'll be back 90 seconds with Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a little look back on what happened last week in a shortened week and a long weekend. Go.
Cool. Let's do it.
All right, I'm ready. High performance, April 2nd.
Yeah, so I mean, Thursday was kind of a crazy day.
Thursday was a crazy day.
It was I think it was the first up close on a Thursday in 9 weeks.
I did not know that. Good statistic.
Because I remember we had.
But is it Synthetic Friday?
Yes.
It doesn't count.
Yes.
Yeah.
But the MO has been, I think for the past 5 weeks, we've had up open, Monday being the high of the week, basically drifting down the entire week. I think we've had 9 straight weeks of Thursday, Friday closing lower than first half of the week.
Got it.
I believe.
Do you know what MO stands for?
MO? No.
I think it's modus operandi, but I don't know. I could be wrong. I should never said it. Let me see.
Yeah. I don't know. I think I'm selling that.
Let me see. Modus operandi.
There you go.
Most commonly stands for the Latin phrase.
Yeah, you're Latin.
Modus.
You're so cultured.
Can't you tell?
Yeah, you're so cultured. It's amazing.
There you go. Method of operation. There you go. Operandi.
Let's take a look here.
I mean, you're going to use it. You should know what it means.
All right, that's good.
All right, now you know. You learned something today.
On the index level, everything basically closed unchanged, which doesn't tell the whole story because we had some whippy two-sided action. If you remember, in the morning we were down 80, 90.
Yeah.
And at one point, or maybe not that much.
When the bat called the low, yeah, go ahead. And then you traded
You want a high five? There's no high fives in trading. We were at the lows. had a rally all the way. The E-minis were up like 20 at one point, at like
Yeah,
9:15-ish.
They closed down small in the day, I believe, right? Didn't they?
No, they were up tiny.
Yeah,
it was basically unchanged
basically
on the day. But we had an 80 or 90 point face ripper.
Yes.
After the first hour of the open, which was
we've stopped multiple times right around here at around 66.50 or so.
Yeah.
We're 66.30 right now. The overnight highs.
On the Mag 7 level, you had Microsoft, Nvidia, Apple strongest of the group. Everything else was kind of a little bit weak. Tesla has been the weakest of the group. I saw some like downgrades this morning, even though stock's up $4 and change here. SpaceX IPO coming. Who knows how that's going to kind of play out? You got to figure there's got to be a little bit of a sell Tesla, buy SpaceX, right?
I would think. I don't know. I would think.
Yeah.
I mean, I don't know. I was having this conversation with somebody else the other day. He thinks SpaceX is going to be a face ripper to the upside. I'm like, I don't know about this. I mean, I don't know. It's going to come out. He was really calling to ask when I thought options were going to come out on SpaceX. And I think it'll come out
next day.
Immediately, if not sooner, was my answer. I agree with you.
Yeah.
No longer that 7-day wait period or anything else like that.
They're
it'd be
already
interesting
fast tracking it into the S&P 500.
Changing the rules to get it in, I believe. Yeah. I mean, so we'll see what the volatility is in there. I don't want to play the guessing game. I don't hate it, but I mean, it's fun to guess and be right, but it's just a guess. Yeah. I don't know. We'll see. We'll see what the implied volatility is. I think it's actually going to come out low and go higher. That's my guess on volatility, but we'll see. It's interesting.
Yeah, it's going to be an interesting one. On the sector level, you had metal and mining stocks getting a nice little bid. Tech as well. I mean, across the board, it was a pretty muted day despite the two-sided action that we had there. Volatilities across the board were higher in the morning, ended up at 25-ish, so middle of the range. As you'll see in our SPX research today, it's a really good one. Look back at some of the volatility that we've seen. But it was kind of a nothing day. It was a nothing end to the week. Into a long weekend. It was kind of
wasn't what you expected when you went to bed and woke up Wednesday into Thursday.
You had the deadline coming.
That's correct.
Today, which I guess is now tomorrow, which we don't know if it was switched or changed or daylight savings time pushed it forward. Something Easter, maybe Passover. We're not sure. But you had all that kind of fear going into the weekend of long weekend. Something that happened here. An extended period of time that the markets were closed. You talked about the oil markets being closed, for an extra day, basically. E-minis closed at 8:15 in the morning on Friday, which is also really weird occurrence because usually they go until noon. And you had all the jobs report stuff that came out. They kind of just got. I don't know. I'm a little surprised today is kind of a nothing day, but I guess maybe some of that is due to. Europe being closed too.
We've been opening lower and catching a bid every day without
but that's been the Monday MO.
That has been the Monday MO.
Except for last week. Last week they finally broke it.
And if you go back 25 years, it'll be random.
Thursday they broke it too. Thursday, when there's pattern, there's no patterns.
Yes.
Yeah, you start seeing it and everybody starts seeing it. And then
we got a problem.
And then you don't get the self-fulfilling prophecy, right? You can't just hold on to the same thing forever. That's
true.
Kind of how it's felt.
Yeah.
On the upside, some of the momentum names here, you got Light, Sienna, Sats, which is a potential takeover with Amazon. So they've been kind of linked to Amazon there. Intel had a wild move on Thursday. It was down like $2 or $3 pre-market, rallied the entire session. Coherent is in there. It's one of the ones that was just
Intel had a huge day. Thursday. Yeah.
It was a
4
huge
point. Yeah, range at least. Yeah. Close
GLW in there. You got kind of
it's up another $1 this morning too.
The secondary AI names kind of catching a bid. These have been kind of the momentum names. For the last month or so.
Saw something, and I have it here in my notes.
Oh, you're taking notes now.
Yeah, about the Mag 7 this year. I think Mag 7, are down about 5% for NVIDIA, 23% for Microsoft, and underperforming the average stocks in the S&P, which are actually up 1%. So you really have the Mag 7, which has been the leader. Everybody talked about how those 7, the rest of the market is not as good as what the Mag 7 is seeing. You actually got the opposite now, but you don't hear any of that.
No.
Kind of, we're actually doing okay kind of thing compared to if the Mag 7 actually catch a bid.
Yeah.
Anyway, take it for what it's worth.
To the downside, Tesla #1. Kind of a shock there. GE. You got GM in there. A couple of random names. Carnival is in there. Ares. Some of the credit. Apollo. Blackstone. Some of those names kind of taking it on the chin. There's been. I saw some redemption at Blue Owl was like $4 billion or some crazy number. That's it's been a momentum move to the downside as well here with stocks. And then when you look at just the heat map across the board, it was a pretty mixed bag here. You had energy kind of on the upper end. Tech was getting a little bit of a bid into the end of the day. Very weak on the open. You have some of the names like, your Metas that has been bucking the trend here, just goes down basically every day. So definitely been kind of a pick-em market, traders market here for most of
Tesla down to the 5% or so. That one was that's been weak in there. It's always one of the top leaders. Actually, Ivy Rank is kind of growing in there. It is up $4 this morning, but the market's up a little bit so far this morning. Earnings are April 28th after April expiration of April 17th, but before obviously May expiration.
Yeah. Very good.
Yeah. Nice.
That's it.
You ready to take a quick 90-second break, and then we can get to a little bit of confirm and send, where we go to viewer emails and talk about what questions they have. Which, if they have the questions writing in, somebody else is going to have that question, so we'll answer it for everyone. We'll be back. 90 seconds is Tasty Live. Even the S&P is trading near their highs of the session, where we've been on the show, up 11.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, Dial in the DTE and stack the legs. See what survives. Check out Tasty Trade today.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on Monday, April 6th. Tax time, April 15th, if you're interested.
Ooh. Hate tax time.
Get your ducks in order.
I know. What do you think here? I mean, nothing has happened. This has been kind of just a...
Yeah. Volatility...
E-minis have gone nowhere.
They've gone nowhere.
Nowhere.
Nowhere. And volatility's gone nowhere with big moves intraday too. Yeah. If you take a look at this, we kind of have big movement intraday and end where we closed the day before. E-mini S&Ps are up 7 and change. This 6650 number seems to be a little bit of resistance here. At least it has been for the last 3 days. You got the NASDAQ up 90 and change. This 24.3 number seems to be a little bit of a problem too. So I don't know. We're right here. I would imagine we kind of fail from here again, at least for the short term.
Yeah, volatility isn't really moving too. Mm-hmm. It'll be interesting to see where oil volatility opens.
I think it is an oil market, and you've got oil trading 110 and change. You have to be in all the way up to about 115 and a half. But oil's been steadily going higher here. We haven't had, downward movement.
We're up 10% on Thursday.
Yeah, right.
In oil.
Yeah.
The market unchanged, which is very weird.
Yep.
So, I don't know. We'll see. Confirm and send. You want to do it?
I'm ready. Let's go.
Cool.
Monday, April 6th. First one, please. It looks like I can buy a June deep in the money $10 wide spread in SPY for less than $10. If I'm worried about the next couple of months, but don't want to sit in cash, is this a trade that makes sense?
I guess. I mean, it's selling a put spread. So it's buying an in the money call spread is the same as selling an out of the money put spread. So
on the same strikes,
on the same
call parity. If this is trading for $8, that's going to trade for $2.
Yeah, I think if the question is, I don't want to be in cash. I also don't want as much of the short term risk. Should I go out to June? The answer to that question is sure. I don't hate that idea. I think it's a little bit too much time for me personally. But if that helps you sleep at night a little bit, go for it. There's nothing to the reason this trades for less than $10 is because it can only go to $10. Yeah, time has value to it.
Time has value, sorry.
And so, sure, I don't hate this idea. It's not my cup of tea, but yeah, go for it.
I don't hate it either. You do have a dividend that'll come in June, depending on...
Even more reason to just do the put side.
Well, even more reason to do the put side was what I was going to say. Plus, you got tighter markets on the put side. Like Nick was saying, if you're long a call spread, same strikes. It's the same thing as being short a put spread. So if the call spread's trading for $8, just call the box. This put spread's going to be trading for $2. As a matter of fact, you might see that put spread trading for, $1.80 or something like that, or $2.20. Give you a better idea on what this call spread's real value is, because markets can be wide on deeper in the money.
But there's no reason to do that.
I have no problem with this. I would just put the money in BIL or something like that. There's no commission, or SGov or something like that. If you don't want to sit in cash and get a small amount of interest, you can make a lot more with this.
Yeah.
Like we said, time has risk, and value. So
yeah,
not a bad thing to do, especially with a small portion of your money. If that's what you want to do, go right ahead.
Yeah.
Next one, please.
So just wondering, should the delta theta ratio remain the same in a declining market, or if you feel the market will lose momentum? It seems delta expands faster than theta expands in a down move. So the ratio gets messed up. What might a better ratio look like in that type of situation?
I mean, I don't know, because there's a lot of subjectivity here, but you certainly can play and it would have worked out nicely for you, and maybe it'll work out nicely in the future. I have no idea because I can't see the future, but any kind of sell-off of any magnitude, let's say in the last, in a week or so in the E-mini S&Ps, you've got an expected move of, 150 50 points or so. So if you get a move of around 200 handles and you want to get and start leaning to the downside, and you lean a little bit less short or even long, God forbid, you certainly should and probably could if the market's been doing what it's been doing in the past. And if we rally, hey, listen, this is called trading. You do it all the time. We rally a little bit. You take off some short put spreads that you have on. You lean a little bit, more short. We go lower. You take off some call spreads you have, whether it be an oil or any other product. I mean, it's just called trading. I mean, I have no problem with this.
Yeah, I mean, the level of volatility is also going to contribute to the swing in these numbers. I mean, you're not seeing 10-point down moves, you're seeing 100-point down moves. And so things get big very quickly. Your theta number is going to increase very, very fast as well. So I think to your point, you've got to be a little bit, you got to have some flexibility to your positioning. And if you don't, just define the risk. And these metrics will not move all that much. You have a 20-point wide spread in SPY versus a naked put. The change in delta is basically nothing, whereas the put is going to, increase 10, 20, 30 deltas, depending on how close to at the money it is. The spread doesn't move if you're 40 days out in time. So if you're, again, it kind of goes to the first question. If you're worried about more choppiness, big moves to the downside, just define the risk, and it allows you to participate in what we're doing, but, in a defined risk way.
Good. Ooh, when markets open on Sunday night and gap lower or higher. Okay, so this Sunday, yesterday, lower. They were lower by about 45 handles or so.
Yeah.
Does your research show anything with respect to whether or not that gap will close?
I don't know offhand. I mean, buy the rumor, sell the news type thing. On the flip side of that would be buying when they're down on Sunday.
Yeah.
That has worked into Mondays over the last.
I don't know if it's going to continue, but it has.
Last week it didn't continue.
Last week it did
4 weeks or 5 weeks prior to that, the low was the Sunday open or right around there. So I don't know. Sure, go for it. And you start small and you can always add to it.
It works until it doesn't anymore. Like you said earlier today, if you think you're seeing a pattern, you probably are looking too closely at something because it's just not there. It's random. In a short period of time, you can say.
If you see the pattern, it's probably too late.
That is true.
The pattern's already played out.
Yep.
You got the 5 weeks in a row where it worked. Mm-hmm. In the 6th week, everybody sees it.
Or it always seems like when you do it, it doesn't work.
Yes.
And then eventually it works.
Yes.
Because the world is against you.
Of course. The invisible hand is always
the invisible hand.
Yes.
That's correct.
I got into a debate over the weekend with some family, of course, because it's, holiday season. So you got to, be.
Because there was alcohol involved.
Yeah, alcohol and fighting with family at the dinner table. It's perfect. It's a national pastime. I'm hoping you can settle it. Okay. Is a strong dollar good or bad for stocks?
Yep. I mean,
it's the last question. It's sometimes, if you're thinking about the last 5 weeks, the Sunday gap down the open has been the best buy you could have.
Yes.
You got to sell it on Tuesday, though, because Wednesday, Thursday, Friday have reversed the entire move. So there's your pattern, but it's hard.
Subject to change.
Yeah.
Yeah, I mean, I think I think more importantly here, no matter what the dollar does, the market does, selling some volatility skew, whether it be to the downside in products like SPY and Qs and /ES, and selling some upside skew like in oil and other products like that, some of the NASDAQ stocks has worked.
Yeah.
I mean, it's been a two-sided action market, and you've gotten a little bit of pullbacks and rallies on both sides where you've had time to manage positions. I guess what we're trying to say here, volatility at 24 and change allows you to do just about anything you want to do with volatility, and it gives you a time to manage a winner. You're getting that when you have two-sided action, which is what we've had. Let's take a quick 90-second break and come back. We got more Tasty Live coming up after this. We've got an option jive. Let's take a quick look at the market. Even the S&Ps are up about 3 handles. They've just sold off a little bit. NASDAQ up 74, Russell down 2, Dow down 51, volatility up by 6 cents, 24.5. Bonds actually catching a small little bid here, 113 1.25, up 7 ticks. I think they were trading around 113.14 the last time we talked about them. Bitcoin, which we haven't spoke about at all, is up around 4%, $2,500 to 69 and change. You can see here it was over 70,000. About $1,000 higher a moment ago. Ethereum 2150 was also up to about 21.8. It is up around 4%, a little bit more. Oil 110 and change, doesn't tell the whole story there. Got up to 115 and change, a new high, down to around 109, sitting at 110 and change. Gold actually caught a little bit of a bid earlier. It's still up almost 18 points here, $18. Got as high as $47.33, about $40 higher than where it is right now. Silver basically unchanged, up around 8.5 cents. Net gas 2.86. I mentioned net gas because usually you have net gas and oil. Maybe they run slower than each other, but they usually catch a bid. You've got oil making this, higher highs, and you've got net gas making lower lows. Kind of interesting trade there. I think net gas may be in play for a little bit of long delta. We'll see.
You and Vecchio.
Oh, does he believe the same thing?
He put me in an 80-day call spread in Natty Gas.
80 days, I hope.
Macro. It's the macro. Come on.
We're gonna be back in 90 seconds. We got more. Really, the macro, you know what that is? That's just giving you time to be right.
Yeah, that's okay.
We'll take a quick 90-second break and come back. We got E-mini S&Ps unchanged. We've got more Tasty Live after this. Option Jive next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's option.
Nicky, we are back, my son, and you know what that means. Time for a little bit more Tasty Live with E-mini S&Ps.
We are bat. It sounded like we are bat.
Oh, we are. Oh,
we are bats.
We are bats, but we're back.
We're back.
Bats.
I thought that was like a.
No, I didn't do that. I'm not that clever.
Thing.
No.
Even though that's not Freudian, but either way.
I'm just a mumble.
Yeah. Go on. Sorry.
Yeah.
Yeah.
Oh well.
Sorry for interrupting.
It's okay. We got an option jive. E-mini S&P is basically unchanged. Haven't done anything in the 90-ish seconds since
oil kind of moving here. Volatility futures up on this session.
Volatility
and bonds just moved pretty decently, like 10 ticks ish.
Like Vanetta says to you, don't you listen to me when I spoke the last time? I said, yeah, the only thing that moved really was bonds. Option jive.
A little research corner, recap of last week. A short week. Still a lot happening, though. Wall Street finished its worst quarter in 4 years. Is that ominous to you?
Ominous?
Yeah.
No, encouraging.
I feel like every year is kind of rough in the start.
Seems that way. We get the kind of ramp up into the end of the year and then sell off the first thing, and you think that
it's over.
It's different this time, and yeah.
Scare the children a little bit.
Yeah.
That's what it kind of felt like. Equities saw their first meaningful rebound after more than a month of selling. Crude oil closed above 110. That was the first time since 2022. That was on Thursday last week. The jobs report crushed expectations, I guess, until it gets revised down. 178K versus 65K, which was the forecast. So I guess the job market isn't as bad as everybody says, at least not right at this moment until things change. This week we have FOMC, middle of the week. You got core PCE, durable goods, CPI, and core CPI. I've been told by my macro boys, none of these matter anymore.
Of course not, because it doesn't fit the narrative.
Not now. Not yet. Maybe in the future. So we've had some choppiness to the markets, and we have a great SPX segment coming up later in the session here, just kind of showing the massive swings that we've had. But certainly some volatility across the board. Last week was kind of the first up week that we've had in quite some time. 4 green bars. It's kind of nice.
Very nice,
Shocking.
actually, when you think about it.
Yeah, 4%, 3%. It was a strong week there across the board. After what was a week. So we've had kind of the choppiness for the last month or two.
Yes.
Into this week.
Does that could go back one slide? I'm so sorry. Does that surprise you at all that you got a little bit of, down 2-3%,
No.
up 3-4%?
It kind of feels like we've come to grips with the situation.
The volatility.
The market.
This is showing volatility, right? I mean, this is what we're talking about, two-sided market.
Yes.
And that's all this is displaying here, showing you. I don't think you can look at it, anything. If you look at it from a 2-week point of view, the Russell overperformed with the Dow overperforming a little bit to the other two.
If you went to
we're up
sleep 2 weeks
1%
ago,
over the last 2 weeks.
Yeah, we've gone basically zero.
Yeah,
It's
right.
basically a zero because you have to have an extra move to the upside to account for the.
That's correct.
The percentages from lower prices have to be higher than the percentages down.
This is showing you being nimble is what's been working.
Yes, 100%.
More than picking direction. You can actually be wrong on direction, give yourself a little bit of time to be right with the strategy and get a chance to manage a winner. That's what this is really showing.
100%.
Very good.
For this week, volatility has come in a little bit. We had an average VIX of 26 over the last month or so, with a high at 32, I think was our high print, 31 and change. We're currently at a 25 VIX, still elevated, but certainly coming in a little bit, as you can see from the expected move here. $152 for the week. Last week we had $182 range with a short week. Tells you how high volatility is.
That's correct. That's what that's showing you there too.
In terms of IV ranks, so you have IV ranks coming in a little bit over the last 5 or 6 days. Still very, very high. Again, you see crude, gold, and silver too. We don't have silver on this list, but there's been some added volatility in those parts of the market here versus equities, which have remained high but are not near the high.
And you can see crude here, volatility basically staying unchanged because look at what crude's been doing. I mean, like we talked about a little bit earlier, higher highs every day, much to my chagrin. So I'm short some upside calls in oil. So I need a little bit lower.
Yeah.
Next one, please.
Biggest movers for the week, Intel on there. You got like some of the momentum stuff like your Light, SanDisk, Seagate. Those are kind of some of the momentum plays to the upside in the AI space. You also have NEM in there. So Newmont Gold had a nice little bounce from like 4,300 to 47-ish is kind of the...
Yeah. And Newmont's been kind of moving with, which you can use it as a proxy for gold, right? Newmont mining for gold.
Yeah.
But sometimes the equities
Miners are a little slower.
Right?
Yeah. So you've had a bounce in those names. GDX.
Is App loving a momentum stock anymore? I mean, it's kind of on its butt, 380 and change.
I guess so.
Yeah.
I mean, it's kind of moved with Meta. I mean, it's an ad platform. So, you get the huge move in Meta. It spills over into the rest of them. I think that's what you're seeing on the downside here, along with some of the oil names, which gave up some of their gains, XOM, CVX, despite crude getting to new highs, we're not getting to new highs on some of these stocks. XOM trading here around 160. It's given up about 10, 15 points of upside here in the last week or so. So a little bit of a rotation out of the energy names back into kind of the Momo names to the upside here. Memory, chip names, stuff like that.
Next one, please.
So overall in March, the biggest movers, you have a bunch of the oil names have had huge upside. You have Dow Chemical in there as well. So some of the fertilizer stocks, CF, Mosaic, some of the other ones that have kind of participated in that upside move. The kind of secondary supply bottleneck other than oil has been those fertilizer names. On the downside, a kind of a mixed bag here. You have Love, the airlines in general have been super weak. SMCI, just an outright fraud and potential CCP company. You didn't like that joke?
I mean, this is all oil related, I believe.
A lot of them, yes. And then on the downside, you had Ulta, which had a big move after earnings. That was one of the later earnings reports. So big moves across the board. I mean, you should expect that with high volatility.
Expect the unexpected. It's not changing.
Crude up 66% since March and 94% year to date. Huge move in crude oil. April 2nd's 11% rally ranks as the 17th largest daily gain in 20 years. It's the top 0.3% of occurrences there. You're talking about a 4-5 standard deviation type move there in crude oil. It was a huge move. I mean, we're sitting here at highs. It's been kind of a shock. I don't think a lot of people had up market and crude at 115 in their bingo card.
I didn't.
That is not usually what you see. You don't see that correlation.
No, maybe I got the market okay, but I did not get oil right.
Yeah.
Not got it right.
Yeah.
I get a lot of emails. So it was so obvious too that oil was going higher.
Yeah, but the market side of it, the equity side was not.
No.
I don't think you have that correlation.
I agree with you.
So crude at 112 ranks in the 99th percentile over the past decade. Only in 2008 and 2022 was it higher. So March's 51.3% gain was the second largest monthly move ever, behind only the COVID rebound. The 2022 Russia-Ukraine spike produced a 17% move. We had a big move on the Israel and Gaza type situation, the 12-day war. That was a big move as well. Couple days over 100. I mean, you got 140 days over 100 there in 08. Peak was 147. So inflation adjusted, that would be 200, right?
Inflation adjusted, boomer adjusted, you get to 350 in no time.
So we're basically cheap right now. Oil's cheap.
Cheap
is essentially what we're saying.
Cheap.
Yeah, cheap. Inflation adjusted. But generally speaking, I mean, the moves in oil have been historic. It's been a wild time here.
Yes. It'll be interesting to see if all these fuel chargers and everything else, when they go away.
Never. Not going into the summer months. You got the travel season.
Summer blend. They'll just mold it into the summer blend, and then you'll get used to it. It'll
the oil
slowly
that you're
come
pumping
down.
In May is actually coming from right now, so the prices stay.
Right.
Yeah, the prices stay. Tuesday's 2.91% move was the fifth largest up day since 2024. Other large moves included the November 2024 election rally and April 2025 tariff-driven volatility. Big moves across the board last week. Realized volatility last week was 1.4x the 5-year average. So you had some realized volatility as well as implied volatility. Implied volatility has remained high. Despite the craziness we saw last week, realized volatility in general was actually less than implied, which just tells you everything you need to know about volatility. Volatility, even when it gets really high and you see these huge moves in both directions, it's generally overstated, even on those tail type moves. What you feel is a tail type move, it really isn't. Like, you only get so many opportunity or so many occurrences where the move is that much greater than implied.
You're going to beg for 24% implied volatility in someday in the very near future.
March was the 7th worst month since 2021.
Oh, no.
5% to the downside versus 5.75% last March. So March has been a weak month in general.
And I got my buddy Mark's birthday wrong in March. So
Mark.
did a lot of bad things.
Change your birthday.
Here's your nat gas.
Yeah, there you go. Big move in natty gas. We had, the winter kind of, did we have what did they call it? The winter storm.
Solstice? What do you want?
But that was the big move in like, January was all the.
More importantly, can you trade UNG?
No, can't.
Getting smaller for nat gas.
UNG stink.
Yeah, you really can't. You look at the market, say you got one strike to trade around $11 or so. Horrible.
When you have
you got to go into
the Saudi
NG,
LNG
right?
facility getting knocked offline, 16%, something like that. Markets don't care.
Markets don't care. So
not in natty gas.
So if you were going to trade nat gas, you would do it in NG?
I would.
Yeah, I tend to agree with you. Probably some sort of, even the S&P is unchanged. It was just up 8 a moment ago.
Done much of nothing.
Yes.
Think it's an inside day today? I don't know how you have the inside day with oil like this. Yeah. Now you got oil up 30 cents. I feel like that's market oil up, that relationship has to break. Last week was weird.
Didn't you say the president's speaking soon or something?
I think you had 1 Eastern.
1 Eastern, noon, our time?
Yeah.
Maybe we just do nothing until then. Volatility stays kind of bid till then, kind of freaks you out on both sides.
Makes sense. That's probably why you got oil kind of bid here before the open, just because you have the complete unknown of what the president might say today. Complete unknown.
It really is a complete unknown.
We could go anywhere. He could come out in an Easter bunny costume, and
has.
Didn't he do that one year?
I don't know.
What was it? Well, I think it was Halloween where he had the candy bar where he put the minions. The kid.
Yeah, he didn't give it to him right away. Put it on his head or something. He
united it with like a chocolate bar. He placed it on top of it.
I mean, if you can look at it with rose-colored glasses, you could smile at it. But sometimes you just look at it, you shake your head like, no, really? That was
something.
Got to do that. Really got to say it like that.
That was a classic. Earnings coming up. You got a couple names. I mean, Delta is usually the first name.
Horrible.
And then next week, I think, or is next week the 14th? God, this month.
Oh, yeah.
Flying by.
You're there.
Yeah. Next week, a lot of the banking stocks start the next leg of earnings season. We got Delta this week. That's really the only name on the docket here.
Very good.
Yes.
Even the S&P's unchanged. NASDAQ up 67. I'm going to call that unchanged also because I'm going to call the Russell down 4 unchanged and the Dow down 80 unchanged. Volatility up 1 is unchanged. Bonds are up 4 ticks. Bitcoin hanging on to its $2,000 rally right now, trading 69.5. Oil back to 112. It was 110 and change a moment ago, so catching a little bit of a bid in oil, although it's only.
This is a weird one today.
Yes.
Weird one.
Weird one.
Bitcoin, why is Bitcoin rallying?
It hasn't participated in any kind of movement to the upside. Maybe that's why. I mean, just a little bit of a
dead cat bounce.
We'll be back in 90 seconds. Jinx. We got more Tasty Live with the opening bell next.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell imminent in about 2.5 minutes. Let's take a look at this market, which I've been quoting for most of the day and kind of getting tired of it because it really hasn't moved.
Nothing.
Even the S&P's up 3, although last night, when you were at my house, by the way, it was really nice to see you there.
Thank you for the invite.
For Easter, even the S&P's opened down 45 or so. We were kind of...
you did say, I'm surprised they're not up.
I did say. We were a little bit on the opposite side of the market.
I was like, I thought maybe give it up because Thursday felt weird. You had oil, new highs. Mm-hmm. Market was strong. It was a holiday, so it felt like it was just like kind of like meh.
Yeah. Meh.
I didn't think it would hold.
NASDAQ up 60, Russell down 2, Dow down 60. Volatility last night was closer to 25.75 near its highs. It's 24.45 off of its lows, unchanged basically, perfectly priced. Bonds are up 3 ticks. Bitcoin hanging in up 2,500 to 69 and change. And oil 112.31. Oil catching a little bit of a bid here, basically in the middle of its range from last night. But the high end, very high end of, actually it would be a closing high if we were to close here.
Right here for oil? Yeah.
For oil.
Yeah.
Right. So even though it says oil up 80 cents, that would be a new closing high if we were able to keep these gains here today. Interesting kind of market here with a lot of push and pull.
Yeah.
Present speaking, you think at noon Central. Gold up $16. Silver down small, basically unchanged. Nat gas catching a little bit of a bid here about
a nothing day would be painful for everybody. Not us. It would be good for us, but I feel
a nothing
like
day, no market movement. It would be certainly a breather from what we've been experiencing.
It'd be great. It'd be great. But I
need breather days sometimes.
Yeah.
It's not,
I feel like that's not where most people are like doom and gloom or face ripper. You know, they're like, there's nobody in the middle, like maybe
it hasn't
shop
worked.
around. Yeah.
I mean, for the day, you know, if you look at a 48-hour period or a 72-hour period, you know, it's been profitable to sell rallies. It's been profitable to buy dips just about in anything, even in oil, which is near its highs.
For sure.
Anyway, there is your opening bell, my son. As we come here, even the S&Ps catch a little bit of a bid up around 8 or so. Let's see some of the buckers. One I see right here off the board, which really hurts me to no end.
Oh, no.
Microsoft down $1. Now it's down 60 cents or so. Lilly down around 5. CRWV, CoreWeave down $1 or so. I blame you on that one. Boeing down around 45 cents.
How do I catch the flat?
Small movers to the downside. Upside, this AAOI, my buddy Peter's trading it like a champ, by the way. Options in there I think are untradeable. But if you could be selective maybe with stock, it's certainly a mover in there. You can see here over the last couple of days going from around 85 to about where it is right now, although it's been higher, obviously. But option markets are horrific. MU up $7. That's a big move for MU. Your beloved Meta up $5 and change. Maybe AppLovin will be following in suit. It is up 12. AppLovin looked unchanged. Matter of fact, it opened around 391. It's 400 now, so it's rallied $9 in a minute and 20 seconds. Meta up 5, Coin up around 4, Netflix up around 3, Reddit up around 2. Even the S&P is up 10. That's about as high as I've seen them while we've been on the show. They've obviously been up higher than that because they trade up to 66.50, which we've seemed to have fallen from numerous times. What do you think here, son, as we look across the board? I heard no dings out of you.
Yeah, no,
You are dingless.
I am dingless. I am just putting orders in on some positions like a CrowdStrike 1x2 diagonal spread, like a crab trade. I put an order in to close that. I have a hood strangle I'm trying to take, $100 out of or something like that.
Yeah.
I'm just kind of putting in orders. On
Hood's
Thursday,
kind of fallen from grace, hasn't it? I mean, going sideways and lower.
It's a pig.
It's lost 50% off of its highs.
Yeah.
Of $1.40
I think I should probably close out of some of these. My short position is the Russell, and I'm buying back some puts here that I sold out last week for. I've been kind of scalping them around the diagonal spread. I have a long 250 out in May, and I've been trading the 235s. I sold them originally, and then I bought them back at $1.52. I sold them out again at $3, and now I'm trying to buy them back here at like $1.20-ish.
Okay, I have no problem with that.
Small short delta getting closed on some of these puts, but just kind of trading around it.
And that's what you're supposed to do, right?
Yeah. I'm trying.
Okay. NASDAQ up 100 here and change. That's about a half a percentage point as even the S&P's up 5, basically unchanged. Russell unchanged, up 90 cents. And the Dow, I'm going to call it.
Oh, there's my hood. My hood.
Oh, look at you.
Yeah.
Getting filled at 382 in hood. What's volatility done in hood over the last couple of days? Catching a little bit of a bid, actually. It's got earnings April 28th. That's the culprit there.
I had some diagonals in Netflix. I'm long the 95 in June and short the April 100. I just closed out a half for a couple bucks. I mean, I did them at like 490. And so I just closed one of them at 615.
Nice job out of you.
$100.
Good job if you can get it.
Yeah.
I like it. You'll see all that's come through on the follow page here. These are all closing orders so far this morning. haven't put on a opening order yet. Even the S&P is up 12.
Yeah, is anything popping out to you?
No, not really. Volatility down 18 cents, 24.30. That's the first time it's been down since we've been on the show. Costco down $2, but it is 1,012. Costco's been a leader in the clubhouse.
Yeah, it's been bucking the trend there.
It certainly has. Gold down small. That's GLD. With gold up $11. Remember, gold trades during the weekend. The rest of GLD does not.
Yeah.
What else you're looking at here?
Nothing. It's a nothing day today.
Yeah.
What can we get into? You want to do something in Celsius? That was one that I wrote down as a Veneta play. Stock up a little bit.
Yes.
Dollar and change here. I just saw some junky. I mean, the markets kind of stink here too. Let's see if I can.
Markets do stink. Even the S&P is up 16 right now. Nasdaq up 140 or so. Russell up 8. And the Dow up 46, all four indices catching a little bit of a bid here. Even the S&P is back to 66.40 or so, about $10 off of where they have kind of fallen. It'd be interesting if we're sitting here at noon in the market, meaning right at this, I don't know.
Precipice.
That's the word I was looking for.
There
I just
you
didn't know
go.
how to say it.
Yep.
That was exactly, I had it on my lips. I don't know if you could read my lips that weren't moving. But
I knew. I knew exactly what you were looking for.
Awesome.
What else do I have here? Do I take off like?
Say it again.
I have a silver position that I can close out of here for a couple bucks.
Okay.
It's just
I think I'd be looking to close positions if I had, if I was looking for things to do.
I'll take off
that's
half.
Probably the way to do it.
Yeah. I took off half of that. So I did these at 590. I closed half of it at 476. So
How do you feel? How do you feel about closing?
A 1x2. Short one put to 2 calls in silver, the 58.85 in SLV. How do I feel about it?
Even S&P's unchanged now, just sold up 15. How do you feel about closing half of a position?
I feel good.
Do you?
It makes me feel good.
It never seems to work for me.
Really?
I think I'm just probably playing with my own emotions. If I do something and it works out and I close the whole thing, I say, all right, well, that's the way it was supposed to happen.
Yeah.
When I close half, I continue looking at it and I kind of close the other half when I probably shouldn't, because a couple of dollars or points or pennies against me where I closed it the last time, I'm like, crap, I'll just close it. I wanted to close it. And when it goes the opposite direction, I seem to close it too quickly and it continues running in that position.
Yeah. I guess I feel that way.
Even the S&P is down 3. NASDAQ only up 35, a complete reversal in the last minute and a half here. Volatility up 2 cents. You want to do an SPX trade?
Yeah, let's do it.
Since
I'm going to close the other half of my silver.
Don't make me
there you go. It's gone.
Talk you into this. SPX, if you're going to around the 20-ish delta, going $15 wide, it's 65.30, 65.13, just going to the 20 delta, having the stock beat us. 35 would be 50. Looks like it's trading around $4.35-ish cents, 45-ish cents. So we'll try to put that in right now. Just take a look at it. I like to watch it for a second or two to see how it's moving. I'm going to go in at 440. It seems like there you go. Just got filled at 440.
There you go.
Couldn't get filled at 445. Seems
15
like
points wide.
15 points wide.
Oh, what was that? What did I just get?
There's my SPX.
SPX. Okay. That was it. No.
Okay.
SPX. Yeah.
Yep. And you close the rest of your silver a couple pennies.
Close the rest of the silver.
Better than you did before.
Yeah.
Very good. All right. What do you think? We have an unchanged market.
I know. Oil's at the highs.
Oil is at the highs, just under 113. Well, not at the highs. At the highs since we've been on the show. Yes, 113. Just under.
I'm already locked and loaded there.
Yeah.
I got a little bit of everything. I need some oil vol to come out. That's what I need.
Yeah, I think everybody does, and it hasn't. I mean, it's off of its highs, obviously, but not off of its highs for volatility itself.
Filled on this CrowdStrike position too.
Mm-hmm.
Did I already? No.
What else you looking at here?
I mean, the market's
gold,
just-
GLD basically unchanged. Microsoft down 2 and change, you pig. Nike up 6 cents.
Oh my God.
I'm only out about 50, 60 cents on my stupid that I did there.
Yeah, Mikey made me buy a leap call.
I didn't do that. I did like a stock substitution, picked up around.
That's one I just hope one day, like, we just hope we're doing this, for the open, and randomly Nike is up like $3 or $4, and I can just take $100 or $200 out of that. From sometime randomly, like 2 or 3 months into the future here. It's just one of those gifts.
From your mouth to whoever's listening, 100%.
Yes.
All right, let's take a quick 90-second break. We'll come back. We got more Tasty Live after this. What comes up next, son?
Well, nothing says Monday.
That's right, like this, man. Dr. Jim and the Skinny on options, abstract applications. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and we are joined by our good luck charm because we just closed that Iron Condor and SPX.
That's got to be the quickest one we've had.
We did it at 8:38 and 25 seconds. 3 minutes later, 8:41
for
56 seconds.
10%.
I closed it at 380, sold it at 440.
Yeah.
Nothing usually says Monday like this, man. That's right. Our good luck charm for the moment, Dr. Jim. How are you? Skinny on options, abstract applications.
Morning, sir.
Man, what's going on? Nice trade on the Iron Condor. Nice trade indeed. Speaking of good luck charms, guys, what are the odds? What are the odds that my Huskies meet my Wolverines in the championship game today? What are the odds?
You are
I try to tell you
guys.
guys about them for months, but still, what are the odds? What are the odds, guys?
Who do you take? Who do you take, Jim? Who's your team? You can't.
Yeah, you gotta have one.
You can have both.
I'm just saying, dude. I mean, my Wolverines. It's really hard because you got my boy Dan Hurley.
Mm-hmm.
I mean, he's been my guy from the beginning. But then you got my Wolverines, dude. I think the Wolverines are going to be a little too strong, a little too fast for him. Honestly, I don't even think the Hurley Magic is going to come through tonight. So I'd have to go Wolverines. I don't even know who's the favorite tonight.
7.5, Michigan.
By Michigan?
Yeah.
Yeah, that makes sense. Yeah, sure.
I mean, they look incredible. They've destroyed every single team they've played. So
I mean, the Fab Five, you can't stop them, dude. The Fab Five, you can't stop them.
It is the new age Fab
Five. You got Jalen
Five.
Rose.
Yeah, they're all from different. They played at different colleges last year, so it's up.
Of course,
it's the new NIL. It's a new
of course, dude.
Pay to play, baby. That's what it is.
College. It's college free agency, is what it is. I mean, it's the same thing. That's all it is.
Yes.
Yeah.
It's unfortunate.
So today,
you ruin.
It is unfortunate.
You don't get the team.
Oh, it's over.
You know,
It's
like
over.
as a fan, it's hard to root for it because you don't know any of their new guys every single year. The last couple years.
That's honestly what makes the Indiana football story that much more incredible. Because I understand that NIL kind of just got started the last year or two, basically. But to have Indiana come out and win the whole thing like that against all these NIL powerhouses, that's kind of amazing, honestly. Like, I would not expect that to happen, especially not now with NIL and such. And so, I don't know, man. That's crazy stuff.
Yeah.
But today, gentlemen, today is a very special day. Today is Eli's birthday.
Oh, happy birthday, Eli.
Yeah, so today,
Eli.
Eli turns 9,
Wow.
which is crazy, crazy, crazy stuff.
That's
So,
awesome.
yeah.
Nine's a good age. Like,
What's he into? What's the gifts that he's getting?
Yeah,
Assuming he's not watching, and I don't want you to spoil the gifts.
Oh yeah, no. He's not gonna watch the show. Don't worry about that.
Perfect.
Yeah.
Okay.
So the biggest thing, and this is gonna be so much fun. So on Saturday, so in like 5 days or whatever, all of his friends. So we're gonna have like 25 kids or 30 kids. It's gonna be a ton.
Awesome.
We're all going to a park that's down by the bay.
Down by the river.
And they're having no, it's an actual bay.
Yeah.
They're having a Nerf gun war.
Oh, that's awesome.
So everybody's bringing Nerf guns. Like, we're buying him some Nerf guns. Like, we're having a Nerf gun war. It's going to be fun.
You got
dude.
the
Like,
I
that's the
expect
big
that.
thing.
I expect that behavior from Batista's. I thought that you guys would plant flowers or something
doing
like
that, too.
Well, I thought because of the new fencing, he could keep them all contained at his house. Because you got the fence.
Well,
the fence is done.
we were going to do that. No, we were going to do that. But we thought it was going to be like him and like 4 or 6 of his buddies, right?
Yeah.
But then we started sending out the invites and like everybody started responding back. Like, man, we're going to have 45 kids here.
That's
like,
awesome.
this is crazy.
That's
Oh
awesome.
yeah, it's gonna be fun, man. So that's the big deal.
The
Yeah.
Nerf guns now they've gone to a level that if at my Nerf gun age, if I had we had some good ones. But we had squirt guns.
Squirt guns. We had the best squirt gun wars. Yeah. He would want to be covered in so we had like a swing set.
Yeah.
So he would want to go up into the swing set, just like a stationary target.
It's a classic, a miscalculation from a child, to be stationary.
Which I totally exploited.
Yeah.
And I would be down below, and I would be running around, and he wouldn't be able to hit me. He would get soaked.
Yeah. But the Nerf guns, they got you can get ones that crank it, and you can shoot 200 a second. It's unbelievable.
Oh yeah. No,
Yeah.
it's. They got.
Sounds
Nerf
like a
gun
hell of a
night
lot of
vision.
fun.
Oh yeah.
You go there, you know what? You up them, and you go, that's not a Nerf gun. This is a Nerf gun. You take out a paintball gun and start popping those little 9-year-olds.
Do the parents participate? Are the parents going to be
Oh,
on?
definitely. Oh yeah.
Okay, good.
Beautiful.
Yeah.
Beautiful.
That's
No,
awesome.
it's gonna be awesome.
It'll only be a matter of time. They'll be playing Beanie Baby Dodgeball with some other kind of thing. It'll be great.
No, you know what's the other thing that went away that isn't a thing anymore? Laser tag.
Yeah.
The laser tag.
Yeah.
Like
that was fun. I remember laser tag.
Yeah, that was fun.
That was fun.
No, well. The good old.
Well, that's cool. That's a great birthday.
That is a great.
No,
birthday.
it's gonna be
good
good.
job, but I'm
Yeah.
proud of you, Dr. Jim.
Man, I appreciate you, man.
Yeah.
Man, look at you. I appreciate you. Well, speaking of having some fun, let's talk about some finance. You guys want to do some finance this morning?
Sure.
Yeah, so here's a little something. Here's a little something that I think could be very helpful for traders, especially given this environment. Delta, static versus dynamic. So everybody's talking about, hey, hedging to the downside. You know, I want to, obviously have some protection if the bottom falls out. I mean, people were saying this a little bit more a couple of weeks ago, but they're still saying it today. And so I thought, man, this morning, this is a perfect time to make sure that everyone is clear. Static delta and dynamic delta are not the same thing, especially on the downside. And so that's what I want to talk about here this morning. You guys ready?
I like it.
All right, let's do it. Paul, cue us up on the intro slide. Okay. So every active trader has to ultimately choose which direction they want to play with their overall portfolio and individual positions. And some short delta is a popular choice for premium sellers as it can offset losses from volatility expansion that often comes from market drops. However, when it comes to short delta, there is a big difference between static short delta and dynamic short delta. So Nick, I'm going to ask you, since you kind of started trading a bit more recently than your father has, when did you realize this? Do you remember when you realized that all delta is not the same when it comes to the static versus dynamic difference?
It was probably early on because it was mostly to the upside that delta was getting very, very big, very, very quickly. But I think most people recently have probably realized that things can get big on pops and volatility, typically going to bigger downside moves. I think people over the last, handful of years have realized, the paycheck trade of just selling puts, there's some risk to that. I think that's been a change here. But I remember my first trade, a short call in Costco, because I read some article that, Walmart was going to take Costco's lunch. It was like the 145 strike in Costco, and the stock did not have a downtick from the onset of that trade. I think it went to like 200 or something. And that was, I learned a quick lesson about delta. It was like, the 30 delta call, it goes quickly if you're completely wrong.
Yeah, no, that's 100% right. And what's funny about the paycheck trade, so that's actually kind of the other side of this discussion. That's not the road we're going to go down this morning. I'm going to focus on the calls because I want to focus on if I'm trying to build up short delta, like what are the different ways that I can do that?
Sure.
When you're selling puts as, the paycheck, the passive income, all that garbage that you hear out there. Oh my gosh, man. It makes my ears bleed.
Yes.
Like, oh man, it's so bad. It's so bad. But yeah, that's a different thing. The deltas can get huge. Like your 30 delta can become 100 delta. Your 5 delta paychecks can become 100 delta. And so it's like, that's a whole separate deal.
Yes.
But I kind of want to focus on, the call side. So kind of similar to what you experienced with the Costco thing.
Yeah.
But we're going to kind of zoom out a little bit and kind of talk market wide, like broad based kind of stuff. So Paul, go ahead and hit us on the next slide. So let's say that I wanted to build up short delta. Well, there's a number of ways you could do this, but I'm just going to explore 3 different ways, 2 static ways and 1 dynamic way to build up short delta. So number 1, let's just focus on S&P 500. So I want a short position in the S&P 500. There's 3 different ways I could do that according to the context we're going to talk about this morning. Number 1, I could sell 50 shares of SPY. It's clean. It's simple. Like that's one way that I can obviously play the market short if I want to do that. Those delta are going to be static. Now I'll explain what I mean by that here in a minute. Another way that I could do that about the same positional size, I could sell an MES future. That's also going to be about 50 delta. I think it might be slightly more than 50 delta these days, but not very much, like 51 or 53 or something.
Right there.
That's going to be 50 short delta. Or I could sell an at the money SPY call. That is also going to be 50 delta, but that delta or those delta are not going to be static. They're going to be dynamic, which of course that means over the life of the position, the delta changes. It does not remain the same. And so keep this in mind. The shares, the futures, that's static, options are always going to be dynamic. And so I think this is something that really surprises a lot of new traders. What do you guys think as far as this learning is concerned when it comes to new traders kind of figuring all this out?
I think this is a big, is a hard thing to think about until you've experienced it. And what I mean by that is like, you have strangles on or you roll down calls and you're like, okay, well, I reduced my delta and the market goes down again. And that delta really doesn't come into play because you have the pop in volatility. That kind of offsets the directional move that you kind of played for. If you roll down a call and you roll to a 40 delta call, you expect, okay, if the market's down a couple points the next day or more, that is going to hedge you. But the pop in volatility offsets that hedge, and that delta doesn't really change. The value of that option probably doesn't change all that much. It's a hard pill to swallow when you have quote unquote short delta with options, but it doesn't hedge you to the downside because of that change in volatility. It's the same thing too on the flip side of that. Like when the market goes down and we say, the rolling down the call, it's going to help you and it's not going to hurt you into the bounce. That's really where I think it comes into play more, because you get that short delta and then you get that bounce higher and you're like, why am I making money today? I rolled down all my calls. Well, that volatility, it's really that volatility component that I think people misprice and don't totally understand as much, especially when you see it happen to the downside, like we have seen.
That's right.
What do you think, Tony?
No, I'm kind of going to echo the same thing. I mean, this is something I think which is very hard for people to realize. As a matter of fact, this is why I'll take it a different direction here. When you're an experienced trader and you get that email or phone call about concentrated risk, possibly, or something of that nature, and you talk about, hey, they're all out of the money options, and it's like fake delta, it's not really there. You are correct, it is out of the money options, but you have too many units which can grow, to your point here, where somebody who has the same amount of delta with less units at the money won't get that email because they won't have the same kind of concentrated risk, as their deltas won't grow exponentially as yours will. So it really is a double-edged sword here.
Yeah.
Oh, it totally is a double-edged sword, 100%. But man, I'll tell you something. It's almost like we've been working together for like 10 years. It's almost like we're all kind of in agreement when it comes to this, because what Nick is saying in terms of, I've got these short calls on, I get the downside move, but I'm not getting paid. It's not paying off. It's not helping me out. That's exactly what I want to focus on here this morning. So Paul, go ahead and hit us on the next slide. So let's say we get it down moving SPY. So let's say, just for example, SPY goes from 640 to 630, right? So a pretty decent little move, but with VIX at 25, 27, whatever, that's kind of like a daily deal now. That's not even really that big of a deal. But still, you're trying to prepare for this move. You want to protect your short premium. Okay, let's make sure we understand these three positions are not going to behave the same way. So number one, my short shares in SPY. Okay. On the move from 640 to 630, those deltas are not going to change. Those deltas are not going to be impacted by volatility. Those deltas are static in every sense of the word. So you're going to get quote unquote paid for every dollar that stock drops or that the index goes down. You get paid dollar for dollar. That is the nature of static delta. Okay. The short MES future, same thing. Now, this is a little bit different because of multipliers and tick sizes and such, so you have to make sure you understand that. But still, your deltas are not going to change. They remain the same over the life of the position. They're not dynamic. You're not going to lose them on the way down, nothing like that. But if you've got a short at the money call that's 50 delta, it's 50 delta now, but as that stock starts dropping, those deltas start drying up.
Sure.
Now all of a sudden they're only 40, they're 42, they're 36, whatever, which is not a bad thing, but you're going to look at your P&L and you're going to be scratching your head because you're like, wait a minute, like I was trying to prepare for this very move and I did not get paid because A, the deltas dry up, but also B, as we have here in this green box, which is exactly what Nick said, volatility is probably going to be expanding. And on a move like that, it could be expanding rapidly. Well, when you sell an option, a call or a put, it doesn't matter. You're short Vega. You want volatility to go down. So any volatility expansion is going to be working against you. So the market goes down. You get the move that you were trying to prepare for, but because of the way you kind of set up your hedges, they didn't really pay off the way that you want. So my question to you guys is this. How do we fight against this, so to speak? How do I position myself to take advantage of a down move? Personally, I'm a fan of some static delta. I'm a fan. You don't have to be net short delta if you don't want to, but to have some static short delta positions in there that are going to be able to capture a move one for one, I think it makes a little bit of sense. But what do you guys think?
Yeah, I think you have to have the static delta. You can also do like more dynamic short delta. We trade a lot of like put diagonal spreads, put calendar spreads, even wide butterflies. If you go to like an SPX and do a wide butterfly where it's a position where the delta can grow into downside moves. Those sort of things give you that dynamic delta that you need when volatility is whippy. You know, the short calls help when you've got an 18 VIX, where you're kind of in a normal range of volatility, where markets, move in both directions in a manageable amount. When you're having big moves and big swings in the market, big swings in volatility, you need to have something that has gamma to it or more dynamic delta to add to that position so that you're picking up more, you have stuff that's actually hedging. The short calls that you sell at 50 deltas, that you sell for $5, they have 50 deltas, but the hedge is the premium. There's only so much of that premium that it does not hedge the $10, $15 move in SPY. It just doesn't do that for you. So you have to have those sort of butterflies, static delta, put diagonal, stuff like that if you really want to get some meaningful hedge into a big move. The $5, the inside down move, you can hedge with short calls. You can't hedge the big moves with short calls.
I agree.
And what I love about
sometimes you have to have directional risk too. You can be short premium with directional risk.
Yeah.
That's the way to look at it. Matter of fact, you got volatility in by 50 cents. This is about as low as it's been. You got even the S&Ps just trade up to 66.50 and change. They're 46 right now. They're up about 24 handles.
Mm-hmm.
NASDAQ up 160 and change.
But what I love about what you said there, Nick, is so you're talking about dynamic delta, but you're talking about dynamic delta where it grows into the move.
Yes.
And so that's exactly. But and that's obviously what is kind of the attractiveness and the appeal of a lot of long options like long calls and long puts. But the problem with those is you just get absolutely rinsed on the theta. And so by selling the premium against it in a diagonal type of fashion or even in a butterfly type of fashion, you're kind of putting a lid on the theta drag that you're going to have to absorb while still allowing for some dynamic delta that's working for you to the downside into the move. I really like that a lot.
Mm-hmm.
Totally.
Yeah. All right, let's get them a few takeaways. As tasty traders, we will inevitably find ourselves carrying a directional bias in the marketplace. And oftentimes we're doing this as part of our overall strategy, such as pairing short delta with short Vega. But it's important to remember that not all short delta positions are created equally in terms of how they'll react in response to market movements.
I love it.
Said.
Very well said. Probably better than I would have said it.
For sure. For sure better than you would have said it.
Not hard to do. Not hard to do, Dr. Jim. But a good job out of you just the same. I appreciate you, my friend. Even the S&Ps appreciate you also. They're up around 21, NASDAQ up 140, Russell up 3 or 4, Dow up around 56. It's about the first time I've seen all four indices up. The Dow and the Russell have been the weaker of the group. Volatility in by 43 cents at 24, made a new low at 23.75. Bonds are up 4 ticks. And on the oil watch, which I keep confused.
A perplexing day.
Yeah, up 112, up around 54 cents. Has not moved.
Yeah.
We're going to take a quick 90-second break and come back. We're going to let Dr. Jim go, and we'll come back. We got more Tasty Live after this. What comes up next?
0DT SPX is a good one. You don't want to miss this one.
You're not going to want to miss this one because if you missed
Good
our
one.
0-day trade, you're not happy.
You
So
did.
don't miss this one.
Yeah,
We'll be back.
you did
in
a good
90
job on your 0 day.
Thank you. I try. We'll be back in 90 seconds. Tasty Live. This is all me. Had nothing to do with
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME Futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, a market measure sponsored by the SIBO. But before we get there, let's take a look at the market. Even the S&P's up 5. They got back up to around that 66.50, 60 number and have fallen back off by about 20 handles or so. NASDAQ up 80 and change on the break. I told you all 4 indices were up. I lied. The Russell is now down 8 and the Dow is down 7 or 10. It's really been a choppy kind of day here with oil just staying right there at 112, now 112.60 or so, up a full point. But you took off some positions, which we didn't talk about. We talked about the SPX trade because it worked in 3 minutes. It was ended up being a good trade. But you took off some SPY positions that you put on a couple of days ago in the shorter dated options.
Yeah, and the April expiration. I've been doing put diagonal spreads on the downside and kind of scalping out of the shorter duration, short-term short puts. So further out of the money, sold them in the middle of last week. You get a little bit of a bounce. It's without adding more risk to the trade, peeling off some long delta into what has been a nice bounce here. So I'm getting my delta. I think I've reduced it probably in half today, and I reduced it through last week by another half. So I'm in total, my delta is down about 75% from where I was in the middle of last week in terms of long delta. So most of my long delta now is long NASDAQ. I have a lot of offsetting short delta, short Russell here. I'm long like gold, short oil. I'm pretty neutral-ish to the market right now. I'm short the stuff that has gone nuts to the upside, long the stuff that's at lows.
Probably prudent. You got volatility hanging out 24.20. We really have been a rudderless ship, basically unchanged all day long. We've been up around 20-ish handles, down around 5-ish handles, and we've been just sitting right there. We're up 9 right now.
And that's a close on an Alcoa strangle that this stock has had some wild movements. I mean, this was up last week from 55 to...
Yeah, no, this is aluminum.
Yeah.
Yeah, play here for sure. Aluminum has been bid as of late.
Where are you getting that from?
Just channeling an old friend. Even the S&P's up 10.
Yeah. All right, that's all I got.
All right, let's go. I'm ready.
I
Market
sold some
measure.
calls in SPY too.
Say again?
I sold some calls.
Yeah, I saw that. 670s with 11 days to go. So you're really doing this to go back to all deltas aren't
Shorts,
created.
yeah, short some volatility on the upside.
Yeah, and doing it shorter dated.
Yeah.
So it's going to be much more subject to price change.
Yeah.
Than more like a synthetic. We were just talking about all deltas aren't created equal. This wouldn't be all deltas created equal too, because you're going in shorter time frame. You're going to have a lot more sensitivity to market movement than if you were to go out into, I don't know, say the,
monthly
May options with 6 days. You're going to have a lot less. 39 days. You're going to have a lot less delta movement.
Yeah. Do I do something in IBIT too?
IBIT, first time it's catching a little bit of a bid. You're feeling like you need to do something, right? Up $1 and change.
Got to do some short-term call.
You don't have Ryan coming in, so you can do it without having to see his sad face that you were selling Delta and IBIT.
Yeah, but it's been a good trade it's just not, the volatility isn't there anymore. It's just not.
Ivy ranks 38 or so. Ivy rank used to be in the 50s, 60s. Yeah.
You gotta wait.
Yeah, you really need a rally in there to get volatility to be bidden there.
Cool. All right, let's do it. 0-day SPX research. We got a great one for you. This is a March breakdown. So we're looking at the whole month. I know I've kind of spoiled it, but what do you think of March in terms of like performance-wise in SPX sponsored by the SIBO?
Spoiled it, so I'm not going to spoil it for everybody else who haven't listened to the beginning of the show.
Okay.
But you said it was a great market measure, so this is something that we should look at.
This is a good one. So in March, SPX declined 5.1%. So there's a huge move in March, and each week falling between 1.6 and 2.1. That was a strangle in the Qs we sold last week. I took $100 on it.
What'd you sell it for?
Like 11 and change.
Nice. Close it at 1085. Good job.
Yeah, I did it at
just being nimble here, right?
Yeah, I did that. It was $100. I took $100.
I like it. I like it.
Yeah, 1185. I did it on the 1st. It's been one full trading day.
I love it.
Huge move in SPX. You've had between 1.5% and 2% move basically each week, which is big moves there. Mm-hmm. There were 13 red days and 10 green days. So despite what it's felt like, and really the downside moves have been bigger, hence why you see the market has gone down there. If you have 50-50, but the market goes down, it means those red days are bigger, which has certainly been the case here. The VIX averaged 26 and peaked at 31, so it's remained really elevated. Currently, the VIX is sitting here at 24.39, so lower than we've had through the on average through March, but still very, very high. Point being here, you've had big moves in both directions, much bigger downside moves, very high implied volatility, especially when you look at the peak there.
Absolutely. Even the S&P's up 17 now.
So volatility was elevated across all measures relative to long-term levels. So, the last month has been a tail type event for all intents and purposes from a volatility perspective. A big move to the downside. It's not your crash scenario, but it's certainly, a very volatile period of time with intraday movement standing out the most. So you've had these big, even on Thursday, down 80 points to basically flat at the end of the day. It's a green day, quote unquote, when you look at it on the scoreboard, but the volatility has been there. across the board. This was also reflected in the day-to-day price action. So this leads to the next question, which is how did implied volatility behave relative to realized volatility? And that's what we've got here for you on the look back. So we have close-to-close historical volatility. So this is just the general volatility here. The average intraday range, which will be on a percentage basis. So you can see, March has been, from a historical volatility perspective, has been high. From an intraday range perspective, has been wide. So you've had wide price action there. And then the overnight gap, which is, we had a question on in Confirm and Send this morning, you've had bigger overnight moves than you typically see on a quote unquote average setup. So across the board, from a volatility perspective, you've seen a pretty high volatility month. Now, if you survived March, that's a pretty good
example. You can make it here, you can make it anywhere.
Well, I think that's a good point, because people get caught up in like, oh, it's scary right now, I don't want to do anything now. Well, there's opportunity because volatility is on the board. And if you are unable to sit on your hands, which I am unable to do, and you survive a period like March, it's a really good experience to get under your belt, because you'll see this happen again. It's not going to be.
You will see this happen again, although you do have volatility under 24, 2380. That 24 number is something that I've been
getting crushed here. You got oil selling off a little bit.
Yeah, but that 24 number has been an area where I say, an area of line in the sand, where I think that we have to get below to sustain any kind of rally in the market. Now, we've done this once or twice before in the last week or week and a half or so. And here we sit again. So we're really on a little teeter here. I guess you should keep an eye on oil, which is unchanged, 111.60 right now, up 8 cents. It was up $1 and change, to see if you get any kind of volatility contraction here and maybe a little bit of a bid in the market. The other side of the coin is we're right at 66.50, right where we've fallen numerous times. So if you have a little bit of short premium in your portfolio, you're probably benefiting from that at this moment. I'm looking at some short calls that I have, and they're basically unchanged, maybe up a nickel or so, but they had around 40-ish delta, and you've got SPY up around $2.50. You would expect them to be up 80, 90 cents, and they're up 10 cents right now. So
that's vol.
That's vol contraction. So do with it what you may.
I just rolled up putties in AMD. I have a May strangle there.
Okay.
Just flattening out some delta a little bit.
Good.
So when we look at implied versus realized volatility, implied volatility exceeded realized historical volatility on 21 of the 22 trading days. So what that means is that implied volatility, despite the crazy moves that we've seen in the market, has actually still come in less than the historical volatility. The implied volatility has been overstated. So the average gap of 12.1 points indicates consistent overpricing of daily risk. It basically tells you, despite the craziness that we saw in markets, implied vol has still been higher than what is actually happening on a day-to-day basis. The exception was March 31st, when historical volatility reached 32.6% versus the VIX one day at 19%. And the 2.9% rally that we had delivered more movement than expected. So we actually had implied volatility being understated to realized volatility on a big up day, which is typically not what you see. Like it's typically the big downside move, the tail downside move, where you see, implied volatility understate the move. You don't typically see it to the upside. So even more irregular to this data set. But the point being, implied volatility was high. There was craziness in the market, although the craziness was not at a level that was implied.
Nobody wants to be irregular.
The next slide. So we look at the performance and the intraday P&L paths here for the 20 delta, $20 wide, which is really what we've been doing. We had a 4-minute trade this month. 3 minute? 4 minute?
3 minutes and some seconds.
Unbelievable. March ranked among the strongest months in the data set with moderate realized movement and favorable trade conditions, despite the craziness that we've seen in the market. Most trades reached the 25% profit target within 2 hours, supported by an average credit of 594. So here's kind of the piece of the pie of why this worked so well, is that the average credit on these trades was significantly higher than what we were getting in previous months. Like those $5.94 credits were $4.90 credits. You're getting an extra, dollar in premium. And so when you get that non-movement, it comes in a lot quicker. We saw it even this morning. Only March 13th missed the target, peaking at 24.6%, which, we've talked about this before. There's been because we're doing this very mechanically, it has to hit 25%. If you're looking at these trades day to day, you've had a lot of, even on the losing trade, a lot of opportunity to manage small losers, just under 25% winners. If you looked at it and you're like, oh, I'm a nickel away, I'm just going to take my money and run. You had opportunity to do that on all of these trades. And so
this is where AI trading or back testing or anything kind of takes a little bit of a back seat to kind of trading in the market yourself and use a little bit of market awareness.
Yeah, exactly.
I mean, it's a double-edged sword too. I'm sure there are other studies you can look at it the other way around, but I think you lose the human element. You really are subject to some very rigid
mechanics.
Yeah. And again, this is mid-price too. A lot of times at mid-price, you can't even get filled there.
Yeah.
You know what I mean?
Yeah.
So,
or sometimes you get filled on something you don't expect to get filled.
That's correct.
I mean, you could have those quick little moves where you get filled on something, that you would have missed had you not had an order in.
That's right.
So March ranked as the third highest P&L month in the data set, supported by higher premium levels. This was really the key here, is that higher volatility gives you more credit for selling the same amount of risk. You're also further out of the money. This is something that doesn't get that is hard to see in the data. Like when you look at those P&L paths, you're way further out of the money, and that's why those trades are working despite seeing big moves in the market. You're having a 1.5% to 2% weekly move. You would expect neutral positions to get murdered. They actually didn't, because volatility was so high. Your risk is so far out of the money, and you're collecting a lot more premium. So credit levels exceeded both January and the long-term average, although overall performance remained below January. So January was like kind of an anomaly month where you had basically nothing happen. We stayed between 6,800 and 7,000 on the E-minis. We kind of talked about that range. That was the best of both worlds, because you had essentially no movement, because we stayed basically flat right in between a tight range with kind of whippiness intraday, sustained high volatility, which was also a big positive. This month, you had bigger moves with that sustained volatility. So it was great, but not as great as having the perfect choppiness and high volatility. This year, though, has been kind of an amazing 0DT year.
Absolutely.
Across the board.
Absolutely.
And so you can see here, across the board, you've had better than average performance for, your delta neutral positions despite volatility.
Volatility coming in right now in by a full point. Even the S&P's up 30.
So the only challenging session in the second half of March occurred on the final day when SPX rallied over 2.9%. Although realized movement exceeded expectations, the move occurred near noon, allowing enough time for positions to exit the profit target. So this was another one where, you had kind of a couple opportunities to manage this trade. I know that we're looking at this as like a, more mechanical thing, but, if you would have managed this one, you would have had a near 100% hit rate, just about, which is crazy.
I mean, it's unheard of, and you really can't play for that, but you got kind of the best of both worlds. You got a really big, wide, two-sided market with extremely high implied volatility. You're going to get the opposite someday soon, too, because volatility is just unsustainable at these levels. Now, we are in a news-driven market, so at any moment, volatility can expand by a couple of percentage points. And I don't know if it's going to contract as fast right now with everything that's going on.
There's too much headline risk.
Yeah, but I think you've gotten, the highs of volatility pretty much in. You notice all the tweets come out, more of a muted move on everything. So I think right now you have basically the best of both worlds in between volatility and market movement. Depth of markets have been amazing.
Yeah, liquidity has been great. So when we talk about the amount of time SPX has spent inside and outside of our short strikes, SPX spent about 85% of the time within the expected range during March. The sell-off kept prices away from the call strikes, while put-side break-evens were generally brief. Again, it kind of tells you we had some huge movements, but because volatility was so high, you're so far out on the distribution where you really didn't even get tested despite having these big moves. And that's the overstatement of implied volatility versus realized volatility. It feels like it's a huge move on a day-to-day basis, but when volatility is at a 26, 27, 30 handle, it needs to move 3% to realize that sort of implied move. Although more days tested strike levels, the time spent beyond those levels remained short. Basically tells you we've had, like you kind of had the washout in the morning and then it's kind of a bounce back throughout the middle of the day. So when you look at the March performance, 7% of the time spent outside the call strike, 8% spent outside the put strike. Those are the short strikes, 85% inside that range, which is below the long-term average, which is unbelievable because we had the highest volatility numbers that we've seen, or around the highest numbers that we've seen in this 3.5-year SPX data set.
Unbelievable when you really think about it. I mean, it's been the best of both worlds.
Yes. So the one caveat here was the paycheck trade that everybody has used for the last 3 years. The 30 delta, $30 wide put spread was the only losing strategy that we had in our set. So we look at 20 delta for the short options, $20 wide for the iron condors. We look at the put spread, 20 delta put, $20 wide. We do the 20 delta put, $30 wide. We do the 30 delta put, $20 wide, and the 30 delta put, $30 wide. So you have a number of you have one iron condor, a number of different put spreads, because that's generally, it's either you're doing neutral or bullish. There's not a lot of people that are doing short call spreads day to day. And so the 30 delta with the most amount of risk on the table was the biggest, was a losing trade across the data set. But if you moved to the 20 delta, and this is another example of volatility, if you moved to the 20 delta, you actually had a positive P&L. So you were still fine if you did the put spreads into what was a declining market over the last month. You just had to do it further out on the curve, which tells you that, when volatility is high, really high, you should be looking more at those one standard deviation type options. You shouldn't necessarily go to those at the money options. If you are going to go to the at the money options, do half the amount of your allotted size when you're looking at those. So across the board here, it's pretty amazing to see that even in a down market, bullish positions, because of how high volatility was and because of the put skew you typically see in SPX, most of them were still profitable. It's really the at the money stuff where you're in, the 30 delta put with a $30 wide wing, that whole spread with the VIX at 30 is going to be within the expected move, or right at the
expected move, just maybe a little bit outside
of it. The 20 delta is going to be at the expected move. The long option is going to be, outside the expected move, and that's why those performed a lot better.
It's really a great study. You were right when you said that from the beginning of this segment here. Even the S&P's up 27 at 6650. That was a number I talked to about. Where I'm not a technician here, but all you have to do is be a student of the game. You know that we've gotten up to here quite a few times and fallen off. We'll see what happens there. Volatility under 24, 23 and a half. You can see here 24-ish. Being a number, we're right there on the teeter of everything. The way I look at things, price meaning E-mini S&Ps and volatility. I have no idea where anything to go from here. If you have some positions that you've been looking to take off, you got volatility, some short premium. You got volatility, in by 3.5%. Got the market a little bit higher. probably the best of both worlds right now. You've got the Russell, the weakest, and the Dow. The Russell and the Dow, the weakest of the group. You got even the S&Ps and the NASDAQ, the strongest of the group. You got oil in by 50 cents, 111 and change. Still at the high end of, we haven't had oil really close up here. If it were to close here with the market at 66.50 and change, last time we had oil at this level, the market was nowhere near that. Let's take a quick 90-second break and come back. Unless you want to take a look, let's see what's moving the market. We could do that. Some of the stocks to the downside, LITE down $33.
What happened? Those reversed. Your
It did. It was
must be down too.
Yeah, it was up to $836.
Wow.
Now down to $791, about $4 off of that. AAOI
only up like $2.
Only up $2. You are right about that too. It was up at 117 and change, so down about $10 off of its highs. Lilly down small here too, down around $3. A lot of volatility products. Oracle, UPIG down $1 and change. CRW down $1 and change. ARM down $1 and change. Microsoft down about 80 cents, but really closer to its highs for the day. On the other side of the coin, you got SanDisk up 21, AppLovin up 16, about $10 off of its highs, about $10 off its lows. MU up $11. That's a big 3% move there. Coin up $6. Big move there as Bitcoin holds on to and flirts with 70,000. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
We got the trade desk, boys.
That's right. Q and Glenn coming in next. We'll be back in 90 seconds. Let's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. My man Q. How are you, brother?
Fellas, how's it going? Doing well.
Good to see you. Always a breath of fresh air. Hope you had a good
long weekend. How was your long weekend?
Long weekend, yeah.
Oh, it was amazing.
Yeah.
Actually, much needed. Because, I mean, we're like almost at the end of tax season. Sometimes, like.
Why does everybody got to talk about taxes?
You know, like.
Well, in the brokerage firm world, you're coming up with reports that people want, or maybe don't know how to download, or you're showing them how to do that, because it's all on the Tasty Trade platform.
Yeah, like it's all available there. Well, like, because on the trade desk, you know, we deal with like all the one-off situations, you know, and so like that's where we live is all the one-off like weird situations. And so dealing with all of that, you know, can sometimes get a little, you know, convoluted.
What do you guys think the probability, like if I just said, you know what, this year, not going to file the taxes. What do you think the probability is that I would get audited?
Great question. I do not know, especially as a, you know, licensed financial professional, nor do I want to give anything on that. I am also not a tax
Good answer out of you, my friend. That was a rehearsed answer.
Yeah, what do you think?
I can
as
say
a non-financial advisor.
As a non-financial advisor, student of the game
you come from a legacy of tax evaders.
True there. True.
So you have to have good knowledge on this situation. Like, what if I just was like, "Oh yeah, the trading account."
Knock on wood.
Uncle Sam, I forgot that one.
To this date, I don't like to put this out in the universe. But knock on wood, I have not had your attitude, and I have not gotten audited.
Okay.
So.
Well, what do you think the probability is? Like, just little Johnny me, like, you know.
Now that I mention it, it's probably 100% for this year coming, because you just put it out there in the universe. Before that, I was able to fly underneath the radar, and everything was just good.
Yeah.
Maybe someone from the IRS is watching, you know.
Well, I feel like if they're watching, they could help push mine aside. Like, oh yeah, that one. We don't need that one.
Yeah, oh, they're a fan. Oh, Nick Batista.
Just let it go. Yeah, I would like to know, like, I always had that Donnie was the guy that I would bounce that kind of off of.
Yeah.
Because Donnie, he really hated his taxes.
I hate.
Yeah, mention some other people. Get them in there.
Yeah. Donnie Roberts.
With an R.
Yeah, tax is not super fun, but any tax questions, please consult a tax advisor.
Yes, we are not.
You should probably file them.
Very clearly, I am definitely not a tax person. Don't ask me.
Don't ask me.
So
I don't know anything.
Working in the brokerage world, we get caught up with a lot of that stuff, and then after April 15th is much more exciting. And then also what on April 14th, I think it is like the end of the comment period for the PDT rule as well. So hopefully a decision should be coming soon on that. We're thinking sometime around June. It should hopefully be abolished, fingers crossed. The second it is, every single person watching this will be notified.
Yes.
Okay. Wow. We will be ready to go on day one.
And as you get updates on kind of the structure of it, because I imagine
if we have updates, I'd be more than happy to talk about them. We just really don't. There's not much going on with it, really, which sucks. But hopefully, sooner.
Beautiful.
Very good. I have some people in the chat. Algo Trader, thank you. Not filing will almost certainly get the attention. They have systems that check that. Cheating is easier to get away with. So,
wow.
Respect that. I think,
wow. Is that a long lost brother of mine?
Are you a Batista Algo Trader? I got some people saying taxes. What's that? I see you guys. I appreciate it.
Any tax questions, please contact a CPA. But without further ado, top 20 symbols.
Yes, without further ado.
Top 20 symbols going through the system and their IVR. At number 1, we've got the King Tesla with a 15, AMD 54, Micron 72, NVIDIA 12, Netflix 66, Apple 43, SLV 56, iBit 40, Microsoft 89, GLD 74, TQQQ 58, Amazon 59, Intel 79, SoFi 40, USO 72, SNDK 76, Palantir 29, MSTR 43, TLT 21, and Meta 66. I actually got an email from a customer asking about like, why is TQQQ always on there? Like, you guys don't typically trade that. It's sort of against like the tasty style of things. And so it's just like, this is just an overall list of where the volume is. And because it's technically not a broad-based ETF, it's still included on the list. But like some of the risks that we see with trading those kind of ETFs is what's called like the volatility decay. Because if you hold those assets for a long time, then, going up 30% and then down 30% is not the same as going up 10% and going down 10%.
Yes.
Right? Going up 30%, down 30% usually leaves you worse off, right?
Yes.
And so you're more than welcome to trade them for like shorter term speculation. That's exactly what they're made for, right? But we don't see people typically hold those for too long. And honestly, I mean, nothing on this is really like, you should go trade this symbol. It's just like where all the activity is and stuff like that. So just want to put
number
that
of transactions, not notional. So it's just number of things pinging the system. Yes. Very good.
Good job out of you.
Yes. And I've been told I ran no ceasefire.
Oh, that's why we sold off.
They said no.
Again,
they gave it to Dikembe.
Yeah, and even the S&P sold off from around 66.50 to 66.35, which is a small-ish move. But volatility, which was under 24, got down around 23.55, 60, rallied about 30 cents to 23.95. So we got a little bit of volatility expansion, a little bit of market sell-off. I think volatility has probably seen its low for the day, at least until noon, when the president speaks. We'll see what happens there.
Well, volatility just moved like 30 cents.
Yeah. Expect the unexpected. Bonds are bid up 9 ticks, 113.27. I say bid because they were lower earlier this morning. Good job out of you, my friend. Thank you so much for coming in here. And some of those leveraged ETFs. A lot of people who have, at least from my experience, from emails that I get, a lot of times the patent day trading is a problem for people. So they're looking for that extra bang for their buck. And, even though the markets aren't that great, they got to go where they can find the liquidity and plus that extra bang for their bucks. And they can do it inversely. They can do it against other positions that they have. So people with under accounts under $25,000 until the rule gets changed, and hopefully should have been changed already. Hopefully, it gets changed. I mean, they don't have to do that anymore. They can stay with more liquid products.
Keep us in the know.
Keep us in the know.
Yes, sir, will do.
We're gonna go. We're gonna let you go. I'm gonna bring in my next gentleman. That's right, your friend and mine.
Good morning, sir.
Glenn, how are you, brother?
Good, on a Monday.
On a Monday.
Refreshing.
This is not
full week Monday. None of this off Friday crap, but not for you. You were always on.
Yeah, I was here on Friday.
I know. My man.
Yeah. Because FX markets.
Exactly.
Were
always
they
open.
Flying around? I don't even know.
Not flying around, but they were open if you wanted to get in.
Get your fix.
Yeah. Get your FX.
Get your fix. Get your fix.
That's actually
going on a t-shirt.
That should go on it.
Well done.
That's actually pretty good. I want royalties on that.
Okay. That'll come
and you deserve them.
Yes.
Yes, for sure.
Well, but as Tom said, anything that you think of, create under this roof is owned by this roof.
Owned and operated
Yeah, it's
by.
owned by, so like, yeah, okay.
We'll get that slotted in right after the release of our MILF t-shirts.
Yes.
What is that?
Man, I love Forex. That one's coming out.
That's good.
I like it.
All right.
I like it. Like it a lot.
I could see you being into that affinity.
Into t-shirts?
Yeah. Yeah.
Big t-shirt guy.
Big. Big by big.
I hear Josh enjoying that one. Sorry about that, kid show.
Yeah, no, my bad. But yeah, looking like another big week for us here. As you said, Iran rejects ceasefire, wants permanent end to war. Don't we all?
Yes.
Yeah.
Peace on earth in our time.
Yes.
That's what I'm
Beautifully
hoping
said.
for. But
You're a wordsmith. You are.
thank you.
Yeah.
Should I be a pastor?
Word wizard.
You probably
I could see you being one of those like, crazy ones. The ones that like you get like the
Southern Baptist.
Yeah, not
that Southern Baptists are crazy, but I'm from the South, so I can maybe say that. But no, I went to
being like a cult leader.
I went. All right.
You could.
Well, this went off the rails pretty quickly.
I can see you being a cult. I'll take that as a compliment.
Yeah,
it means that you think I have influence.
Yeah, and
charisma.
Charisma. Yeah.
Thank you.
I would follow you.
All right, good to know. A lot to think about now on this Monday morning.
Yes.
But we've got a U.S. dollar that's softer on this turn in risk sentiment. We'll see for how long. Because do we have a press conference?
FOMC, middle of this week.
Yeah.
Right?
FOMC minutes.
Yeah. Oh, it's
all
not.
That is,
no J Powell.
No J Powell. All that is the release of their nuanced
dots.
Whatever.
Dots, right?
Dots came out. This is how everyone feels about the dots.
Oh.
Dot feelings.
Dot feelings. I like it. That's a good
But if you're trying to rank them in terms of what's relevant, what's not, this one actually somewhat decently relevant because this is from mid-March. And as we know, a lot of unanswered questions from mid-March still top of the docket. So I'm not going to be able to read them as fast as the market will be able to digest them on Wednesday, but that should be a nice event for us here as we've got kind of a ramp up in the economic calendar to Friday, which is inflation data for the month of March, which is not as outdated as well.
Beautiful.
Does that include like the oil move?
Exactly. So expecting a full % hike. Yeah. So we're in.
But now that we're expecting it,
it's expected.
It's expected.
Expect the unexpected.
So it's not.
What to expect when expecting?
Well, no. Now that we are expecting it to be 1% higher, and it comes in 0.9% higher. That's bullish, right? Because it's less in the.
We've got room for bullish.
Yeah, we have room for bullish here.
Right.
So you raise the ceiling, and then you come in right below it, and you're like, see. It's not that bad.
See what I did there?
I thought it was going to be way worse. Not that bad.
Your girlfriend is very lucky.
That's right. That's right. Huh?
The playbook.
Yes, the playbook.
But no, here we are starting the first full week of April, which means not only we're getting first readings from March, the ever impactful month on top of mind. And so what I did is ran some 1 month correlations. If we can pop that up on the screen, gives us some interesting takeaways. We're in a pretty nuanced situation where we can run this 1 month correlation of cross asset FX correlations. 1 month, usually in the statistical community, defer to always more data points. 3 months is kind of the standard practice. If you go farther out, of course, it'll be more robust, but maybe not as sensitive to ongoing developments. So 1 month, enough data to not really, have a ton of outliers spiking things in all weird kind of directions. But we've got this conflict that's going on now for a month. And so we're able to take a look at these popular US dollar pairs and see which ones are moving with what. And we see some interesting trends. Not only do we see an uptick in correlation to crude oil, that's what we would expect, but prior to this, it looked more like this gold correlation line where you have some soft correlations inverse to the US dollar, but really nothing major. And now we have a big resurgence in the inverse correlation between US dollar and S&P 500. So nothing really surprising to you guys that we've been tracking this for over a month now. But when you are getting granular into that US dollar exposure, what's actually the most correlated? I thought this was interesting. Among major US dollar pairs, we have this New Zealand dollar, US dollar highlighted there in the middle. Highest correlation to the S&P 500 at a positive 0.67. So that's been the most reactive among major dollar pairs. If you widen that horizon at TastyFX, you can trade 20 different US dollar FX pairs. And among those, US dollar Mexican peso gives you the highest correlated exposure to
I don't think you have any peso on, do you?
No, I just got long the New Zealand dollar, though.
Oh, okay.
It's
All right.
a long play. I like that.
Oh, all right.
Mark it up.
Yeah.
Upside here.
Absolutely. So that's what we're looking at here. A few other takeaways. You see that US dollar Japanese yen 10-year note correlation starting to pick back up, nearing negative 0.5. Historically, that can be even higher, but a couple months ago, that was near lows. So that's starting to pick back up. So a pretty interesting
dichotomy there of
absolutely
good word to use. Yeah.
Great word.
Yeah. Okay.
But no, just gives you
great it is, but all right, I'll take it.
A little bit of a snapshot of what has been moving with what, and then you can take this analysis deeper and say, historically maybe some assets move with gold more than they have been if you're looking to pairs trade that to come back together. A lot of rabbit holes to go down, but thought it was an interesting first order takeaway to tell you guys that New Zealand dollar and dollar peso, the most correlated to S&P 500 if you're looking to diversify your portfolio, get into the spot FX game. But
What do you
bring
think
up
about some of the non-U.S. pairs? Like, I'm looking at Euro Aussie dollar. That's kind of like, that's had a huge move over the last month or so. Are any of these interesting to you?
It's an interesting one to me that's moving today is this Aussie yen that's starting to pick back up. If you combine the thesis of
This Aussie New Zealand dollar.
Yeah, that one's
That's a scary chart. Look at this thing.
and that's exactly why. That's exactly why you said you just got long that New Zealand dollar, U.S. dollar. That one a bigger extreme to the downside. So looking for that's been lagging a bit. But if this correlation is to hold up, and you see some longer term build back up in the S&P 500, then maybe from a magnitude basis, New Zealand dollar has more room to catch up than that Australian dollar, which has already been structurally pretty bullish.
Face ripper. Aussie dollar is up against everything.
Exactly right. So if you want to play that Aussie yen is kind of, if you don't think the yen will ever get off its back, but you think risk sentiment will improve, then you could still see, mid-March we were 200 pips higher there. So perhaps some room there.
No more yen. I'm done with the yen.
No more yen.
I've sworn it off. I won't trade it again. You bring it every time, though.
I tried to warn you about the yen.
I know it stinks. It's the worst. The worst. I'm done with it.
It's a tough. It doesn't seem to have any rhyme or reason to it. It just continues to go lower. It's such a hard sale because you think you're selling the low tick only for it to keep going lower. It's arguably one of the hardest products to trade, in my opinion.
But you're
relatively low implied volatility because currencies have low implied volatility. They might have the highest of the lows, but low implied volatility and just a stair step down, it makes for a tough trade.
What about Swiss franc?
Yeah, that's a pretty interesting one because recently it's been moving. It's been moving Swiss franc more as kind of a risk-on currency when we start to see widespread dollar weakness away from this safe haven bid. That's when we're starting to see bids back into the Swiss franc. That one is coming off of really historic lows, and there were fears earlier in February, start of March, that was honestly, their currency was too strong for the tolerance of the Swiss National Bank. And so I think that played a role in further gains there. Now a lot of pressure has been
it's back to
taken off.
It's been the last years.
Exactly. So back to the chop that we've been in since the June of 2025 around this 0.8 level. So there's absolutely a case where you think there are more buyers for Swiss franc here now that there's no kind of currency intervention risk or or less currency intervention risk from their bank, and we start to see reversion out of this dollar demand that we've seen for a month now. But then it depends on your time horizon too, because you could absolutely see these flows change over time when we get to those more emerging exotic pairs like the South African Rand, which is
that was a fun one.
Rand is up 1.5% today. That one might snap back with risk sentiment, but if bigger institutional flows are not as bullish on the future of emerging market currencies over the long term, then that can start to eat at their gains, and you could see dollar demand regardless of risk sentiment. So a lot to look for this week. Should be a good one. Full week.
A lot to look forward to, and I'm looking for. Well, you're doing something. Are you doing equities? It looks like.
Yeah. I'm just
a lot to look forward to, but I'm going to have to do it without you.
What?
I'm going to have to look forward to it without you. I'm going to have to let you go now, and I'm going to have to go too. So we can take a quick 90-second break. What'd you do in crowd? Is that a new trade?
Closing. Took like $200 out of it.
Very nice. A little bit of a diagonal trade again.
Yeah.
And did you do something in SPX also?
Oh yeah, that was so I did a wide iron condor. I think I did it on the close on Tuesday. I took $200 out of it.
Very nice. And SPX with volatility in by 60
So I
cents.
did that for $16.55 on the first. I just closed at $14.50.
$14.55. Good job out of you. That's volatility and a little bit of price movement to the upside. Even the S&Ps are up 13 or so. But volatility in by 60 some odd cents, a 2.5% move. Good job out of you, my friend. We are sitting here where I thought we would kind of maybe stay until noon. And then we have a little bit of craziness with the market, with the president speaking. I don't know. Oil sitting at 111. Nat gas was actually down just a moment ago. It's up by $0.015. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
We got Liz and Tony.
Is it Liz and Tony or Jenny and Tony? Liz and Tony?
One of the ladies.
One of the ladies. We'll be back in 90 seconds. We got Tony from Mexico coming up next. You're not going to want to miss that. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show with one of my favorite people on this planet. He is giving up an hour of his time again for 2 weeks in a row. I want to give a warm, tasty welcome to Tony from Mexico. How's it going, Tony?
Hey, Liz, how are you? How's everything?
It is wonderful to see you.
Thank you so much.
How was your Easter? How was your Easter? Did you guys
My
have
Easter was good. We had a lot of food. I had my sister. We had family, friends, aunts, the dog, everything.
Oh, the whole kit and caboodle was there, right?
The whole kit and caboodle, yes.
That's wonderful. Do you cook or does your wife cook?
No, my wife cooks. And she did. Do you know, have you heard of a tan pequeña steak or no?
No.
So it's a regular filet mignon. And then you put it on the side and you grab a knife and you start slicing it until it becomes like a thin.
Almost butterflied?
Even more than butterfly. It becomes like a thin strip. So it cooks really fast. And it's very soft. So she did 14 of those by herself. Oh my God. It's a lot of work.
She's amazing. I love her.
It's a lot. It's a lot.
I can't wait to see her. Yes, that's a lot of work.
It's a lot. But people like filet mignon, and this way it cooks really fast. It's really tender, and it's a pain, but she did it. Yeah.
Well, it sounds like a wonderful time was had by all.
Thank you. Thank you.
Okay, so Tony, I want to say thank you for filling in for me last week. And Jenny, of course, is thanking you for filling in for her because our spring breaks didn't align this year. So while we're on this show, I love taking advantage of your knowledge because, and this is very true. Every time I tallied it up, you and I have done 7 shows together, and I think it's been 7 hours that have changed my life because every time I'm on a show with you, I come out a better trader.
Well, I don't think so because I've learned a lot about from you and from Jenny, and I always enjoy it. And I learned everything that I do from Tasty, from Tom, from Tony, from you girls. So it's a mutual thing, and maybe I'm focused on a different things than you guys, but we all do very similar things. I think.
You know what? I think you're right. I think we do kind of all come from the same, kind of the same beginning, but you're a little bit on the different side too. Number one, I know you have a very large account, but number two, you're not doing the live show on a daily basis, right? So you can actually look at it more from a portfolio standpoint than I've got to place X amount of trades per day and kind of engagement.
Yeah, I agree with you. I look at it as mainly as my dad used to say, I only want to get rich once. So I look at it from a capital preservation point. Of course, we want to make money, but we don't want to risk the kid and caboodle by doing it,
Absolutely. I love it. So what did your dad say? I only want to get rich once.
Yeah. When I told him, hey, Dad, this is going to make us rich, I said, no, I'm already rich. I don't want to be rich again. That's how you stop being rich. So
that's true. That's true.
Yeah.
All right, so we're gonna talk today a little bit about, and I don't want to put words in your mouth. We're talking about maximizing investments.
We are about how to, being a trader and investor is not the same thing, and we all are limited by certain things, mainly our capital, etc. So that's what I want to touch about today. And before that, I wanted to mention something weird that I saw Friday. I don't know if you noticed that. Did you feel the market change Friday?
Yes, Friday was definitely a bizarre day, especially because, I'm an addict, Tony, so I immediately go straight to my platform, and it's very bizarre when only a couple things are open.
Yeah. So Friday was a big change for me. So the S&P and oil has had a negative correlation since the war started. And Friday, something changed. And oil shot up tremendously. And the S&P went up. So to me, it was a dislocation, a change. I'm always looking, the market is always correlated to something. Sometimes when I was growing up, it was correlated to the yen, then to interest rates, then and recently to oil. And when that thing that's keeping the market tick by tick changes, we have to take notice because, I cannot trust the oil futures now to give me direction. So that scared me a little bit because I'm losing my indicator right now and I have to find the new one. So
Tony, we were, Jenny and I film on the CBOE trading floor in the SPX pit on Tuesdays and Wednesdays. And one of the traders down there was talking to us saying that VIX is, oil is the new VIX, meaning, keep an eye on it. And to your point, and I love that you brought that up, saying that they were kind of, anti-correlated, right? So when one would go up, the other would go down. And you saw on Friday that they kind of both went up together.
Yes.
That is pretty telling, right?
It's pretty telling.
Indicator. Yeah.
It's telling and it's scary. Look, oil is 111 and the stock market's holding up. So, that we have to listen to the market. And so the market's telling us something different. So that's my observation for the day.
Tony, I always say the market is like a toddler, right? So you can't fight the toddler. You had a bunch of people at your house. I don't know if you're done with little kids, but every time I would tell my kids, get dressed, we're going, get dressed in nice clothes, we're going out. You'd turn around and one of them would be covered in mud or one had like something on him. That's the market. You never know what they're going to do or how you're going to get out of it. So it's pretty interesting. But let me ask you this, because I've got you, before we get into the topic, where do you think oil is going? And do you think that you think oil is going way higher? Yeah,
I think so. Until we have a resolution. Tomorrow, everybody and the grandma thinks tomorrow the war is going to end. So everybody's leaning short oil and long futures, S&P futures. So I don't like it when everybody's on the same page. Maybe it does happen. Who knows? I hope so. I can't wait for oil to go down because, I'm paying over $6 a gallon here in California.
Oh, yeah, California.
$6.20 yesterday. So, if you want to go to the supermarket, it costs you like $80.
This is what I think is the craziest time is you're right. Everybody is leaning in that direction, thinking that when it comes to an end. And I laugh because because I was at Easter yesterday and when my brother says it, I was like, oh no, that means everybody's doing it because he's not a trader. So I'm kind of on the same page as you.
Yeah,
but excellent. Pretty interesting. All right, Tony. So let's jump into how we are going to maximize capital and investment.
Yes. So everybody watching us watches the show mainly for a couple of things. I think to make more money, to invest their money more wisely, or to reduce the risk, or who knows why. But mainly it's about improving themselves as an investor and a trader, right?
Correct.
So
100%.
in order to make money, we need three things. Number one thing that we need is capital, because you cannot invest if you don't have capital. And capital is shown to us in our trading accounts by, buying power, right?
Correct.
So when you put money in your account, you're assigned X amount of buying power. So that's your capital. And normally that's the number one constraint that people have is their capital. The more capital you have, the easier it is to trade, believe it or not, because I can trade more stuff. I can put on more trades. I can trade more often, more products, everything. So capital is one of the three things that every investor needs to make money. The second thing every investor needs to make money is time. Because, if we put in a trade, we need time for the trade to develop, right? If we invest in a company, we need time for the company to execute correctly and perform their business plan and make money. And so, unfortunately, all of us have negative theta, so we need time to able to make money. That's why young people have one of the most valuable assets. Of the three of them, they have more time, and sometimes we waste our time in investing. I was looking the other day. I don't know how much time I have left, so I was looking at a long-term investment. I said, "No, I'm not going to be here to." Why? No,
Come on, you're going to be around for a long time.
Yeah, hopefully, but I don't know. I don't know.
The one thing that you have taught me, and I believe this was a couple episodes ago with you and I, was that looking at it, because the stuff, I love that you brought that up, that, you need the capital and you need the time, but the time that you invest in a lot of companies, you're a serial entrepreneur. And that is literally, if you Google serial entrepreneur, I'm pretty sure it's your picture that comes up. But
I think my dad and Tom Sosnoff.
Okay, so. Well, you're right there in there. But you're right about comparing this to investing in a company. When you place a trade, you need the time for that trade to actually make some profit. Just like if you invest in a company or create a company or start a company, nothing is instant gratification. And if it is, that's probably something wrong with it.
Definitely. And the third thing, you need capital, you need time. The third thing you need to make money is knowledge. And why do people watch Tasty Live? They watch it because they want trading knowledge. Why do people go and get their MBA? Because they want business knowledge. Why do people watch business YouTube channels? For knowledge. So knowledge allows us a lot of things. It allows us to evaluate the investments. It allows us to understand how to perform an investment. It allows us to, without knowledge, we will just be idiots. And so let me tell you, when I started trading, I think you know the story. So I always was a straight A student, always, everything I did was successful. I started trading. I said, how hard can trading be? So the first year trading, I lost $400,000 when $400,000 you could buy a couple of homes here in California. And my dad told me, you're an idiot. And he was right. And so I lacked the knowledge to do trading. And that's why I think it's very valuable what Tasty's doing and what, you guys are doing. And Tom and Tony have been doing it for decades, just giving their knowledge for free for people to learn. That's unbelievable.
And you have as well. You've taken under your wing, I know, quite a few traders. I know you've had groups with your son and his friends and things of that nature. And it is because it is the knowledge is out there, and it shouldn't be charged to yeah.
Yes. And this year, Liz, I've been obsessed with, trying to maximize my investments. So now that we learned the three things we need to do an investment, let's think about the four things, how to score an investment.
I like it.
And if that investment is good or bad. And I'm sorry to make this list of things, but
I love lists.
So how do you score? You're a very smart girl. So how do we score an investment? Number one thing that I do to score an investment is called capital preservation. And capital preservation, in simple terms, is what is the probability of this investment going to zero?
Oh.
So if you buy a multifamily building, the probability of that thing going to zero, I think, is quite low.
Yeah,
right?
very low.
If you buy a biotech company stock, the probability of that company going to zero is not that small.
It's not like buying a multifamily unit, I'll give you that.
Right. If you buy the S&P 500, the probability of it going to zero is low. But if you buy a crazy stock that's a new company, it's higher. So first of all, what is the probability of that thing going to zero? And when we put in a trade, sometimes a lot of our trades have a, 20-30% probability of going to zero, of losing everything. So that's not insignificant. And that's why one of the important things in trading is not risking the farm on a single trade. That you girls always promote trade small and trade often, because capital preservation is very important, because making, saving capital, building capital is very hard, and losing it is very easy. So the number one thing that I look at is, what is the probability that I'm going to lose my shirt? Right. The number two factor that I look at, I know it's boring, and it's tax efficiency of this investment.
Ooh.
So I have a lot of friends who make a lot of money a year. And what they do is, for example, they have a $20 million tax bill. So what do these smart people do? So what they do is they buy an airplane. They go and they buy a huge building and take the accelerated depreciation and try to offset the tax implication that they have. In trading, we have some vehicles that are more tax efficient than others. Like if you trade SPX, NDX, etc., the indices, some of the profits that you make during the year, they're considered long-term capital gains, and they're taxed differently than short-term capital gains.
I'm so glad you brought this up. Yes, keep going.
So that's an important factor when making an investment. We've all heard about buy, borrow, die, and that's how rich people, they never sell anything. So they buy an asset, and then they borrow against the asset, and lastly they die, and the kids get their stepped-up basis from the asset. So they never sell. So that's a tax-efficient way of looking at and investing. See? The third thing that I look at, so we looked at capital preservation, we looked at tax efficiency. The third thing that I look at when I do an investment is the cash flow. If you buy a multifamily building or a rental, the rent from the units is your cash flow. If you buy AT&T stock, the dividend from that stock is your cash flow. When you sell a naked put, the extrinsic value versus your buying power reduction is your yield, is your cash flow.
Correct.
So that's a very important factor for me when I put in a trade or I do an investment. Is that investment going to yield any yield? There's some investments that have no yield, right?
Right.
You buy a tech company that doesn't pay dividends, you're just going for capital appreciation.
You're just waiting prayer, you want it up. Correct.
Exactly. But I at this type of my old age, I always want something that gives me some money back, right? And that's why I like selling premium, and because premium in essence is renting your capital for risk.
And I know you have a fourth one to go through, but I wanted to talk about, you were talking from very large account sizes. You're talking about a $20 million bill. And I love that. I love that $20 million tax bill, and everybody aspires to be there. So I love talking from this perspective. But one of my favorite things about this discussion is it can be taken down to a nugget size as well. I've got my son with you in mind, thinking it's the same thing as real estate. If you want little bits of cash flow, he got a $5,000 account last year. My daughter's about to get hers, and taking that and being like, okay, from this perspective, it's the same thing as if you bought a tiny little sliver of a building and you're getting cash flow from it. It's the same concept. You can take it down to whatever nugget size you need to.
my son who loves the oil business, he purchased a fraction of an oil field in Texas from this huge company, Apache. So he's getting, a couple $100 a month, but he's in the oil business now and he's getting cash flow. And, now that oil shot up a lot, his $200 is all of a sudden like $280. So
his timing is amazing. I love it.
well, he should have bet the farm, the oil field, but no.
No, capital preservation. Capital preservation. You can't bet the farm.
So we saw capital preservation, we saw tax efficiency, we saw cash flow. And at the end, we're going to talk how to improve each one of those. And the fourth and important part of how I analyze an investment is, does this investment grow in value with time? So, this has been very distorted recently because the government's printing so much money. All the money that gets printed, unfortunately, ends up in the financial markets and in the asset markets. So sometimes things go up in value, but they really didn't go up in real value. They went up in nominal value. And that's something that's scary for people. I have a neighbor here in Hoya. He told me, Tony, I bought my home for $280,000. Now it's $6 million. I said, okay, great. Let's do this experiment. Let's divide the $280,000 between the price of an ounce of gold back then, and now let's divide your $6 million into ounces of gold right now. So to make the long story short, Liz, he could turn his house into double the ounces of gold when he bought it than right now. So in nominal terms, that's why we're playing with monopoly money. In nominal terms, his house went from 280 to 6 million. But in gold terms, which is real money, he lost half of his money.
That's amazing. I'm sure he was not even prepared to have that type of a discussion with you.
No. And the worst part is those fake profits, they're not real, because if he sells the asset, he's going to lose half of that to taxes.
Taxes. There you go. He's going to have to go buy an airplane.
So, so it's horrible. And we need investments that grow in value with time. Now, if you buy a rental building, it should go up in value in time. If you buy Apple stock or Nvidia stock, it should go up in value in time. But when we put on a trade, normally our trades do not go up in value in time because they expire, and we only have the yield. So this is where trading and investment, I think, separate themselves. All the trades that we don't do them for capital expansion. If we buy stock and hold them, then yes. But in our trades that we put on for 45, 60 days out, those have no growth. They know what you're going to make.
You've locked in what you're going to make within a certain time frame. Correct.
Yes. Unless you do a SPX box trade, then the growth is already built in there, right? Yeah. So these are the 4 ways that I would encourage everyone listening to score their investments: capital preservation, tax efficiency, cash flow, and growth. And like I said, you need 3 things: capital, time, and knowledge. Now, if you'd like, so I'm obsessed with these 4 things, and I want to go with you because you're very smart, and maybe I'm going to learn stuff that I've never thought about, and I want to go through with you and look at a trade in using these lenses.
I love it.
What do you think?
I love it. I am 100% in. So okay. What I'm gonna assume we're going to the SPX.
Well, yeah, we can go to SPX, SPY, MES. Last time I went to what did I do with Jenny? We did SPY. I think.
SPY, yeah. No, I did love what you said too. I love all of this, Tony. And like I said, I'm going to walk away a better trader because you're a very methodical trader and you're a very good teacher. You're walking through good steps like this. But I did love what you said about the cash, the tax efficiency of SPX and NDX. Yeah. It is something that a lot of people. We were on the road. We've been on the road for a long time. There are my album covers behind us, and we ran into so many people that have been trading for years, and they say at the end end of the day, SPX, they wind up just trading the SPX because it kind of fits a lot of your mantra in the fact that, is it going to go to zero? It's a basket, right?
Yeah.
No, and it's very tax efficient.
Yeah. So let's look at a simple trade and a short naked put on SPX.
Okay. So I'm going to assume 45 days till expiration.
45 days. We can go, 60 days, whatever you'd like. 45 days is great.
It's pretty liquid, so I'm going to go to 46 days. I mean, meaning
46
usually
days is perfect.
we try to stay with the regular monthlies, but I'm going to go with 46 days.
Right. So the reason why we don't buy premium, let's say we go to our 16 delta.
16 delta, you got it. I'm going to go 16 delta put or call. Call.
No, I don't know if you remember. Calls give me a stomach burn.
I know. The 16 delta put. I'm going to go all the way down to 16.
I've heard of calls, but I don't touch them very much.
I naked calls and I do not get along as well.
I heard of them, but So
my biggest losses to this date were with naked calls.
Yes.
Naked short calls. Gotta say that.
Yeah.
Okay.
So if we buy that 6050, we have a 16% chance of this trade going to zero, right?
Correct.
So on a capital preservation basis, that's not a good trade, right? So I wouldn't buy something that has 85% chance of disappearing. Now, tax efficiency, this has negative yield, right? And it is tax efficient because I can take my losses for SPX. So all of a sudden, this trade doesn't make sense.
No,
right?
It's funny. It was hard to press the button to even show it.
It is hard. Yeah, it is hard. It is hard. So, but if we sell it, the probability of this trade, for me, going to zero is losing our shirt, right? The probability of this trade of us losing $600,000, like the platform is saying, I think it's very low, right?
Well, it is very low because that is saying it's going to zero, and we've already kind of established that things have gone. If this goes to zero, we've got bigger things to worry about.
If this goes to zero, I mean, forget it.
That's what TP has once told this to me when we were doing a show. He said, if this goes to zero, we're worried about shelter. So
exactly. But on a capital preservation basis, this trade is much safer than if we sell the 6600 put, right?
The 6600 put, correct. Let me go to the 6600 put. In the money put, so 6600.
Or 60, right at the money.
Yeah, there you go.
Yeah. So that trade is much riskier, right? And it has a bigger risk of us losing a big amount of money than the other trade, right? I think we agree on that.
Correct. Because it's nearer to the at the monies, it's a little bit riskier of a trade, correct?
Yeah, but in the other factor that we use to analyze trades, this has a much bigger yield than the other trade, right?
Correct.
So this thing is yielding 175 divided by, I'm going to say 9,000.
Yes.
Right?
Buying power?
Yeah.
Well, so you're looking at buying power in a portfolio margin account, is my guess, correct?
Oh, how much is it?
This is 131,000. That's why, you know what? Should we go to, let's go to
SPY.
let's go to SPY. Okay, I understand what you're saying, but this just for people to kind of understand the numbers.
Of course.
Yeah, so here I'm going to go to 46 days. We'll be very honest there. And I'll do the same thing. So I'm just going to do the at the monies. So here it's $13,000 to make 1,700.
So 1,700 divided by 13,000. So the yield is around 13%, right?
Yeah, it is.
For 45 days. It's crazy, right?
Yes.
If we go to the 16 delta, the same one that we had, the 605.
Delta, yeah, so 605 right here. So what we did is we cut everything in a tenth. So here you're making $578 and putting up $7,000, almost $8,000.
Yeah, but that $8,000, it's good that we showed it. To me, it's fake because if we go crash down, then this buying power is going to go to 13,000.
It will. Yes, it will.
So let's in order to keep things fair, I would divide that by 13,000.
Correct.
And now it's a 4% yield, right?
So you went from 17 to 4%.
to 4%, right? And we went from 50% probability to 85% probability.
Yes, for every gimme, there's a gotcha.
Exactly. So these are two of the factors. So I've been obsessed for the last 7 months, Liz, trying to find. So there's somewhere in the middle is the sweet spot, right?
Okay.
So number one factor that I have been looking out is distance from at the money.
Okay, so this one is when you're looking at the 16 delta, you're at one standard deviation that seems pretty far from the at the monies versus the exact at the monies.
So we are $50 from at the money, right?
Yes.
So we can agree that the further we're out of the money, the safer we are, kind of.
Kind of, but the risk reward scenario, to your point, is much less. So would you rather be safe or would you rather make the money? Because either way, the risk is the same.
That's exactly what I want to get there with you. So one factor is distance from at the money.
Yes.
Okay, that's one factor that I look at. Second factor is yield.
Which is the 4% versus 13%. That's or 17%. That's kind of what we just looked at, right?
Exactly. Now, what other factors do you think are important for us to look at here?
Well, what I loved that you did is you kind of isolated one thing, saying that no matter what, you use the at the money buying power effect. So I like that you threw that out, because a lot of times people will look at the buying power effect of it. But you and I both know in worst case scenarios or lose our shirt scenarios, both of these would lose money. If the market crashes, no matter where you put your put, you're going to lose money.
Definitely. You're definitely going to lose money.
So you threw out the buying power effect, which I kind of liked. But I think the balancing act has to be break evens. Like how far, how much, what pain tolerance are you willing to take? Meaning if I split the difference and went to, let's say, a 35 delta, you're kind of splitting the difference in the fact that your buying power is still the same. You're getting $1,200 instead of $1,700, but it's going to move your break even farther than that at the money. That's just my guess.
Yes. Another factor that we talked about investments is time, right? So if we go shorter in time, I think we have less risk, because if we go further in time, options are worth more. That means there's more risk.
Yep.
Right?
Yes. So have you been going nearer term, Tony from Mexico?
No. I'm just putting the factors that I look. So one factor is distance from at the money.
Okay.
Number 2 factor is yield.
Yep.
Number 4 factor is time. Yeah.
Yes.
Number
correct.
4, 3 times. Number 4 factor is probability of making money.
Okay, which is down here. Here's your pop of 70% versus P50 of 85.
I have 4 factors right now, and I want to chat with you if there is something else that I think I should look at besides the distance from at the money, the yield, the time, and the probability of making money.
If you're going to look at all 4 of those, I think that's a fair comparison. But I almost think, Tony, that this is a choose your own adventure, because you might put your credence on something more than somebody else, and I think it might have to do with a little bit of account size. Some people might be a little bit more conservative, but I think those 4 factors make sense, and I think, kind of to your point, there's a happy medium between all of them. One's more aggressive, one's less aggressive, but you kind of gotta find that sweet spot.
Yeah, there's another factor that if you change the column that says open interest to IV, implied volatility.
Implied volatility. Wait, it's in here somewhere. Oh, there we go.
There we are. So, the implied volatility is also an important factor that we should look at. And it's not as clear to people as you think. On the put side, implied volatility of puts expands the further you're out of the money.
In a regular skew.
Yeah, in a regular, the volatility smile, right? Yes.
So in SPY, in SPX, in NDX, in all of those, ETF situations, you're going to get this regular volatility. Whereas what Tony's saying is, as the strike gets lower, you can see that the 640 has a 21% implied volatility, and the 630 has a 22%, and it will get larger as you go down in strike.
Yes. And then each of those puts has delta, gamma, theta, vega, etc.
Correct.
So all these Greeks, for some reason or another, they mean something. And they're all different on each strike. So I've been obsessed. So these are my 6 things that I've been looking at. Bliss. How far can I get from at the money?
Okay.
Maximize my yield, reduce my time, increase my probability of profit, be protected with the least amount of implied volatility, and have the Greeks hurt me the least.
You're killing me because I feel like there's an answer that you're going to tell me like the
No.
right
There's not like a magic answer. So I've been obsessed with a couple of friends doing this analysis, because hidden on this option chain, there is an optimal trade.
Oh, you're killing me. Okay.
Now, the good thing is I'm not smart enough to determine.
Yes, you are.
So I've been playing, I didn't know what an algorithm was, but, and it's just a mathematical formula. So I've been trying to create an algorithm that will tell me which is the best trade.
And what has the algorithm spit out yet? Because, okay.
So, the algorithm changes every hour on the hour.
It does? Now, if you were going to choose, if you're walking in right now and you're going to take a look at all of this stuff, so you're taking a look at the at-the-monies, we're in SPY, the implied volatility is high, we have an IV rank of 57, so all things lead to selling premium. Yes. You're taking advantage of all of that. You open it up, and Tony, one of the smartest traders I know, opens this up. What put strike would you land on?
So I'm looking at my algorithm that I'm running it right now, and I'm going to share with you. I don't know if I could share it or I'll tell you.
Yeah, I think you might have to tell me because I don't know that we can share it.
Let's go to 30 days out because I have it right now.
Okay, perfect. Because time was number 1, right? Time was number one. So let's go to 30 days out, which is you kind of alluded to that fact that the less time you have, I think a little bit less risky because it could go wherever. I'm going to go 32 days. Is that okay? You have 32 or 39?
30, May 8th.
May 8th, perfect. Okay, 32.
May 8th. And the magic strike that I'm looking at right now is the 627 strike.
627. Okay, let's take a look at this. I love it. So you're going to the 627. This is a 25 delta.
Yes.
It's very near to where the expected move for the cycle is.
It is.
Yes.
It is. So, and it has a nice yield.
You're getting your common sense slide kicks in. $700 by putting up is a decent yield, to your point.
Yeah. It has a win percentage of, I would say, 76%.
Yep, you got a 79% pop, and you have a 70, almost a 90% P50, meaning probability of taking 50% of this.
Yeah, and we have a buffer of about 32 points of protection.
So is this, and when your algorithm does this, it spits things out at different metrics, because what Tony's saying is he's got 32 points. The volatility of SPX, which is the 23 for the cycle, is saying that that SPY could be up or down $31. So this is a conservative, but you're getting enough premium for it.
Yeah. So, we're in the age of AI, right?
Yes, sir.
So I was thinking, so I'm looking at this with my formula because each formula you can make it spit out whatever you want. You could put in more weight to distance of the money or more weight to yield. And if you change the weighting of your 6 parameters, the result is going to change, right?
Correct.
So I have 2 girlfriends, ChatGPT and Claude. And every time I run my algo, I ask my other 2 girlfriends to tell me, what do they think?
Do they get along? Do they come up with
sometimes they do match. In this case, I'm looking at it. This I just ran it, so I haven't had time to see it. So my girlfriend Claude chose the 620 strike.
Oh, okay.
And my other girlfriend ChatGPT chose the 625 strike.
625. Okay, so they're close.
They're close. So at least I know because, computers they can see stuff better than we can, right?
Well, they're just objective. They remove all emotion. Yes. And I think no matter what, at the end of the day, we're emotional people.
So I got obsessed. Last year I went with Tom to Mexico City. He gave a speech. And he gave a speech that really hit me hard because there's two people I've always admired in my business life, Tom Sosnoff and my dad. And the two hardest people I've ever seen in my whole life work is Tom Sosnoff and my dad. And Tom is unbelievable. And when he said that we should use AI to help us find the best risk-reward trade possible, I said, geez, we should use AI for that. But I also have my own way of trading, right? And I value yield and return. So that's why I've been working on this for many, many, many months. And I want to use what I think is correct and then check it with my other two girlfriends that have a chance to check everything. So I really went deep into the the rabbit hole on trying to see which is the best trade that I can place. And why is this important? Because like when we started talking, we only have certain amount of capital, certain amount of time, and certain amount of knowledge, right? Correct. So in order for us to make more money, we either have to risk more capital, risk more time, right? Or make our return, our investment return a little bit more, right?
Yeah.
If you have a multifamily building, the way to make a little bit more money is maybe raising the rents from $1,100 to $1,200, right? And for us premium sellers,
but kind of to show that it would be if you needed to raise the rents, you're almost taking a little bit more risk, right?
Exactly.
So I just kind of changing it into trading perspective. Your girlfriends are coming up with these strikes, but you can tweak them to your will, right? So if they're coming up with the identical strikes, you can say, well, I need to make at least $750 instead of $580.
Yeah.
You can tweak it.
Yeah. So you have to put how important is the yield to you? How important is the distance from the money to you? How important is to be low Vega? So that's each person is different. And maybe a lot of people don't even know what they want, right?
Yeah.
But you know what you want. I know because we've been trading a long time. So if I can make a few percentage points a year extra with the same risk and just getting a little extra yield, I always trade for 1.2, 1.5% a month, right? This first 3 months, my portfolio did 5%. And normally it should be 3.7 to 4%.
Right.
So I've been trying to make a little bit more, but that little bit extra at the end of the year could be a huge number.
It does. Well, it's all going to add up at the end, because if time is on your side at the end of the year, that's a lot.
It's a lot. And if things go bad, if my trade is better, I might lose a little bit less, right? Or I can recover faster or something, because, like I said, I only have certain capital, certain time. So I wanted to improve my knowledge to increase my returns.
So now and I love that you're taking a deep dive into this. I really do, Tony. It's kind of fascinating listening to you talk. But I'm assuming, and you have such a business mind looking at it more. And I love that you compare everything to real estate, because that puts it into perspective for individuals when you're looking at this from the mortgage in, mortgage out. But I'm going to assume, and I shouldn't make any assumptions, that you're trading like this, but not all of your capital is doing this. Or are you taking everything and saying, okay, I'm going to do this? Or are you still peppering the infield with lots of other different things?
So on my trading, my personal trading,
yes,
I would say yes. But I sell premium, so I'm just trying to maximize my premium.
Right.
Yes.
So I know this answer, and I'm going to let you finish. I should just let you finish. But do you ever sell call spreads on top of it? Spreads. Notice I said spreads, not to increase your profit potential. If you're 32 days out?
So call spreads are really I don't know if I could say the word crappy, but they're crappy.
I love it. You can do anything you want to.
So that's why with Jenny, I showed her a deep in the money call spread, like the box.
You were buying it, correct? You were buying.
I was selling it. So, for example, if I want to sell puts, I would go to, let's say September.
Okay. Now, this is not using your girlfriends. This is just
using my stomach.
This is Tony's. Okay.
So where am I gonna sell puts? Here I'm looking at this, and I think I'm gonna sell puts between 550 and 600, right?
Yep.
Kind of.
Right here. Let's go 585. Right? What do you think of that?
Yeah, I think that's the area.
Okay.
So what I would do is sell that call.
Okay. Sell the put.
No, call. We're gonna.
Oh, okay. We're gonna flip the cards over. Got it. Sell that call.
We're gonna sell that call. And can you change implied volatility to extrinsic?
I can do anything you want. Hold on.
Thank you. Sorry.
I love it. I love it. I just can't.
I get in trouble with my wife. Why did you tell Jenny do this, do that? I said, "Gee, because my hands are tied. I need her hands."
There you go. There's your extrinsic. So you've got 21.62 in extrinsic.
Right. But to tell you the truth, that $21, I don't want to make money on that $21. So I want to waste it. I want to use it to protect my butt. So, we're going to go and buy something that has $21 of extrinsic.
Now, do you trust the EXT versus using the put? So you'll
yes, right now it doesn't match because
interest rates, dividends, all that,
everything. Yeah, I that put works, but not very well, I think. But let's do the math ourselves. What's the theoretical value of that? 93, right?
Yeah, correct.
Let's reduce 93 minus 657.
Yep.
It's 564. And then minus 585, which is the strike.
And you're going to get, that's the math. You're going to get about
$20, right?
Yep, about $20. That's what I was going to say. So a lot of times on the show, we'll say the extrinsic value is the same for the calls and the puts, but when you're going out so far in time, it doesn't match up with all the interest rates and dividends and things of that nature.
Yeah, and the computer, thank God, you don't need this stupid calculator. It shows you.
That is an old school calculator, Tony. I haven't seen one of those in years.
And it's solar. So
okay, so
if I lose this, I die.
That is so cute. I love it.
I have four of these. So just in case this one dies.
I just imagine them in all your pockets, just in case.
Yeah, exactly. So
So we're going to take this extrinsic value, and I'm going to go buy that same extrinsic value. So we've got 22. Exactly. I'm just using the computer that they've got right here, what they did. So 22. So I'm going to try.
Buy the 690.
690. Got it.
Yeah. So there you go.
So, and this is a kind of a capital efficient way to do it. You're only using $3,000 for a $7,000 hedge.
Right. And this lets me sleep at night, and I can sell puts against it. Boom, boom, boom.
Right. So you're kind of it's a big hedge, but you can say I'm going to assume you're selling more puts against this than you are call spreads, correct?
Normally,
you're not 1-for-1.
No, minimum 2-to-1, and I've gone 4 to 5 to 1. I mean 4 to 1.
So yeah, keeping this on, meaning I'm just going to kind of show what you're saying, so just to our viewers to make sense. So Tony's using the call spread as a hedge against what would be, and I'm just going to do the 590 for simple purposes, and I'm going to go. So but
I wouldn't sell this one. I would sell the 45-day out.
The nearer term, right? So you're going pretty far out in time for your hedge, and then you're going to go into. We were in the 30-day with your girlfriends. Do you want to go back to the 30-day?
Yeah, 30 days fine.
Okay, and then so you're going to sell puts against the 30-day, and we were looking at the 425,
the 627, 620, something like that.
Yeah, we'll go 628, and selling maybe 4 of these against it.
Yeah.
So you're initially taking in a credit.
Yeah.
Which is great. And then you've got the hedge so you can sleep at night. And then your call spread is so far out in time that you can do multiples of these, meaning like once the May rolls off, you might go to then June and July because that call spread you have is all the way out until September. It's pretty cool.
Like right now I have 64 calls, and I have 192 puts.
In
units.
September?
No. I have 64 short calls in December right now. And this is my real trade.
64 call spreads?
Yes, and I have 192.
This is why I love doing the shows with you.
Exactly.
Okay, 64 call spreads and 192 short puts?
Yes.
Okay. So, ladies and gentlemen, everything that Tony does can be taken down to a nugget size, but he is the best of the best.
You can do it on MES. But the whole thing about this, I have to put it on a piece of paper. But last week, I have to be truthful. So I reduced 3, 6, 9, 12. So I went from 192 to 180.
Okay, so you took some, when we had the up move, you took some profit off.
Yes, I did. And to tell you the truth, this has been Goldilocks.
Right? You didn't change the hedge, did you? You just left the hedge there, but
no, the hedge is there because I don't have. It's too much time.
Yeah.
So the hard part about trading is we were down so much. I was making so much money in my hedges that when do you take them off? That's the hard part.
That is the age-old question. You put it on for a reason. When do you take the profits on it?
Yeah.
Or do you leave it? What do you do with it?
So what I did is I used some of the extra money that I made and moved the long calls down.
Oh, good.
Yeah.
Okay.
And I bought, well, actually, I didn't move them down. I left the ones originally, which the original ones that I had were the 705.
Okay.
And I bought some I think, let me see what I bought because I read them there. I bought the 685s.
So you left the 705s and bought the 685s, taking more risk off the table. So that's an interesting move.
Now I have more long calls than short calls.
Then you have more long calls than short calls. And that's what you did into the move.
Yeah. Because I'm more scared of the upside than the downside.
So I think a lot of people are more scared of the upside than the downside, Tony, and it is kind of scary. But I love that. This is an interesting way to look at it too. You're utilizing the best put strike you can get, and you're going nearer term and doing multiple cycles of it, and you put your hedge farther out in time. But I love that you actually did something with your hedge when it was profitable, because that's the age-old question. It's there for a reason. Do you sit on it? Do you do something? Do you adjust it? You took what the market gave you and did something with it.
What I did, I made sure I don't lose money. That $3,000 that we showed, now the way I have it, I won't lose money if we rally.
If you rally, which is great.
And I would suck up all the premium on my puts and have a Merry Christmas and a Happy New Year.
You suck up all the premium on your puts, and you would have more puts to sell. So if we rally, I actually like the setup. I mean, Jenny was kind of explaining it to me a little bit last week, but I didn't realize the ratio that you have. You know, when you're looking at the 4 to 1 or even more multiple.
Let's say 3 to 1. I'm looking at it's 3 to 1.
3 to 1. Now it's 3 to 1 because you took off some puts.
Well, now it's less. It's like 2.6 to 1. But at my peak it was 3 to 1.
Yeah, so it's pretty interesting looking at this. That's portfolio optimization right there.
It is.
Yes. And I like that you did something. So the age-old question we get, Tony, is when you talk about a hedge, and I always have TP in the back of my brain because he's like, hedge is a 4-letter word. If you wanted to hedge it, take off some of your position, because a lot of people don't use the hedge like you did, where you actually use the hedge to your advantage. And when you had the move that you wanted, you added to the hedge.
Yeah. So hedging is not free. You either have to spend money or take on more risk to hedge.
Correct.
Those are the two things. So that's basically my secret. Well, not secret, but that's how I do it.
Not secret. You let it all out today, which I love.
Let it all out, which I like.
I love it. Okay, so we only have a couple minutes left. I just wanted to do something real quick with you. So I wanted to show people, number one, I gotta go with this one first, so you guys understand just how long and how special Tony is. Here he is on Bootstrapping in America. I think you were one of our original bootstrappers, weren't you?
I was the second rising star, I think.
You were the second rising star. Okay, perfect.
And then And then, Tom and I have been friends and partners for a year. So yeah, I've been doing this for a long time.
You've been doing this for a very long time. So this is just for anybody that wants to go back and watch the origin story of Tony from Mexico. There he is on Rising Stars. And it literally says serial entrepreneur. The other thing that I wanted to show is you are also on YouTube with Grow Your Pile. And I saw your shirt. I saw it. So this has been, you've been very passionate about telling people and being very open and honest with how you invest and what you're doing. So this is your YouTube channel.
Yeah. So, I want to do something different than Tasty. So Tasty gives people knowledge on how to trade. And Grow Your Pile, what I'm trying to do is two things. Show people how to maximize their investments. And the other thing is build a portfolio based on everybody's risk tolerance.
Right.
So on Grow Your Pile, we have 3 portfolios, more active, more passive, etc. And people can see what we do, and then I don't want people to copy it, but at least it's an education on portfolio building.
I think everybody's kind of trying to do the same things. You're breaking down the barriers, and it's another layer. You're actually showing people how to build a portfolio your style, and everybody's out there doing it. The only thing that is preventing people, it's this fear that they can't do it themselves. And everybody that I talk to, you're an amazing trader, and I'm going to go to you on the follow page too to show where you are. You're an amazing trader, and you have a lot of the same basic principles that we have, but you trade even a little bit different than everybody else too. Jenny and I do the show every single day, and I manage 5 different portfolios. I'm glad you said that. Some are more passive, some are more aggressive, some are my long-term accounts and things of that nature. And so does Jenny. And even then, even though we spend so much time together, if you looked at all of our portfolios, they'd have their own little personal twist to it, because it is a very personal risk. Is a personal question. How much money you have, all this stuff. So it's pretty interesting. But
everybody has to trade their personality, their capital, their time, and their knowledge. And like we said, so everybody has different capital. Everybody has different time frames, and the cool thing here is, Tasty, they want to improve everyone's knowledge. And in my little world, because I've always done it, the reason I created this Grow Your Pile is everybody was asking me, Liz, for help. Not that I don't want to do it for free, but people really didn't value it. And then if I didn't help them immediately when they called me, they got even mad. It's unbelievable.
It is crazy. And I got to tell you, I know how busy you are. I know how many businesses you run, and I can't believe you have given me an hour of your time and your knowledge today.
No. I love sharing my knowledge. And so that's why I did Grow Your Pile. So you want me to help you, then, go to Grow Your Pile. I can help you there, because I don't, unfortunately, except for my kids, I don't have time to be mentoring everybody who needs mentoring. Because it's humanly impossible.
I said something harsh the other day, and I didn't mean it that way, but Jenny was like, well, that's so mean. I was like, it's not that mean. I tell my kids the same thing. Come to me with a little bit of knowledge. Show me that you've actually tried, and then I'd love to help. Right? Yeah. So, because the people are like, oh, help me, and don't know anything. I was like, then you're not even trying. I need somebody who's going to, so that's why I go to Grow Your Pile, take a look at it. If you have questions or anything like that, I'm not saying you, but like for me or my kids, I say, come to me with anything you've got, but show me that you're actually trying.
In Spanish, there's a saying that interest has feet. It's weird, but if you're interested in something, move your feet and show me that you're moving towards that, right?
I'm going to steal that. I love it. Interest has feet.
It sounds weird in English. Interest has feet.
But I know what you're saying. All right, Tony, thank you so much from the bottom of my heart. This was the fastest hour of my life. We're done and dusted. I appreciate it. Go back to your other 90 businesses, and maybe you can join me again, because you were
my God. I forgot to roll some puts, April puts. So now I have to go and
no. All right. Well, thank you so much, Tony. Everybody have a wonderful afternoon, and remember to trade small, trade often. Laugh with us, learn with us, and hopefully we can get Tony back again.
Yeah. And remember, you got to risk it to get the biscuit.
I love it.
Thank you, Liz.
Thank you so much.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME Futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and of course, special guest Kevin Davitt. How you doing?
I'm doing great, Mike.
Kev,
Good
what's
to be
up?
back.
What's
It's
up?
starting to feel like a second home, not like an Airbnb or something.
That's
That's
what we're designing it to be. That's the way it should be, for sure.
And I assure you, we are not recording you against your will like Airbnbs will.
Good
I once
point.
I once had
I'll sign that
a horror
disclaimer.
story. I had a a couple of friends and I went. It was like a bachelor party, and some of them were smoking cigars in the back. We had a bonfire going.
Yeah.
And someone went into this it's like a wet room kind of like in between the house and the garage. It was just like a place with a sink and whatever. Yeah. And someone was cutting the cigar, and literally 5 minutes later, they got a message from the owner of the house saying, "Don't smoke cigars in that room."
Wow.
And we're like, "Are you kidding me? There's just like cameras here, and they're just sitting on a computer watching us."
That is not okay.
It's insane.
That is not okay. Yeah. It's scary. I do not like that.
Woo. So yeah, we're not doing that.
Yeah, we're not doing that.
That gives us a +1.
Yeah.
Good weekend, all that stuff, all around. I saw Project Hail Mary.
Did you?
Yeah, I did. He actually is the one who recommended it to me. He told me about it.
Did you like it?
I did like it. Yeah. I did like it, man. Yeah. I mean,
it's good.
It almost got me a couple times.
Oh yeah. Choking back like.
You didn't tell me about that.
Who's cutting onions around this place?
You didn't tell me about that. Yeah. It's good though, man. It's pretty good, man.
Yeah,
it's an interesting movie. I had a convo with a friend recently, and this is before we went to see that. But I was saying, yeah, I want to see that movie. My friend at work told me about it. And we were just talking about different space movies. And we told him, oh, you got to check out Interstellar. He's like, oh, really? Oh, he's like, what happens? What goes wrong? I was like, what do you mean? What do you mean what goes wrong? It's like, well, something goes wrong in every space movie. And then I thought about it. It's pretty true.
Yeah.
But I mean, that's like conceptually how movies are done. Like there's a conflict, period.
Yeah.
No,
And
specifically in space movies, there's something that,
it's
like
elevated.
Space Odyssey 2001, something goes wrong. Name a space movie. Interstellar, something eventually goes wrong. I mean, something.
You're right.
Always. Armageddon,
Yeah.
something goes wrong in space movies.
Yeah.
Why is that like our fear of space or what?
Well, it's funny you say that because like if there was a space movie where nothing went wrong and they just like flew around, you'd be like, that
nobody
was
would
the
watch
worst
it.
movie I've ever seen.
Uncertainty.
All right, fair enough.
We see it in markets and in space movies.
Fair enough. That's true.
It's what people want to manage.
Speaking of uncertainty, I got to start here because this is the last time I really interfaced with it. But on Thursday, we were at the SIBO, right on the open. I mean, market's down 100. And I can't speak for Mike, but I thought the market was definitely going lower. This is specifically after the speech on Wednesday. And I mean, a whole lot has transpired, or I should say a whole lot of nothing has transpired kind of since then, even though there's been a lot of rhetoric, a lot of talk.
And you still got near-term oil, if you're looking at WTI, around 112-ish, right? I mean, the inverse correlation between equities and oil remains kind of like the crux.
Yeah. And we were saying this last week too, like the intraday rally was insane. We were both shocked by it. But yeah, I feel like something's got to break in either direction. Like either crude has to crush below 100 or the market needs to go down a little bit because this still doesn't make any sense really.
Both the S&Ps and the NASDAQ are like pushing back up toward their 200-day, if I'm not mistaken.
Mm-hmm.
And I would say that that's going to be a considerable resistance point potentially in the near term. But last week was we had 5 weekly closes lower in a row. And last week, NASDAQ 100 was up like 4%, tech-led. The only sector that was lower was energy, which had been up 14 straight weeks. Like we saw kind of a sigh of relief, and now it is going to be interesting to see if we can get any follow-through. Forward volatility last week kind of collapsed, but realized vol remains fairly high. Like the past 2 weeks, we have seen on a weekly basis, I'm here kind of focused on the NASDAQ 100, 1,300 point ranges 2 weeks in a row. That is a really, really big number, bigger than 5%. And that's just the spot market. The futures have been even bigger. Like we were talking before we kicked off, this is a trading market and investing beware, right? Like I do not feel confident picking some long-term, we go up from here, but the trading opportunities are there.
Do you think it was a combination? I mean, last week was probably the first week in a while, first week in 5, essentially, that we had a positive week. You mentioned historical vol being so high. That only stays that way for so long and eventually relaxes. Do you think it was a combination of that being oversold and realized vol being so high that eventually the market kind of needed this release? Or was there some point to some part of the end of the quarter flows maybe possibly leading to that? What do you think? Is that whole soup?
Really good question. like any conversation about volatility, your time frame matters, and short-term volatility measures like 10-day are higher than they've been in quite some time. Relative to a longer-term perspective, it's not like 25% realized volatility in the NASDAQ 100 is a wild number. It is far less than what we saw April of last year. Hopefully we don't see something like that again. What we had seen is a dynamic where implied vol just kept pricing like big swings. If you think about VIX or VXN, your rule of 16, like consistently 24 VIX is expecting 1.5% moves a day in the S&Ps. And we really haven't realized that. Like, I forget which day it was, but it was the first 2% plus close lower in quite some time. So I agree with you that eventually that discrepancies between implied volatility and historic or realized tend to coalesce, but the market is still pricing expectations for meaningful swings.
Yeah, we're up 1/3% today, and it's definitely, even though we've had a bit of a swing in the E-minis and NASDAQ, it's still been well within that 1.5% expectation. So the more implied volatility expands, I think we will, or if it stays right here and we just kind of chop around here, I think we'll have a lot of days where the market's expecting 1.5 and we get maybe 0.5%.
So we're going into earnings next week, right? And that's a dynamic that tends to, we saw the highest correlation, like sort of names moving in concert with that sell-off that I recently mentioned. That's a dynamic that we hadn't seen for the most part this year. Generally speaking, when you move into earnings, it is more idiosyncratic risk, lower correlations. The financials, which are not like the NASDAQ 100 is not directly exposed there, but the narrative for the broader market has really been focused on this private credit thing and like risk there. What, if anything, do you think about there, either at the sector level or, you know, JP Morgan or wherever you focus on your financials?
Yeah, financials have been. It's funny to see how weak they've been in this tape. Where it's always interesting. I feel. I saw this a little bit of this in 2022. The idea that like, oh, interest rates are going up. That's going to be good for banks because of net interest income and all these other things. And then they suffered, right? And then eventually they started to like do well. I feel like kind of we've seen the same thing in this environment. First, interest rates are going down. Oh, this is great for finance. First of all, it's always somehow great for them. They can always make more money, first of all. But it's just they've struggled some. And now, as you have WFC here, you've seen they're trying to bounce back. So I always feel like with the big moves in interest rates, they at least maybe market participants are not sure how to trade them, and then all of a sudden they find their way. I mean, they always eventually find their way.
Well, I think to your point, it's been pretty spot on with, if you look at the beginning of 2026, and we had interest rate cuts on the horizon, and now we're not pricing in an interest rate cut until 2027, really, and we had the interest rate hikes come to the table, and with all that information, we are seeing like bottoming of all these stocks, like Wells Fargo, Citigroup, JP Morgan, like they're all coming off the lows. So I think if they do have a narrative of confirmation of like, yeah, we probably won't see interest rate cuts for quite some time, and here's our explosive revenue, like maybe that's where you get the big move to the upside.
Yeah, Mike and I have talked a lot about what companies are going to use as their excuses this time around, right? Mm-hmm. And clearly you can say, something going on with the dollar, the inflationary environment, what have you. I don't know what the banks are going to say. They'll find some type of answer, but a lot of these companies, we saw it on full display last week with Nike and with Restoration Hardware, I think it was. I can't remember what other expensive furniture company it was. I think it was. But I mean, they of course, they get a lot of their materials from overseas, and obviously they're doing business overseas in the dollar. So they were smoked hard. And I feel like that's going to be some of the theme we're going to see this time around. There's going to be a lot of people talking about the current environment and how it's affecting their business. I mean, they always do. I think we're going to see a lot of that.
So expectations for earnings this year continue to ratchet higher, led by technology. I think to the point you just made, if these big mega cap names that are, more reflected in the NASDAQ 100 continue this trend of beat earnings and raise expectations, I do think you could see a real sentiment shift. One of the other dynamics, I mentioned it last time I was here, is how depressed relative to history upside call vol has been at the index level. If you look at the S&Ps, that is the case. Call skew remains depressed. And if you look at NASDAQ 100 upside relative to the S&Ps, it was as cheap as it's been in many years. That's a dynamic that interests me. If we saw a snapback rally, maybe the sentiment shift is earnings driven. That upside vol could move, and that's something that I continue to keep an eye on.
Is this one of the graphics? I know we got a couple of graphics.
I had it last time.
You did, yeah.
Just like it's something where you think about often at the index level, how are different volatilities moving?
Right.
We have seen put skew come in fairly dramatically. I think earnings coming up is some part of that, but we have not seen that bid for upside, which I think is interesting given an 11.5% high to low move in the NASDAQ 100. There's no real demand for it.
Yeah, everybody's always talking about the taco trade and figuring, things are going to come back. And usually we had seen the bid for upside. It's a good point.
Yep.
It's probably a good time, too, for your two graphics. You got two graphics I know you want to share with the people. Let's
which ones?
Let's see. It's dealer's choice, whatever they bring up. I don't know.
All right. Leaving it up to the group behind the wall.
Yeah, we are.
And to your point, too, like with the skew, with SPY specifically, the further out in time you go, the more you'll see that call skew priced into, or have the interest rates priced into the call skew.
Yep.
But if you're looking at the 30-day, like it's night and day. There's a $9 put, 30 points out of the money, and a $3 call, 30 points out of the money. So,
good example.
There you go.
And to your point, if you do get that velocity of the move to the upside, it's going to behave very similarly to iBit, and like Tesla was always a good example where Tesla, you saw that skew shift dramatically back in the day when everyone was trading Tesla. It was super volatile. When it had the downside moves, you see the put skew come in, and when you had the upside move, you see the call skew come in. So upside call skew can definitely come in there. And if you own shares into a rip higher, you can sell far out of the money calls against it, reduce basis intelligently, and go from there.
Sure can. Just one, when I think big picture about exposure and about options specifically and how that stuff can move, the NASDAQ 100 daily basis, looking back over a long time frame, 26, 27 years, you're exposed to 1.2% of the downside, or it's captured 120% of S&P downside. It's captured 147% of upside. So we think about volatility all the time, and most passive investors understandably associate that with downside. And I was on a podcast last week where we talked about this as socially acceptable volatility when it's upside and the markets go up 4%. You see that on display very specifically in the NASDAQ 100, that upside vol, that tendency for an explosive move higher. Again, I'm not saying that's likely to happen, but as you think through dynamics and product choices, if you are skewed that way, is there potentially a better way to express it? Those are the sort of thoughts or the exercises I run through mentally.
Yeah. And it really, if and when that skew comes into play, if you had bought longer term options and you get that skew infusion, you're going to make out like a bandit, honestly, because you get that skew addition or bonus, we'll call it. But then also, if you are waiting, you can throw on butterflies for super cheap because that skew just permeates through all the upside strikes. So butterflies, call ratios, anything that involves that kind of setup will benefit from that upside skew.
People have been asking us a lot about those butterflies too, and they're like, "Why is upside different versus downside?"
More expensive than the downside, and the downside is super cheap right now because of the put skew. So it's the same
how
exact
are
thing.
people like? Where do you get fed that? How's somebody coming in and you're getting this information that the Tasty Nation is curious about this?
Usually the YouTube chat.
Yeah.
Yeah, super active. There's a bunch of people in there right now. Or they'll send us emails one-off. But generally speaking, it's the YouTube chat. Because we have it open and we get questions and comments all the time.
Yeah. I did a podcast once and I gave out my email after, and he was like, well, yeah, give him a reach out, folks. You know, he's very brave. He's giving you his I'm like, that's what we do, man. I mean, we do that all the time. We got two graphics. Let's show those two graphics that Kevin came prepared with. Here's one of them. Tell me about this.
All right. So when I see anything with a percentile rank on a 1 year look back around 1%, this is net exposure to Mag 7. Now, clearly, I look at extremes. And on the downside, the kind of lowest exposure has coincided with NASDAQ 100 and S&P lows. So you think back to the launch, the introduction of ChatGPT, and the moves that we've seen since the end of 2022. We are at the lowest level in a couple of years here. I find that interesting. The names in the, whether you call it the Elite 8 or Mag 10 or what, but they are beaten up. And there has clearly been degrossing with respect to kind of mega cap technology. And at some point, maybe this changes. And are there ways to express that view broadly? I would argue index options give you that opportunity. But kind of my alarm bells go off when I see anything at 95th percentile or 5th percentile. I'm interested if there's a way to potentially capitalize on some kind of mean reversion using options. I think that's a really powerful way to express a view without saying, here, this has to go up.
Mm-hmm. Yeah, couldn't agree more.
Yeah, and we've talked about just the general public sentiment. Like, if and when this market really starts to rebound to the upside, it's not going to be random names that people are investing in. It's going to be Apple, Amazon, Microsoft, Nvidia, all those stocks. And Microsoft, notably, we've talked about this for months. Like, I've been layering positions every single month because Microsoft's sitting at 370. It's at, a massive discount relative to some of the others. And when you think about how can the S&P and NASDAQ create a return of 8-9% every single year on average, it's the rotation that people forget about. So it's like, okay, maybe Nvidia catches a bid, they get to all-time highs, but then Microsoft goes from 370 back to 550. That puts more upside pressure on the market. And that's really what the opportunities that we look for. Like, if you're bullish and the market is fluttering around here, or even if the market's at highs, there's always going to be individual names that are not at highs. And you can use that as kind of a lever to place that bet or express that opinion in an intelligent way and playing for a reversal back to highs. And I think Microsoft's a great example.
We mentioned this sort of what you were just outlining the last time I was here, that it is a little bit refreshing to be able to talk about names other than that and find opportunity. Mm-hmm. And now if we move back to kind of the zeitgeist that's dominated for a couple of years, that tends to be good for the NASDAQ 100 and it captures a lot of attention. But it's been I think a great learning period for newer investors that it's not always just about a handful of names. One last point on that is that index performance historically has been driven by a handful of names, and sort of indexing in general. It's inherent in there that we vote with our wallets, and the market capitalization expresses the collective view. And if those big mega cap names start moving one way or the other, we're going to see that at the index level.
Well, the fascinating part too about this chart is like the fact that the exposure is lower than it's been in a while, but yet options trading wise, there's still a lot of options activity in these names in the queues. I mean, there's still tons of options activity going on, to your point of you don't just have to say, pick this direction and I expect it to go up. You can play this in a multitude of ways.
What you didn't have 2 years ago in these names were Monday and Wednesday options. That's something I talked about a month ago here. And we continue to see growth there. Given greater alternatives, I'm speaking broadly here, the investing public is skewing toward the short dated exposure and doing that, expressing that view with options. That continues to be the case. And this evolution will likely continue. But these names that we're talking about, the big mega cap ones, are the ones that now have Monday and Wednesday expirations.
There it is. And then I know you got one more. Let's move to the last one here. Yeah.
Oh, yeah.
Cool. This looks deep.
Yeah. This one was from SocGen, and Chris Murphy at Susquehanna had
I remember him. Good
yeah,
dude. Good dude.
He covers good. He just does it well. Relative to U.S. Treasuries, NASDAQ 100 may skew attractive. Now, we are not at quite the lows from like 2022 bottom, but this is hinting at the dynamic that we have talked about here, where if we have a market that catches a bid and that just moves back toward a, whatever it is, 15-year average, that would probably equate to a NASDAQ 100, maybe not at new highs. And again, this is relative to the interest rate environment, but another example of how markets have repriced risk, both at the interest rate level and at the equity index level, and whether there's opportunity there. How much do you guys talk about bonds or bond options and where there might be opportunity there?
Quite a bit, man, actually. I did a crazy trade over the weekend because I just wanted to see if things were going to get nuts. I actually got long a straddle, 9 days at the time of duration. I mean, obviously it got faded, but my whole point was like, it's 6 volatility. I mean, how much am I going to really get killed on it? And yeah, I lost a few hundred on it, but not the whole thing, right? Even though it was essentially kind of like a very near-term trade, but that's not typically what we do. We trade it all over the place, but we talk a lot about treasuries, and this is pretty fascinating. I mean, this is essentially the ratio, right? Is this kind of like the ratio, basically? Yeah.
And interest rate vol got crushed last week. Yeah. Crushed.
Yeah. I mean, if you would have told me that the essentially the message that came out from the president the other day, I would have been like, we're going to be down huge, and bonds are either going to move big one way or the other, which again has also been hard to predict what direction bonds are going to go. Typically in this type of environment, bonds go up, right? And they've been sold off a lot, right? And so, but here we are, basically flat, and not a whole lot's happening, and it's wild to me, honestly.
Yeah, to your point, the vol crush is. This is the first time I've seen it this week, but we're looking at just every decision from the Fed. There's a 97% chance that we have no cut or hike all the way through the end of the year. December's at 80%. January of next year is 77, 75, 74. I'm just clicking through all the decisions. I'm at June of 2027, and it gets down to like 63% that we stay at the current rate. So they have completely removed the possibility, at least for now, that we're getting any kind of cut or interest rate movement at all, that we're kind of just stuck in this range. But yeah, bonds, TLT, even with the movement that we've seen, TLT is an interesting vehicle, and we've seen it go from 91 all the way down to 85. Like, that's a pretty big range. When you look at the implied volatility in TLT, it's really low. Like, the 39-day cycle is only pricing in a 2-point range. We've seen that blown through on either side over the last 2 weeks. So if I'm trading TLT, it's usually with kind of a back ratio zebra, where I'm buying these options and just taking a directional shot for a really cheap way relative to the stock price. And that's kind of the nice thing you can do with these super low IV products that are moving in a big way right now.
Did Tasty introduce another new, because the Jade Lizard was the first time I had heard a zebra. Can we draw this on the wall?
We can draw it right now. Here we go. So a zebra is basically where you're buying 2 calls in the money if you're bullish, or buying 2 puts in the money if you're bearish. And then whatever the extrinsic value is, you're trying to eliminate the extrinsic value cost of those 2 options by selling an at-the-money option. So what this does is this extrinsic value is basically flat at -10. But I have 100 deltas to the upside, very similar to owning 100 shares of TLT, but I'm only risking $489 to get that exposure for 40 days. So if I'm right and TLT rallies, I will make the same amount of money as if I owned 100 shares of TLT. But if it crashes, I only lose $500 maximum. So you really cap your downside risk while giving yourself 100 deltas to the upside. Same can be true with a put zebra. And the cool thing about this is a 40-day cycle. If I did this in a 11-day cycle, if we go to April, this is going to be basically nothing.
Right, premium-wise?
Yeah, $180 to get the same story where I'm eliminating most extrinsic value. Where if I get rid of this and I have just one, I'm putting up $50 of extrinsic that I'm going to lose if I'm right, where the zebra helps you eliminate that. And the more near term you go, again, is just more leverage in terms of you get that 100 delta, but you're putting up $190.
Well expressed. Last question. How'd you come up with the name?
I did not.
We didn't.
I think it was
Tony.
Tony?
I think Tony from Mexico came up with it.
Yeah.
Zero extrinsic. I don't even remember.
Zero extrinsic back ratio.
Yeah.
I like it.
Yeah, right?
And it falls right in with that jade lizard.
Right. Kind of exotic animal.
Yeah,
right. It's a trip.
But
well
it's
explained. Yep.
It's a good one.
That is such case in point for how and why I believe options will continue to grow, is that you're able to get exposure that is nonlinear, defined risk. If I'm thinking through that right, I know my premium dollars, and I'm able to express a directional view in a much more creative way. How does that not appeal? And as people continue to understand the dynamics behind it, really well explained, I expect this to continue to grow.
And there's different ways you can manage it too, since you have the 2 versus 1. It's pretty awesome. I've learned a lot in my 5 years here at Tasty, being a retail trader. These are things that we didn't trade. We didn't trade poor man covered call. We didn't trade zero exchange. We didn't do that at a prop firm. It's different. So
that is the way my mind went, was like, well, if you start getting the move you want, then it's like, oh, that's so much fun. Like, how do I manage this high class problem? So fun.
Well, they call it ratcheting the zebra. So like, let's say you get the move, your value of your spread is going to increase, right? But if you take that off, you remove that risk, you can just ratchet it back to your original position. So instead of having a deep in the money zebra that has a lot of intrinsic value, you close out of it for the profit and you just move it back at the money. So you're creating a new starting point. So if it reverses, you don't lose that higher value spread, you just lose this $1.80. So that's ratcheting the zebra.
I like it.
Yeah. It's fun. Yeah. It's really fun. It's good
I
stuff.
hope the YouTube chat lights up with that one.
I think there's probably a lot of people already have it on.
Oh, yeah.
My friend, good to see you, man.
So good to see you guys, too. I hope you enjoy the game this evening.
Who you got tonight?
Michigan.
Before you go, who you got tonight?
I would be excited. I'm going to give a political answer. I would be excited to see the Big Ten win for the first time since we were in college. My son is half UConn, half Marquette. So I sound ridiculous. But for the most part, whether you're talking men's or women, they were non-competitive games this weekend. I want to see a good game.
Yeah. I think we're going to get a good game.
I do too. Who do you want?
I want Michigan. I mean, that's what I said a while ago. People asked on the show one day, and I said I really liked Houston. I thought Houston would take out Duke, but I thought a more experienced team was going to take out Duke. That's why I thought it was Houston. But I thought Michigan was that team, and lo and behold, they're here. So
Duke managed to take themselves out.
Yeah, I know. We're not even going to talk about it.
Before we let you go, who you got for the Masters?
I would probably have to go with Scheffler. I haven't looked at odds or anything like that, but his game and heart, just Irish and being a fan, I like to see Rory in the mix, so that would be fun. But it's not something where I'm I have no edge in that thought there. It would be the blind sort of heart speaking. What about you?
That would be my blind pick, but this guy, he
knows.
First of all, I know he has not only edge,
he's got money if I let that happen.
Yeah, I'm deep in the data. I think you should not be surprised if you see Cam Young, Matt Fitzpatrick, Xander Schauffele, those three. I think, to your point, Scotty is like obviously amazing. So is Rory, but they both have their little issues. Like Scotty has been.
He struggled recently.
He's been really struggling, which is funny because he's already won a tournament. He's like still the best golfer in the world, and he's struggling. But in the fantasy world with the tournaments I play, he's very expensive relative to his recent form.
See,
so
there you go.
I'll have less of him than I normally would for that reason. But yeah, I think could be Cam Young, could be Bobby Mack. That's my Hail Mary, Project Hail Mary. It's Bobby Mack. Because what's cool about
that doesn't sound like a golfing name.
Well, he's a Scottish lad.
Oh, sounds like a NASCAR lad.
Yeah, it's Robert McIntyre.
There you go.
Yeah.
Okay.
Yeah. But there's a lot of right to left blind shots at Augusta National. So if you're a lefty, you're cutting it. Where if you're a righty, you have to force a draw. So it's a lot easier, obviously, to cut a ball than draw a ball. So the lefties have a slight edge, and he's in really good form. He got second place this last week, yesterday. So he's
I've learned a lot this morning.
Boy, his wicked smile.
Yeah.
Bobby Mack is the sleeper cell.
I like them apples.
Yeah. Love it.
That was fun.
Yeah.
Thank you
coming
both.
on.
Yeah, man.
We'll see you soon.
See you soon.
And yeah, hopefully we get a good game tonight.
Yeah. See ya.
Later.
E-minis up 20, NASDAQ up 100, trying to make it easy on us. Nice round number. Bitcoin up 3K, ETH up 100 as well. Crude catching a little bit, went from red to green here. At least on the intraday session, it opened higher. But yeah, it is still the narrative of the week here. Crude is way elevated. E-minis and NASDAQ completely ignoring it. Nick and I kind of had an epiphany on last week where like the only way this makes sense is if everything's just being repriced as you know, things will eventually be done, and that's why the E-minis and NASDAQ are kind of ignoring the conflict. Because if you look at the crude oil market, at least the futures, we've got a huge shift in the pricing. Like we're at 111 right now, but the back months are at 70.
They say it's the biggest, which I was actually surprised to see, and I haven't fully verified it, but they say it's the biggest difference between month one and month two. The biggest, I thought I saw something that said that, the biggest difference between month one and month two ever. Yeah, I don't know. It's surprising. I mean, a week ago, if somebody sat here and told us oil's going to be at 111 this week, we'd be like, well, market's going to be down lower. And it's not. So
yeah. Can we switch over to Jamal's platform? This computer is an old Microsoft computer, and it is just like the stock price. It is crashing. This happens. I don't know why it happens on this computer, but
at this time, every now and again, too.
Yeah.
Yeah, it seems like it.
It's
Yeah.
insane.
Is it updates or something? I don't know. Yeah, it's strange to see that the market is. I don't know how to say it anymore. It is strange to see that it's not responding the negative way that it had been to oil more recently. But you're right. Maybe something is just being repriced at this point. I'm not even sure what to make of it. Trades. You've done any? You've done any today?
I have not.
No, I've only done one.
I'm kicking myself for not doing that Iron Condor, the 0-day Iron Condor and SPX.
Yeah, no, I know, right? Seemed scary at the time, but
yeah,
that was definitely the trade. I like I said, I closed out the straddle. It's the first thing I did. As soon as I woke up, I was like, I'm closing this thing out. I'm getting out of here. I mean, you know, it was a mayhem trade, as I said, and nothing happened. So yeah, I mean, this is one where basically I wanted on to have in case things got really, really bad and crazy over the weekend. And not that I wanted that to happen, but it was a play for that. And once it didn't happen, it's time to close out. Took my loss. It was a G that we put on for, lost $300. Moving on. That's it.
Yeah, I'm actually going to look at closing this soybeans spread. We had the 1230, 1240 call diagonal spread here. It's up like $50.
I got the wider one.
And yeah, I mean, it's just one of those trades where I was looking for a small win, and I'll just close it as they come in if they do.
I know. I mean, when you look at this chart, it's just basically consolidating now. Nothing's happening. I expected more out of these given the environment, but given everything we're talking about, given the fact that they're I don't want things to be bad. I want the straight to open. Like I don't, but when you hear the rhetoric and everything sounds so bad, it doesn't sound like there's going to be much opening soon. It doesn't sound like there's going to be much ships, traversing through. These are part of the reason why these trades are on. But to your point, if nothing's going to happen, then yeah, I don't want to be sitting in long premium, right? Like that's the idea. When you're long premium, you do have to manage it a little bit more. You got to be on top of it. And these are definitely the ones where you can get buried in a portfolio. You kind of forget about it, but it's a good point. It's probably time to close these because the vol is elevated, but we were trying to take advantage of the vol being elevated because it's moved around a lot. But if it's not moving as much, it's going to start coming in.
Yeah. And I think, especially with earnings coming up, I just closed my Amazon call diagonal spread too. That was a $100 winner. But I think that's another good point is like, if you were layering on bullish positions into this rip, I think it makes a lot of sense to consider closing it and just free up that risk because a lot can change. Things can swiftly move to the downside. And with earnings coming up, like you have the ability to then just create a fresh trade for earnings specifically and not hold all this risk while we kind of flutter around this area after we had a near 5% rally. I think it actually was a little bit pretty close to the 5% rally from the bottom. So yeah, just staying nimble with the VIX elevated here at 25, I think makes a lot of sense.
Yeah, I mean, that's the thing I think, we try to talk about that I feel like a lot of people who trade don't talk about all the time. If you put on a trade for a certain reason and that thing didn't happen within a short time period, just close out for the quick loss and just have a free and clear mindset, new trades, new things coming. There's so many opportunities in a market like this. You don't need to be holding on to trades that aren't necessarily working for you.
Yeah, 100%. But yeah, JP Morgan, Citigroup, Wells Fargo, all those stocks are reporting earnings next week, April 14th, before the market opens. So what is that? Tuesday?
14th, a week from tomorrow.
Tuesday. Yeah, Tuesday before they open here.
Yeah.
So that'll be interesting.
Boy, that is fast. And Kevin made a good point about this. It does happen. I feel like a lot of times there could be craziness going in this time period, like these several weeks when there's like no major earnings. And then all of a sudden earnings comes. And then that becomes the focus.
Yeah.
Right? I'm curious to see if that's what's going to happen here.
Yeah.
Or are we still going to be talking about the Strait of Hormuz and war in Iran?
Yeah. And this is going to be it's kind of a unique time because there's no doubt in my mind that all of these tech stocks just blow the doors off their earnings reports in terms of the numbers, like earnings per share and revenue. But the narrative is really what's going to matter. Because like you could see them have massive earnings, but the stock tanks because of Strait of Hormuz being closed. They have some kind of supply issue, and that dissuades investors and traders from getting long. So yeah, we shall see what happens in just a week's time.
I am a little surprised to see Bitcoin at over 70 today. How about that?
Finally.
Yeah, how about that?
Finally. I think right. Bitcoin, I'm still in this IBIT position and Ethe, just a short put in Ethe. I've rolled both of those, but yeah, IBIT, I've got 100 shares, sold a put at 30, well below the market. That's a nice trade now, up 50% there. Nice. And I've got a short call against the 100 shares at 42. So I'll just continue to be nimble here. If we get tested at 42, I'll just buy it back, roll it out in time, move it up. Just have that offensive covered call mentality. Mm-hmm. And the short put, if we do end up getting down to 30, I would love to take the shares there because I would bring my cost basis on my 100 shares.
Oh, you have a short put in IBIT.
In IBIT, right. Yeah. So I got 100 shares at 65 with like $3,000 in premium collected. So we're right there. We're still above the break even, but if I get that short put in the money at 30, now I've got 200 shares at 45. Becomes a lot better position in terms of upside delta. I was going to say something else. What was I going to say?
Was it related to crypto?
Yeah. I don't remember. It'll come to me.
It'll come to you.
DAL, Delta Airlines, has earnings this week.
DAL.
They've got earnings. And we'll see what happens here. I mean, UAL has come off the lows just a little bit. DAL, similar story. I think that was a great trade if you were buying or getting long airlines at the bottom when oil prices were skyrocketing. I think with oil elevated here, it'll eventually affect the airlines, but quick trade from the bottom to where we are now. I'm not sure if I'm going to trade this for earnings just yet.
Yeah.
But still, $5 expected move for this week. Pretty decent. We'll call it like 7-8% of the notional value of the stock price for this week's earnings. So not too low, not too high. Most stocks are within that 5 to 10% range. So yeah.
Yeah, man. These, I mean, they're gonna say something about the current situation. They have to. There's no doubt they have to comment. What's this, in 2 days? Mm-hmm. And the nice thing too, again, I always say this. Since this one has earnings, you don't necessarily even have to play this one if you don't want to. You can play the other one for a move. If you expect a certain move, you can always play that. If you don't want to deal with a fall crush, I should say, you can play UAL on Delta's earnings because, again, these are similar in that if one sneezes, the other catches a cold. They have the same issues.
Yep.
LUV as well.
And Jets too. Jets is another. It's basically an ETF that has all of them. Southwest, United, Delta, and American is about 70% of the weightings in Jets. So you can get the macro exposure at a much lower IV than some of these other ones too. So lots of ways to play it. Look at this market. This market is insane. Just ignoring everything. I mean, that's got to be it, right? If we assume that the market is pricing in everything before we know what's happening, or before we can get the all clear, the official news, like how can the E-minis and NASDAQ stay afloat here with oil still going higher, or at least staying elevated here?
Yeah, I don't know, man. And again, this huge spread between the 2 months, and again a big spread between June and July as well. It's increased since last week. It's wild to see. It's wild. I don't know. I mean, again, we don't have the futures for these, but looking at Brent, and Brent now is in June. What does Brent Nove look like? Is it N6? Yeah, 99 bones.
Yeah, Ryan's got a question from the YouTube chat. What do you think that BZ and CL spread inversing, where CL is above BZ, is telling us?
Well, it's not above BZ. So again, I mean, BZ always trades over, and this is something we kind of talked about last week on the show. Again, this is July. This 99, right? If you look at crude, you can see it's 96. It's 88 for July. So the BZ that we're seeing, again, remember it's June. This is M6. This is 108, and June is 96. So it's still trading over. Brent is still trading over. Just keep that in mind. I am not that much of an oil trader. There's plenty of people who could tell you if for whatever reason Brent were trading under WTI. I feel that I can't remember exactly what that would mean, but luckily we don't even have to think about it. It's not something that's occurring. It's not even close to occurring. So don't worry, Brent's still trading over. Just make sure you're looking at the right contracts. We're looking at May for WTI. May is still in effect for at least until the 16th, it looks like. Yeah. On the 17th of April, we'll start, I think, it might start a little bit before that, but just be aware of that over the next couple of 10 days or so, May is still the front month for WTI crude. Good question, though.
Yeah, really good question. Holding 200 uncovered shares of IBIT, seeing the bump today, considering selling a call ratio in May against the shares, but not a lot of credit available there. Maybe better to just sell the call. Yeah, I mean, if you're trying to fabricate a call ratio with a decent credit, like at the end of the day, IBIT is a very cheap product. It's in the 40s. So you're not going to be able to collect a ton of value from a call ratio. But the further out in time you go, the more you can get a wider call ratio for, let's say, 50 cents to $1. That's really like all you're going to get out of these things. So if you're trying to pick up more than $1, you can just sell the call. But the call ratio gives you significant upside exposure in terms of the boosted delta between the strikes. Because you basically double your delta exposure between 45 and 48, as you're seeing here, for a small credit. So that's the key. You're giving up your credit for the ability to make $324 versus just selling the call for whatever the premium is.
Oh.
But yeah, I like doing it into a rally like today, because that's where you can set up the higher strikes, or you can get more of a credit for the same strikes you were looking at on Friday.
This is definitely, the skew is definitely changed in this too, right? Which would kind of comport with what Kevin was saying with some of the equities. We've seen skew lighter on the upside. I thought skew used to be a lot more on the upside with Bitcoin. I'm sure this would be reflected in IBIT, but you can see it's more downside skew. Just look at the implied vol anyway.
Yeah.
Cheaper on the upside.
Yeah. And I think like this is the time if you're trying to inventory long premium in a longer term cycle, like when you have no call skew there, it's going to be way cheaper than if you have call skew, and you get the call skew on the upside moves. So it's just like what we talk about when you're buying calls in the VIX. Like, I'm not buying call spreads in the VIX. I'm just buying calls in the VIX if I'm doing it, because if you do get that move to the upside, you get the vol expansion into that move. You don't want to have a short premium component offsetting your profitability on the long option that's increasing in price because of delta, increasing in price because of the increased stock price in general, and increasing in price because of the implied volatility expansion. It's a rare scenario where you can get the best of all three to the upside. So IBIT, another great example of if you're willing to take the risk, like if you don't see the skew there, you're going to get a way cheaper entry point. And then if the skew comes into play, it's going to really emphasize your profit potential if you get the move right.
Yeah, I would wait until you start to get like more of a confirmation sign.
Mm-hmm.
But man, if this thing really starts to go, this is definitely the play to buy calls in.
Yeah.
But right now it's not.
Shall we do another crab trade in Boeing?
It did work out pretty decent.
Yeah.
Actually. I think I just took mine off late last week.
Yeah, they have earnings coming up.
That's the only thing, right?
Yeah, they're looking at a longer term one. So they're looking at long the June 220 and then short May, the 235 twice and then the 250 long. But yeah, I mean, it's a 15-point wide for $6. Classic.
Yeah.
Really cheap way to get an upside exposure. And the nice thing about this is if Boeing goes down, you can get rid of the crab exposure and then roll into the earnings cycle and just turn it into a diagonal spread in earnings. So you have that kind of out.
Stock hasn't moved much all day. I'm going to be petty. Put it out there for 6. Wow, look at that.
There you go.
I like it.
Look at
Village.
that. Why don't double calendars with a put and call, both on the put and call side for earnings, consistently work? You're getting a vol crush in both. So you're getting a vol crush in the long option cycle and the short option cycle. The way for it to work is if you're collecting a ton of value in the short options relative to the cost of the long. That's especially true if you can push those long options further out in time. But we like to do kind of the cheap ones where in UAL, you could do short 1 week with earnings and then long the next week, and you can get it for under $100. Those are the ones where if you're even close to your strike, it'll be a profitable trade because you just need your long option to have equivalent or greater than extrinsic value than your debit paid. So like in this example, $128, you just need your long option to be worth $128 or more. And based on the raw value of that option, especially if it moves to the upside, there's plenty of opportunity for that to happen. So if you do both sides, if you do the put side and the call side, now all of a sudden you have to account for your losses on the out of the money side with winnings on the other side. So if it doesn't move at all, if it just chops, you're going to lose on both, and that's why it doesn't work all the time. You need to move towards your strike, ideally the upside strike. For the same reason we just talked about with IBIT. You get an increasing stock price, you get increasing extrinsic value across the board.
You need the move.
You do need the move.
Chicks dig the long ball.
Indeed. Companies should be hedging oil by buying longer dated oil futures. Not entirely wrong. I mean, the futures market is basically pricing this out. If you look at those longer term cycles where they're sitting at 70 at a low. So yeah, to your point, if they're buying,
that's a scary proposition though. Do you really want to buy $75 oil in SEP if it drops back down to like 60?
Yeah.
It's just,
I mean, I'm sure you can find if you owned a business or you had a big, massive company, I'm sure you could find some kind of ratio where it
a
little bit
for sure, yeah.
But yeah, I mean, the real question is, what is it going to take for oil in the back months to go from 70 to like 100? That would be insane. Right now, it's not happening, which signals that this is still a near-term pricing. At least the near-term issue that we have is being priced to stay near-term. But if something changes, you will see those catch a bid, and that's when the markets would have to tank, I would imagine.
Yeah. $14 here, $9 here, $6, $4 starts to, it's, tell you, man.
A couple minutes left here. I was looking at SPX weekly move. It was only like 125 points for the week. It feels kind of light. What say you?
It does feel kind of light compared to what we've had more recently, but I would have thought we would have been moving more on Thursday. I would have thought we would have been moving more today. I don't know. It does feel kind of light, and maybe it's, what we got, CPI this week? Oh, I totally forgot about this position. I meant to do something about this.
Yeah, let's see. What do we got? We got...
oh, no, I didn't forget
PCE.
about this. No, this is fine. I completely
Yeah, we got PCE on Thursday and CPI on Friday. So we got some stuff. We got some numbers.
Got some stuff. Inflation, obviously an issue. You imagine it's going to be elevated from the last month because this thing's been going on for a month.
Yeah.
But is that really going to surprise anybody?
Yeah.
Is it transitory?
Yeah. I mean, the CPI, the previous report was 2.4%. The median expectation is 3.3%. So they're pricing it in, at least in the CPI. And then PCE is flat, 2.8 previous, 2.8 expected. So we'll see.
Simple day moving average here is 66.44, so close to 66.50. Do we get rejected at some point if we get up there is the real question. Or do we use that as a springboard and we move higher? That's what this week is about to me.
Yeah. That's it for us. We're out of time. Thanks for tuning in. If you got any further questions, you can always find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. And hopefully we get a nice basketball game tonight. Mm-hmm. There's some weird injuries I've been told about.
Really?
Some rolled ankles.
Ooh.
Some toughing it out through and through. So maybe we will get that close game.
Oh, yeah, that's right. Yeah, the one dude from Michigan. Yeah, I mean, everybody's hurt at this point in the season.
Yeah.
Play it out.
Indeed. But yeah, stay tuned. We will be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for backtesting? Nah, trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Watch the world fly by. Watch the world fly by. We're making our own way. We're making our own way. We're making our own way, yeah. We're making our own way.
What is going on, everybody? Welcome back to Risk and Reward. Today's Monday, another long weekend. The market is still we are still above water, to say the least, over the long weekend with all the uncertainty. But we'll get around to all of that. Before we do, Brother Gus, how are we doing today?
Doing good. Yeah, just slightly green is about the best you can hope for in times like these. You know, it's if we're not tanking, we might as well be flying. Is pretty much the current situation, especially coming off the long weekend. So much surface area for bad things to happen. I know Trump is speaking right now, I believe, as we go on air here. He's supposed to be coming out, or already is out. So we'll be receiving live updates on that. But he might deliver some chop to this market as well.
I'm really curious to see what we get. I'm curious to see what type of volatility we might see. Are we going to start the note off on a high volatility note, or if it's going to be a little bit calmer to get into the week? But I hope everybody else had a good weekend, had a good Easter. I know we had a longer weekend. I know we have a little bit more basketball games going on. What's new? What's new, Gus? What's going on with March Madness? What are the headlines right now?
National championship game is tonight. Michigan is playing UConn. UConn looking for their third championship in 4 years. Dan Hurley has lost one tournament game in the last 4 years. One of the greatest historic tournament starts for a coach in all of college basketball history. Michigan absolutely blew out who'd they play? Arizona on Friday night.
What did that look like?
That was remarkable. Just kind of ran them out the gym. Michigan a heavy favorite tonight. Yaxel Lindeborg looked injured in that game. It was just a tweak on the ankle. Looks like he's going to play, but I don't think he'll be at 100%. Michigan's best player, but they are 7-point favorites nonetheless. So should be a good game. I would say don't count out UConn. I must say I strongly dislike both of these teams from a fan perspective. I'm none too pleased.
Okay, well, lesser of two evils. Who are you going with?
I think Yukon, just the history of it would be cool. I don't like Hurley at all, but even though I'm, Texas A&M is the primary team now, that's where I graduated from. I'm a born and raised Ohio State fan, so the Michigan hate will never quite leave my blood. So that's kind of where I'm at on this.
That's valid. No, I mean, with that being said, we can go ahead and jump into the Tasty Trade platform, do a little tour to market, see what's been going on over here. What's been going on over the March Madness weekend? What do we got over here in chat? Arizona flopped so hard. Did they flop? Was Arizona not an underdog? Like, where were they in the race, Gus? Give me a little bit of
Arizona
context.
was, certainly decidedly one of the best four teams. Definitely deserving of their one seed. That game was, I think Arizona was a 1-point dog in that game. They were down by 30 at one point, wound up losing by about 20. Wow. Offense just looked totally inept. It was a combination of Arizona looked really bad and Michigan just could not miss. Actually, if I were a Michigan fan, I would be a little concerned about the law of averages potentially dragging their shooting down today.
Yeah. No. We'll see what we get. I'll have to plug in a little bit to the championship game so I can have a little bit more input. But with that being said, over the weekend, the market is still logging in some upticks in the market. We're up about 1.5 points, just shy of that. We gapped down over the weekend coming into the Sunday Open, and then we pretty much rallied towards the highs. Then we kind of just been chopping around back and forth. So as for the positions, we traded a little bit of the oil market. We took another short on the oil, so we got a little bit involved there. We were engaged there. Engaged a little bit on the Sunday Open on the micro NASDAQ, a little bit on the Open today as well, which we'll go over. We still have some long and short delta in that we legged into on QQQ. Whenever we had sold off, we sold an out of the money put spread just to get a little skin in the game, especially whenever we get some directional volatility. So got on some long delta, and then whenever we had the very aggressive rip to the upside like we're seeing here in just a short few days, we sold an out of the money call spread, which is being tested right now. So that's where we're sitting right now. And then USO, we had bought a put on USO, 11 days left till expiration. I'm kind of waiting for these headlines and the whole oil news and the indice headlines to really just pan out to see how we're going to be managing these positions. But that's all the exciting things that's going on this end. I got to say, I thought we would have gotten a little bit more volatility with oil and the indices over the weekend, but forcing us to be a little patient to start Monday at least.
Yeah, I thought so too. I got even shorter oil on Thursday. I was already arguably irresponsibly short oil. Now it is no longer arguable. It just is irresponsible.
But I'm loving the risk reward at these levels though, right? So.
Yeah, exactly. It's a gamma play. And it's like I was saying on Thursday, I'm pretty much in a position where I now have 4 contracts that are all essentially double, each one being double the expiration of the next. I have a 85 put 39 DTE, a 75 put 102 DTE, a 65 at 256 days, and then a 50 put at 347 days. So pretty much a year out on that. That 50 put is the one that I just added on Thursday. That's actually up considerably. There's been really large expansion of the spread on that one. So sort of a perceived up. It's not truly up, but the ask has really come up on those puts, which despite that, maybe not actually being a real substantiated up move with it just being an expansion of the bid ask spread, the ask coming up that high is potentially indicative that the market is beginning to price in oil coming down in the next year a little bit more aggressively if those asks are moving up despite the bid remaining where it's at. So interesting market action happening there, but that one is allegedly like 80% green right now despite oil actually moving up a little bit. But yeah, it's just I'm in a position where whenever we get the big down move, which I certainly think is inevitable in the next year, the 39 DTE, the 102 DTE maybe a little bit more sketchy, but whenever that big down move comes through, the gamma on these is such that we could get. I think if any one of these is still alive when the crash on oil comes through, I would wind up winning on all 4.
So do you think oil is kind of in a place where it's worth an opportunity? If you see the risk reward lineup, you like the credit or the debit, whatever you want to pay, it's worth the opportunity, the potential volatility that we might get. Would you kind of put it that way?
Yes, yeah. It's like you said, the reward is just so disproportionate to the risk. They're long puts, which are are still defined risk. It's not what we typically mean when we talk about a defined risk position, but I cannot lose more than 100% of the buying power that I put in. So the risk is defined, and the reward is just so great. Should we, because it just takes the one headline. I mean, I keep saying it over and over, but whenever the war is actually over headline comes through, we rip 3% on the broader market in a single day when we get little hints that things could maybe be ending in the next 90 days. So whenever this is actually real, I think the up move that we get in the broader market and the down move that we get in oil are both going to come in spades. So yeah, I see Saltwater Wizard saying I also took that 50 put from Thursday. Seems like it's up. Yes, it is. That ask climbing. If the bid climbs with it, then we're seriously starting to be in business on those 50s. But it's weird, because it's obviously not a future. It's not a futures product, but it is 365 days out, so it is very much the market trying to price in the future price of oil with those contracts all the way out there. So the ask creeping up, still a good thing, even if it might not be a super liquid thing to actually exit right now.
100%. A lot of volatility in these products. I know I don't have that much time on my oil products, so I'm going to need a little bit of a down move in the next 11 days. So if anybody wants to get that going, start that snowball effect for us to the downside a little bit early, that'd be great. But no, we'll see what we get.
What are your strikes on that one?
For USO, yeah.
USO.
So I was looking at CL, but for USO, I bought the 120 puts. So we're sitting at about, where are we at USO? About 139, 140. So that's going to be about the low from, what is that last Friday? The low from March 31st.
Yeah, that's much more reasonable. You don't even need the war is over headline for that. I mean, 120 is a range that
I'm hoping we just even range a little bit and pull back. Yeah, not even a full blown directional move, but hoping just a little bit of a pullback. So.
Yeah, even if it's just even if we just get another one of those headlines that's like, oh yeah, 2 tankers made it through the Strait of Hormuz, that could be enough to push that down and get you into the green on that.
Yeah, see what we get on that end. But with that being said, anything else in the portfolio standing out a little bit more than the others?
Yeah, Live Nation, LIV, just rocketing back. I did a little sort of life cycle on this one last week.
Was that LIV?
LYV.
Here we go.
No, LYV. Sorry.
LYV.
Yeah, sounds weird.
There you go.
But yeah, this one looked so dead and is suddenly just so alive. Finger hovering over the exit button on this position just, 5-6 days ago. We've just come rallying back. I have a 145, 155 short put spread. So that's 11 DTE. So when it was getting inside 30 DTE and we were testing 145, it was like, oh man, I think this could be dead on arrival right now. And yeah, I was like, if we get the confirmed break below 145, I'm going to have no choice but to exit this. And it could not have been more perfect for that. We just touched that 145 level and then just huge decisive bounce back above the range, up like 75% now in closing. So yeah, feeling pretty good about this one. This is one that I probably am just going to go ahead and take off by the end of the day. In these market conditions and with the miracle rebound that I've gotten here, I see no reason to push this to try to squeeze the last 25% out of it. But I'm a happy camper. Media, Trump's talking.
Nah, I know.
Yeah, waiting for any info. We have eyes and ears around on that. So if we should see any giant moves in the market, we will be able to break the news as to why here pretty quick.
So far, this is looking like the most volatile candle that we've seen since Trump, quote unquote, has been speaking so far. Not sure what's going on. Not sure what's being said. But I guess we'll look forward to a little bit of volatility.
Yeah. I would expect some volatility. I mean, I would expect some directional moves in one way or the other. He has a way of moving the market.
He does, and he has a way of like always having you on your toes, even when it's already like kind of what to expect. To expect to expect something, but it never gets easier in terms of trying to manage your expectations on what to get, because I don't even know if this is going to be anything too serious or if it's going to be kind of a nothing burger and we're going to just be sitting here with all this anticipation. So
I'm watching the moon orbit, not Donnie. Yeah, I was just watching the Artemis live stream last night. It was not very eventful at the time that I was watching. They were just showing a rendering the entire time. There wasn't really much actual footage. Astronauts may have been asleep. I don't know exactly what their sleep schedule looks like up there. I was surprised to learn that they all sleep at the same time, which doesn't seem like what you would do, but that's how it works. And they are woken up by the alarms if anything goes wrong.
You said a NASA stream? What that was going on?
Yeah. There was that NASA has like a continually running live stream. I cannot imagine. You know how like you ever overslept your alarm and you wake up and you feel like you got a suspicious amount of sleep, then you look at your phone and you kind of go into an immediate panic because you realize you slept 30 minutes too long.
100%.
That's like pretty stressful, but I cannot really imagine anything more stressful than being on a spacecraft headed toward the moon and then waking up because there is an alarm going off. You'd have to spring into action pretty quick. So hopefully they are never faced with that situation.
I can imagine.
You would think that an advanced civilization wouldn't need to burn dinosaur bones. We're working on it. we're getting close. 50 years, we're not going to be burning the dinosaur bones anymore. Well, I suppose yes. For fossil fuels, we may be able to eradicate that. But as far as the other uses for oil, like plastics and whatnot, I think we're much longer away on that. There's a faulty toilet on board. I would set my alarm a bit earlier. Yes, I was seeing that there's a faulty toilet. How many toilets do they have? What percentage of the toilets are not working right now? I feel like that's how a good space movie starts, though. Yeah, and it's sort of a trade-off, you know. If you make it out, maybe Matthew McConaughey will play you one day. That's pretty cool. But I don't know that that's necessarily what you'd be thinking about in the moment. Perhaps you would. Perhaps it's some solace. But anyway, yeah, Live Nation, the only other big mover happening in the portfolio right now. Been tracking some of these space stocks. I'll tell you what, I think that a lot of these space stocks, Rocket Labs and ASTS, well, not necessarily ASTS. I think Rocket Labs specifically could be hurt by the SpaceX IPO. ASTS sort of in their own sector with the cell service stuff. Don't know how much they're going to get hit, but I really like Planet Labs. The more that I read about Planet Labs, I really like them. It's basically just a surveillance company, more or less. I mean, they're just constantly taking pictures of the Earth and selling them to the highest bidder, more or less. Okay. They got government contracts, defense contracts, all this good stuff. I think they continue to be a major player in the space. I was going to say the space game, shall we say? Well after the SpaceX IPO, I think Planet Labs could have some promise. I think we are only moving closer to a surveillance state, and as many moral issues as I may have with that, I might as well profit on it too. So I'm looking at Planet Labs for a long-term play.
What was the ticker for Planet Labs again?
PL, but not Platinum Futures.
Yeah, I was about to say, so we got
PL.
some platinum. We got some platinum in the house. Got you. Seen a lot of volatility there. Really, really solid IV rank on platinum. I'm over here calling it platinum already. I'm Planet Labs.
Yeah, Planet Labs took a weird little jump on the successful Artemis launch. People were just looking to monetize that launch any way that they could. Getting involved with all the space companies. I don't know that that's necessarily substantiated. They have nothing to do with it, but when excitement goes up, people got to express it somewhere. So all the space stocks took a nice run when that launch was successful.
100%.
Thanks, Jared. Forgot NASA is live streaming too. Who's got the 3-monitor Gus and Errol Trump speech NASA stream going right now?
Oh, that
sounds like a good way to spend a Monday.
Honestly, especially with this administration, I mean, I feel like bust out an extra monitor or an extra TV to have any Trump speech live on TV or any type of alerts that you need. I think that'd be pretty wise. So
yeah, you can go phone, laptop, TV with you can set your priorities that way. A lot of ways you can skin this cat.
100%.
Don't skin any cats. It's mean.
I don't know. I don't know what's being said right now. I don't know if anybody's got any updates on what's going on. But with that being said, we've gotten a little bit of a pullback. We took the day's low, so we put in a new low right now on Nasdaq at 24,203. Popping to the upside a little bit here as we take that low, but we'll see what we get. Not too much, pretty much unchanged from the start of, I don't know what to call it, the speech, the talk, the conversation that we're having right now with Trump. So we'll be patient.
I think all three of those are valid.
Yeah.
Press conference? I don't even know what this is formally classed as. And does it matter? I don't think it does.
No, the chitter chatter, whatever it might be. But no.
Do you sling anything in Nasdaq this morning off the up move?
Yeah, we did a little bit. We can jump to the TradingView platform. We actually got stopped out at the highs. We actually got faked out on the short. We didn't catch any of the long side, so we're like, you know what? Let's be patient. If we keep running to the highs, let's test one of these levels, see if we can get short. Manage our risk really well, and then the market's completely dumping from where we were looking to get short right now. So one of those days where it's a little bit bittersweet, but we were able to catch a little bit of micro oil, which we've been a little bit more active with just because they've shown such a inverse correlation, and the ranges in oil has been pretty solid too. So Did a little bit in oil when the market opened up overnight. But other than that, not too much going on in NASDAQ. We had the one trade we were trying to pick off today on NASDAQ, but it's really been forcing us to be patient. After we put in the day's high, pretty much been range bound for quite some time. So I'm looking forward to the next couple of hours. I think that's going to be interesting to see how the market positions itself to start the week.
Yeah, kind of ripping back here a little bit as we're talking. Don't know what's going on. Perhaps we just began to price in negativity, and now it looks like it might not be negative. I have some in a space tech ETF. It's up 30% since last summer. Space is great ATM. Yeah, is that you in SPCE or NASA? There's a few space ETFs right now. I think NASA just became a thing recently. I don't think that's been around since last summer.
I'm gonna guess if he's in one. I'm gonna guess Nice Boys in SPCE if I had to guess. Just got a feeling.
I know there's a few of those right now. That's starting to become a trendy thing. And you know what? I'm glad space is trending again. You know, it's 2026. Why are we more excited about semiconductors than the cosmos? Okay, we can do whatever we want. Imagine what happens to the space sector when we make it to Mars, which I think is sort of an inevitability in the next 30 years. What happens to SpaceX stock if they're public and they put somebody on Mars?
Yeah, and
these are the questions. Nobody could trade the moon landing in the 60s.
No, and we also didn't have social media whenever we had all these historical events go down. I mean, what a time to be alive. Any historical event that's going down, we have social media to communicate about it on.
Yeah, Elon the type of guy to change the SpaceX ticker to Mars when they get to Mars.
Oh, 100%. 100%. But no, with that being said, we can jump over to the TradingView platform. We were looking at a trade earlier today. You can see we were looking at these shorts. I don't know what news was coming out at 9 o'clock, about 30 minutes after the bell. But whatever was happening at 9 o'clock, whatever algorithms were going off, whatever banks, institutions, whoever was moving the market, did me a little dirty this morning. So we got stopped out at the highs. Really wanting to just look for the shorts back down to the morning lows, or some of these other swing points that we have to the left side. But we didn't get that. Now kind of selling off to those lows. So market really just forcing us to be patient. You know, sometimes we can really have our levels on in the market, you know, take 10 minutes to execute, and then you're pretty much sitting on your hands for the rest of the day. So that's how the cookie crumbled today. I'm looking forward to more volatility though. 100%. Looking forward to more volatility. But very range
being told Trump is still just talking about the rescue of the pilot right now. So that's where we're at on that situation.
Okay, he's just touching on rescues of the pilots. Nothing
moving the market yet. But I'm sure we'll get to the market mover topics. You gotta start with the high points.
Yeah, we gotta start with the high points. Let's check on our crypto guys. What's going over on crypto? It's been pretty resilient through all the volatility we've seen in the indices.
Yes, it has.
Zoom out a little bit here. Yeah, we got a 69,000 crypto. Zoom out a little bit more.
Happy to see the up move. My IBIT and ETH positions are among the biggest winners in the portfolio today. But it's just it's never enough. I need the
it's
big
been slower, one. It's been a little
slower. These little legs up and then just going back down to 67. I need us to get unrange bound.
Yeah, it's looking pretty indecisive right now, especially on this leg down at least, as we trade inside this level of value, where about 70% of the trading activity occurs. So we might be spending a little bit of time in this range. We might be TBD. That's what we're at. TBD right now on Bitcoin in terms of what it wants to do, directionally speaking.
Yeah, no kidding. And I mean, yeah, and I don't know. As time goes on, and I don't doubt that this is still going to be a volatile, situation, and that things will continue to move in the future. But as time goes on, and we just continue to channel in this range, I just begin to wonder if the market is just sort of formally deciding that this is the fair price of Bitcoin. I mean, because the design of crypto is not to be this volatile, insane growth asset. Yeah. The idea is that it would eventually become like gold. As the finite amounts begin to. As we start to hit the finite amounts of these currencies that are available, obviously Bitcoin chief among them. So we certainly seem to be assessing this as fair value for right now. That doesn't mean it will never grow. It's not supposed to be a stable coin. But I just I become less and less confident that the parabolic moves could come through, and that if they do, they will probably be less parabolic than what we've seen in the past.
Half the crowd is like Bitcoin 100,000. Other half the crowd is like Bitcoin 0. It's worth nothing. And then Bitcoin gives us 50,000 right in the middle. So you guys are somewhere in between.
Yeah.
we'll see what we get.
I find myself in the first crowd, but perhaps I'm just talking through my trade a little bit there.
Yeah, we'll see. Bitcoin will let us know where fair value is at, so we will see what we get going here. Silver and gold, some of the metals. What's going on over there? Have we been moving at all? Let's take a quick look. A little bit more. Yeah. After that next leg down, we kind of been consolidating a little bit quiet on today's end at least. But any of short deltas probably still working out pretty well, especially if it was any credit received on entry.
Yeah, just still continuing to let the premium come through on my SLV shorts. We're well clear of my range now, so it would take a pretty sizable up move to really burn me there. I have how much time left on these? Still 39 DTE on SLV, but 75 is my bottom strike in that short call vertical, and we're trading at just over 65 right now. So we'd be talking about a almost 15% move to the upside to really burn me bad. So feeling good.
I'm not hoping there's a bounce in the metals, but I mean, if we got a bounce around 80, 90, 91, would love to take advantage and get some more short delta on. Not hoping on that while you have the position on. But if we somehow ended up there tomorrow, I wouldn't be upset because once
if
again,
they're gonna bounce, just let crypto bounce with them.
There we go. Let the hedge bounce.
It wouldn't have to be bad, but if we're gonna get a 15% intraday run in silver, give me a 15% intraday run in Bitcoin too. I'm larger there, so that would be fine.
The market looks like it's trying to stair step up just a little bit today right now. I'm not sure what's being said right now, but we're gaining a little bit more volatility to the upside.
Yeah, it's just
as we speak here.
Yeah, I don't know. I'm becoming, and I logically, this is my brain and my heart think and want different things here. Logically, I don't think that it's any sort of certain that the bottom is in. In fact, I think it's probably less than likely that the bottom is in. But in my heart, I'm like, the bottom is so in. We are so done. It's up from here. How could it get lower? But that's obviously an incredibly dangerous way to think. So there is a Shakespearean battle of love and logic happening in my mind right now.
100%.
Someone let us know when Papa Don is done. Still going. I believe still talking rescue. I haven't gotten further updates. If he said something like the S&P 500 feels too low, I think that I would be notified of that.
Yeah, we'll see what we get here. I mean, it's been a quieter Monday open. Again, we got a little bit of volatility in the morning, now kind of pulling back to a new day's low. But now we're kind of trading back within the range that we had already put in. So now we're kind of creating this little swing high and then this little swing low that we're already putting in. So price could be a little bit more choppy if we stay within these prices. So it's really going to force us to start being patient here.
Yeah, we will see if the long Monday, Tuesday, short Wednesday, Thursday, Friday strat works out again this week. You'd be pretty profitable with that over the last few months.
Yeah. We'll see.
All right, well, I know we're pretty close to at our time here.
Yeah, no, that's going to be it on my end. We'll see what Trump has to say by the end of the day, how the market wants to respond. And it's a good day to have a good day, a good week to have a good week. So we'll see what the market gives us.
Yeah. Gonna see what the market gives us is right. Hoping the bottom is in, hoping the top is in for oil. I think it's much less likely that the top is in for oil than the fact that than the bottom being in for the broader market. The oil does scare me, but hopefully it comes down hard and fast and soon. That strat didn't work last week though. Yes, it was the first time in like 4 weeks that it wouldn't have worked out. I think you'd still be profitable over the last 6 weeks or whatever it's been, but would have burned you last week for sure. But yeah, that's all I got on my end.
Cool. That's going to be on mine.
All right. Well, that's all we got for today then. Thanks so much, everybody, for coming to hang out with us. We really appreciate taking the time out of your day. We never take it for granted. Ariel and I'll be right back here at the same time, at the same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to come and hang out with us. We will see you guys next time.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the to the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not a paid, you're not getting paid for this advertisement.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Monday, April 6, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, thanks for sitting in today. Listening to Trump speak right now. How are you doing?
It's an interesting sort of week for these markets because you'd think this would be fun times for those of us that enjoy macro. We had some jobs data on Friday. We got some ISM data today. It's all kinds of fun things happening. Nobody cares.
No one cares. No one cares that the ISM prices paid subcomponent jumped to its highest level since October 22. No one cares that the global supply chain pressure index is at its highest level since late 2023. Well, you and I care.
Yeah, I mean,
people should care.
Same
too.
ISM report. First contraction in hiring in the U.S. service sector since the middle of last year. and the largest since December 2023.
Just the largest part of the economy, and with the non-farm
Nothing to
payroll
worry about
jobs,
here, folks.
basically every sector of the economy is losing jobs except for healthcare right now, which no knock on the healthcare workers. Healthcare is a highly unproductive part of the economy, relatively speaking.
It's also not cyclical, right? This has been going on for years. That education and healthcare has been the driving engine of employment, has been the case at least for the past 3 years. That's as far back as I dug into the data when I was looking at this on Friday.
Since COVID. Yeah.
And it makes sense. We have an aging population. The population of 55 and over Americans reached a record high in March. Unless you think, oh, well, population is growing across all sectors. Very cute, except we have a situation where not only was it a record high population of 55 and over, it's also the largest share on record at almost 31%. So, of course, healthcare workers are needed and that part of it is growing. But that also means that if there is a cyclical downturn, everything else is very anemic and is there to overwhelm that structural job creation. So that job creation doesn't tell us anything about where the economy is going. This has been for years now.
Well, we're looking past all this. In a normal market, we may think these things are important, but not today. We're listening to President Trump speak right now, in fact, at the podium, as we learn about another deadline over the weekend. Ilya, tomorrow night, Tuesday night, set your calendars, 8 p.m. Eastern, 7 Central Time. Coming to a theater of war near you, we'll be seeing Iran annihilated unless they open the Strait of Hormuz again. President Trump's been talking to this for the past hour, 30 minutes or so. There's been a White House press conference where various people now, Pete Hegseth giving remarks. So what will Iran do? Well, they've already offered a statement in response. They said that in somewhat a pithy way, 8 p.m. doesn't work for them tomorrow. Maybe 1 or 2 a.m. would be better suited. So if that doesn't capture the state of the negotiations right now, it does seem like 8 p.m. Eastern tomorrow night is one to watch. So it's another deadline for the market to contend with, where, Ilya, it feels like a typical Monday once again, where we gapped open lower. We're trading higher here. What's actually happening, though? Why are people so optimistic?
I don't think they're optimistic. I think they're waiting to see what's going to happen. There was an interesting report from Axios over the weekend suggesting that there is a 45-day pause being negotiated and that Iran asked for it. And this kind of it's a kind of interesting thing here, but also things have started to move in the Strait. And that's kind of interesting too.
Yeah, they're starting to pick up a little bit, and there's a lot of reporting about how some of these ships are turning off their AIS trackers, and so the number of ships that are actually making their way through the straits is being underreported, and given the amount of traffic going through the straits that's being underreported, are the straits even actually mined right now, or has the traffic stopped purely out of fear? Because there have been enough video of, errant missiles or drones or speedboats hitting tankers. But this is the hard number. These are the numbers that we're seeing according to the AIS, trackers that we actually have on hand. Eastbound, westbound, the left-hand chart, that's going east, right? Outbound from the straits. The right-hand chart is that's going west into the straits. Traffic has picked up a little bit here from where we were in the middle of March. So that's not nothing. We're still 90%, 85% below where we were beforehand.
Don't get it confused, folks. I mean, picking up traffic here is a very low bar, considering it was basically zero. We did get a statement from Iraq saying that they are that they've negotiated an exemption with Iran, and that they can start loading cargoes and shipping them. They told their Asian customers, which of course that's the biggest issue here, China and other customers in Asia. That's the biggest knock-on effect for closing the Gulf. There's at least some indication that Iraq is telling them, hey, it's back on, load up the ships. And then monitoring these 2 LNG tankers from Qatar that are trying to traverse the strait. There's maybe an understanding there now.
If we see traffic starting to pick up, that's going to solve a lot of problems right now. But I think the backwardation that we're seeing in the oil market and the prompt spread here, where last week was $15, there's clearly a lot of acute short-term supply stress, which Ilya, you and I went into today on and we're trading trends video looking at the global supply chain stress index right now, which has risen to its highest level since 2023. It's not at a particularly high level right now, but it is moving up to levels that are, you start to raise your eyebrow and get a little bit more uncomfortable. And it's worth noting that supply chain stress index did not peak until December 21. The pandemic began in the US on January 28th, 2020. So if we think about today's episode and issue of the Iran war, where can it filter down through? The war could end today. It's not going away. Today's slope of help, Ilya, from the gap open lower overnight. This is a 5-minute chart of ES. We're looking at 66.38 here. We really haven't moved over the past 3 hours or so, and really haven't moved since the overnight session began. Europe was closed for the most part. We do see that Easter is in observance there. We don't have Australia. And a number of Asian markets were likewise closed. So today's a thinner liquidity day. You can see here in our market, 800,000 contracts traded, which is on the very light volume side. Considering we like to usually look at a little bit more than 1 million plus by the time Futures Power Hour comes on network. So on one hand, you're not expected to see a great deal of conviction on a day like today when many of the world's major economies are seeing their equity market shuttered for a holiday like Easter. On the other hand, Elia, we are getting a lot of headlines out today, and it is a thinner market. And if you asked me last week, I would have said, oh yeah, these headlines, thinner market, more volatility.
We're going to jump around, yeah.
That's not necessarily the case today.
That's right.
So help me sort through this. Obviously, market regimes change over time, and what influences markets change over time. I'm recalling the Obama episode with Syria and the red line that was crossed, and ultimately there was no bite to that bark.
Yes.
Are the markets just becoming immune to what Trump, to what Iran is having to say right now, and instead just, hey, more ships are going through the straits? There may be more going through the straits than we assumed. Maybe the situation isn't necessarily so dire, and let's just wait for the ceasefire announcement. There's no reason to trade too much around anything else.
Well, I mean, I think that's a nice hope to have, and I think that's what the markets have, a nice hope. But if they were in any way moved to confidence in that idea, we would be sitting here looking at something very different. The markets don't know that that's what's happening. The markets don't know what is happening, which is why you don't have any movement. The dollar isn't going anywhere. Neither is gold. Neither are the bonds. Neither are stocks. Everything is in a holding pattern. And it's because I don't think the markets have any idea what the next thing is. And they're not going to show conviction. Now, you'd think the absence of liquidity would get them scrambling. But to your point, I don't think anybody knows which way to scramble. And that's probably it here.
Yeah, and I did see something earlier, some people saying, how come the IVRs jumped so significantly on a day like today? I mean, IVR just itself, it's a rolling 52-week. We're looking back over the past year to get a scale of where volatility has been. And so that means with each passing day, you lob off days that were more than a year ago. Ilya, we're on April 6th right now, which means we passed through the looking glass of April 2nd, April 3rd, April 4th, 2025, which means that the biggest volatility spike that we had on the board last year is now no longer part of our rolling 52-week look-back period. And so, yes, IVRs are higher now because over the past year, now that we've gotten rid of the first week of April 2025, we're now in the 57th percentile for volatility. Even if you look to your VIX, if you look to your volatility futures, you're not going to see, well, they're both down today. So how come IVRs for stocks shot up, but volatility actually came in? It's because of the window with which we measure IVR. It is a 1-year look-back period, and we just removed the base effects, if you will, that the April 2025 tariff spike provided. So just want to clarify that here. in the short term, Ilya, just quickly at the start of the show. But when we think about our S&P 500, right, we're going through a trend change right now. I'm waiting to see if we can get north of the 1 month moving average, which still has been resistance throughout the entirety of this war ever since that first week of March. We haven't quite gotten there yet. Same thing for the NASDAQ, haven't broken back above 24,300 or so, which has been support for a number of weeks now, going back to that November 2025 low. The Russell, not quite through 2,600 yet, 2,575. So we're there. We're at resistance. The markets are wanting to believe, just non-committal a little bit longer, perhaps. But I'm sure you see this differently. Not that it's ready to commit to something, but heck, if we're going to be near resistance, what does a bear do? What does a bear like Ilya Spivak do?
I mean, this is a pretty straightforward thing. The risk reward here is set up where you can be wrong quickly, but if you're right, you're really right. And so you look at something like this and you go, right, can I size up a put vertical here? Now, for me, there isn't a burning need to add to any exposure because I still have some exposure on the board, but some of it is going to start rolling off. And to your point, the Russell is one where I could stand to be a little heavier, just because I'm going to need to start thinking about, I've got one piece that's 18 days DTE and another one that's 25. It's going to start to need to get a move on. NASDAQ, 24 days DTE. That's going to start to need a roll. Thankfully, I'm all good on my S&P 500 short, so I don't have to do that much there. But this would be an interesting place, I think, if one were inclined to roll exposure. It's also an interesting place if one were inclined to initiate something, because you could find these puts and you could put a good bit of duration in them, just looking, let's say, 46 days out, 53 days out. There's some options, and they're pretty liquid. So if you wanted to, let's say, look at S&P, for example, and look at an in the money put. So essentially, put vertical set up right from where we are here. You could go out, let's say, even out to not even a major move, just back down to the bottom of the range for where we are currently. You really don't have to get terribly creative. You just really need to look at kind of back, let's call it, to the lows from late March, let's say, going into April. If you wanted to look at something like that, I mean, there's plenty that you can do and structure a 2-to-1 or better risk reward setup, buying a put vertical. So,
I mean, even to that point right now, if I wanted to do something like buy an in the money put spread, which is like going out to the 6,800, 6,750 at 53 days to expiration, you could still size up something like a 1-to-1 if we wanted to call this to be a little bit of a ceiling here. And it's a different type of risk to reward than buying something that's out of the money, as it were, because this market can bounce back and you get pinned here for the next few weeks and this thing works out. Whereas if you were just, long the out of the money put spread, it doesn't necessarily work out. But Ilya, it feels like this is a crossroads for the market here, especially on the shorter term time frame, especially thinking about those November 2025 lows. We have that bounce here in the early part of March. Is this a triangle down here coming together? There's a few different ways to interpret this. Obviously, I don't know the answer. If I did, I would just say it, and then I would put the money in that direction. Yeah. But it's starting to feel like a little bit of a termination down here. Maybe it's a trend that's coming to an end against the 1 month moving average on that daily chart. This is the 8-hour time frame. So something has to give sometime soon as we reach the vertex of the uptrend that carried us here off of last week's lows versus the downtrend from the highs that we had throughout March. But Left shoulder, head, right shoulder. The right shoulder is at a higher level than the left shoulder, which is something that you want to see here in an inverse head and shoulders pattern. You want to have that little hunch to it, if you will, to signify like the momentum is shifting directions. We haven't quite cleared out any neckline yet, but in doing so, 6350 we'll call it up to 6700. I mean, not for nothing, a little bit more of a push here. There is a reason to think that there's a short-term bottom that's come together where you can get a relief rally, maybe for 250 S&P 500 points or so. It gets you back close to 6,900, 7,000, and we ultimately make a failed attempt at punching through the highs. But it feels like now we're getting to a junction, a crossroads this week. Failure here at the 1 month takes out the potential for an inverse head and shoulders bottom. If we're above the 1 month, you have to look at this as a potential inverse head and shoulders pattern. And if you're bearish, just get out of the way while a meaningful relief rally takes place in a market that, for whatever reason, just is whistling past the graveyard of supply chain issues.
For now.
Relief rally. Might be a better opportunity to sell ES near 7K. But don't want to rule it out. I mean, we have to stay open-minded. 5-minute macro markets, minds are changing day by day, minute by minute.
Well, that's right. And I think you do have to be open-minded. You do have to be looking at this and saying, okay, maybe there's a pop. But you also have to, I think, wait for confirmation. I mean, if this is a head and shoulders pattern, then its neckline isn't broken.
Not yet.
So you got to give yourself enough time. And frankly, enough fuzz. Because I mean, I would argue you have to basically break 6,700 to make this make sense. And if you do, then back up to the range, up to 7,000-ish, maybe somewhere even like 6,850, just the underside of that congestion from the beginning of the year. Yeah, like right there. Maybe you're looking for something modest.
I don't want to rule out the possibility, right? Because these supply chain, we had those relief rallies throughout 2022. Bear markets often see sharp relief rallies.
Yes.
So we're pinned here. If I'm expressing the new position today, I feel much more comfortable being short than long. I know the IVRs look high, 58.4, but again, mirage, given the fact that the base effect of April 2025, at least that first week, has since rolled off. VIX volatility futures themselves have actually come in a little bit today. So just keeping that in mind. But even so, Ilya, it does speak to the volatility environment that we're in, where over now the past year, this is akin to something like the 60th percentile of volatility. And when IVRs are this high, we do still want to look for ways to sell it. So one thing that has worked out since the start of the war, while there have been little picks and choosing, at least on my end, Ilya, where I've been like getting short, getting out, applying short, getting out. Broadly speaking, the directional neutral stuff has worked best for me because I haven't needed to worry about the day-to-day headlines. I haven't had to watch these press conferences and try to guess what's actually going on. And instead, just sitting through it. 32 days to expiration, the 6,100, 6,200, the 71, 72. It's still working. And I don't think in the next 9 days, as we look to the end of this expiration cycle, it's going to be something that busts out for me. But to that point, if I wanted to do something else, 46 days right now, the one standard deviation move, 72, 73, 61, 6,000. And we can go out here, and it's not the greatest risk to reward right now, but at 6 to 1 at a 65% probability of profit, we could start to pinch those strikes in a little bit closer and find a risk to reward that maybe is like a 4 to 1, where we still take advantage of the high volatility while it's on the board. And if they're going to give us a chance to go out 46 days and sell 71, 7,200 here as part of a short iron condor trade, it's so difficult for me to look that gift horse in the mouth right now. So consistent with that, I'm trying to find the right strike and expiration right now. 46, 53, 39. I feel a little bit better if this market's going to squeeze higher. I wouldn't want to, things that are shorter term might be painful, but 53 days, that kind of feels a little bit better than any other expiration on the board right now.
Yeah, I mean, you just have to give yourself enough time. This is one of those things where you have to decide what you want to do. mean, looking at that Head and Shoulders, if you're saying, okay, you know what, maybe it'll break, maybe it won't, let me set up something in the out strikes for the event that it does. And if I can get the risk reward together, okay. In my mind, the trend is down. That trend has resisted attempts to be turned, and nothing has changed. So if you're going to do anything, if you're going to initiate anything, then you initiate on the short side, and you initiate, again, 53 days out. That's what I'm looking at. That's where I've rolled my S&P exposure. And that's where I'll be rolling NASDAQ today. I'm at 25 DTE. It's time to put some more duration in it. It's making money. No time like the present to book that, take it off the board, go again. This is the deciding line, and the trend is down. So generally, it makes more sense to me, to your point, when you're at the deciding line of a trend that hasn't been overturned, and you can get 2-to-1 risk reward, risk defined, the thing for me to do is to bet the trend continues.
I hear you there. I look at 600 points in either direction right now. We're at 66.31. You're telling me I can go down to 60.50 or 7,200 and look to sell the guts of the short iron condor there? I think that's just, it's worth it. It's a 5-to-1. It's a little bit worse than that as the session's going on, but 10% move in either direction over the next 53 days. Look, if things get bad, I'm assuming it's going to be to the downside. And in fact, we could just look to the 1-4 delta here at 72.50. You go to 1 standard 15 delta down here. So if one of the sides is touched, probably going to be the downside rather than the upside. And if it goes to the upside, Ilya, I think that you're probably going to have a vol crush along the way. So I'm not too worried right now about the upside. But also in thinking about the construction of these trades, right? If I wanted to be bearish here, again, thinking about this right now in the short term, what offers the juice? I'm going to go to 25 days here, just for the sake of this conversation. But if we wanted to do long the 6750, 6700, you're looking at more of a 1-to-1. Whereas if we thought this was going to say, we want to get a little bit of a drop going, so we want some upside, I could effectively cut my risk in half and boost my profit potential by 50%. But the problem is that my probability of profits, not quite cut in half, but close to it. So which one do I feel more comfortable with right now? If I think this market is going to pop to the upside, Ilya, and if I want to reduce my loss potential, the out of the money put spread, actually max loss is going to be smaller. If I think this thing is just going to meander here and I want to give it some more breathing room, I may actually go more in the money, go to like 6,800, 6,850 and buy that put spread and just sit on it. That way I can survive whatever relief rally comes, whatever hope is transpiring through the market. And if this thing then turns again lower, I don't need to worry about it dropping another 3, 4, 5, 6% in order for me to make money on my bearish point of view. But vol has come in a touch when you look at VIX and raw volatility. Ignore the IVR on a day like today, just for a brief moment as we reset the calendar.
Mm-hmm.
We're back to former support turn resistance. So I think this is a great place for either looking at well-structured bearish exposure or initiating new short iron condors to take advantage of our vol. And so that's what I'm doing.
Yeah, I mean, I think that makes sense. NASDAQ is going to be a little bit more expensive vol-wise, and so it'll be harder to structure. But for the S&P, you can structure it. There are things to do. There is a 2-to-1 risk reward put vertical in there that could be had.
Right now, I'm still sitting short Russell deltas.
Likewise.
2550, 2600. Just we hold this neckline here, resistance, as it were. 2575, we're good. Holding below the 50-day moving average, we're still good. A lot of patience. Much preferred the position 4 days ago, but we're hoping just for time decay here. We don't need this thing to go down. We just need it not to go up. and it has not really breached the thresholds that I'm too concerned with. So Ilya, I think we can move on here from stocks. It's a low volume day. Volatility has come in a little bit here. The IVRs, as we've explained, look at them with a cynical eye for a brief moment and understand why they are where they are.
Yes.
And then I think we can move on to bonds. But I do want to take a quick look at the sectors before we go, by the way. There were some things that were teetering last week, like semis here. Talk about a market that's in a triangle, trying to figure out which way it wants to turn. That's probably perhaps the most important one over the coming days. But worst performers down 1.01% in XME. That's your metals and mining. And then your retail ETF, XRT, is your top performer, up 1.06%. So just again, we're not seeing like the 3, 4, 5% days with a GDX or a USO or a XLE, IYE, yada, yada, yada. Today is a relatively contained day.
Yeah.
Perhaps the most contained one that we've seen since the war started.
Yeah. Yeah. I mean, we're sitting here, it looks like, waiting for something to happen. But waiting for whatever this deadline is. I mean, we got headlines today with the president almost like he knows that people are going to second guess him because he knows that he's balked at his own, let's call them deadlines. Not really deadlines if you take them back, but it was a 48-hour deadline, then it was a 10-day deadline for Hellfire and Fury last time. So he came out today and said, I'm not changing the deadline. The deadline is the deadline. I'm not going to taco this thing. Not that you could taco a war, as we've talked about here before. It's not a tariff. You can't just write a number to charge people on a piece of paper and they go, never mind, and chuck the piece of paper. That's not what this is. And of course, the costs are mounting. The amount of ordnance spent is astronomical. Getting that ordnance back is going to require, among other things, rare earths, which is going to require China, which is really interesting because we need the ordnance back to be ready for a conflict with China. So all of this is really interesting, and the urgency clearly is elevated, to say the least. So not surprising, frankly, that the markets are sitting here and going, you know what? You all can be in charge of making up your mind of what this means. We're going to be reactive. And I think that's probably wise.
Yeah, I'm just scrolling through names like QQEW, for example, the equal weighted NASDAQ here, not a futures chart, but this 1 month moving average, we got a little bit away from it back at the end of February. We bounced back to it in March and sold off. Well, now that we've started to bounce back again, where is it coinciding with former range lows near the 1 month? Feels structurally like it's still heading lower. Same thing for RSP here today. This is a really important place where the market could turn. It'd be great if we could turn here near former highs. We're not through the 1 month. We failed there 2 days ago. We failed there last session. We're failing there here today. The market's so hopeful. It really does want to believe.
It wants to believe.
It just can't quite, just not there yet. And as a trend person, as a momentum person, until the trend changes, we're not going to jump in early. But like you see in so many of these places, Ilya, RSP, left shoulder head, right shoulder, maybe trying to turn the corner. Okay, so stocks are believers. What about bonds? Bonds have maybe tried to join the party to a certain extent in recent days. We've seen that the level of concern has tilted away from inflation and more towards growth, which brings up an interesting dynamic because the non-farm payrolls report from Friday was better than expected. ISM services today, mixed. And bonds here, like the stock market, near former support turn resistance, pinned below its 1 month moving average, not quite ready to declare that the catalysts that have driven us here are resolved.
Yeah.
So yeah, I'm looking at the volatility here as well. It's the same story to an extent as what we've seen in equities, where we have a rebasing thanks to what happened in April. But volatility in bonds, for what it's worth, has been a little bit, the move index has gone ballistic on a relative basis, typically quieter section of the market. With the lack of relative movement today, do you chalk this up to being something related to Easter, or is the fact that there's no bond agreement with what's happening in equities, does that raise an eyebrow and, well, make you pour cold water on any of the aspirations of equity market bulls?
I think there's no question that equity market bulls need to be having their hopes and dreams in check, because there's nothing about even the equity market action that suggests anything is different. I mean, the bond market is not showing anything here that the stock market isn't. The stock market isn't making it through the underside of support turned resistance, and neither is the bond market. I mean, it's the same exact chart. You've backfilled in the S&P to retest the lows from mid-October to mid-November last year. That's the same spot we've been essentially grinding against since we broke through it in, March 20th we broke through it. We then tested there for a few days, then dropped. We've rebounded. Now we're testing it here for 3 days. The bonds are not different. It's exactly the same thing. It's the lows from January 20th, let's say, on ZN. We have come back to retest it. We broke it the same day, March the 20th. We're testing that day again. Essentially, both stocks and bonds are saying, is March 20th a break that holds in both markets? And neither one of them is telling us that the break is overturned. I think the standstill is looking at Washington, looking at Hormuz and going, one of these things is going to give. Which thing is it? You increasingly get the sense that the U.S. is in fact negotiating. The question is with who?
Negotiating against itself, perhaps. We are in that portion of the month, Ilya, where we get our run of auctions coming up again. 3-year notes tomorrow, 10 years on Wednesday, 30-year bond auction on Thursday. At the start of the crisis, we were looking to these auctions as a potential bellwether to see whether or not foreign demand was waning as a result of these countries having been big buyers of U.S. debt in recent years, needing to raise capital and not having the money to store around. Obviously not the case. Investors, both domestic and foreign, still fleeing to the safety of U.S. treasuries throughout the duration of the crisis. The foreign demand in the 10s and the 30s, if I recall correctly, which I know I do, those are multi-month highs. September 2025 was the last time we saw foreign demand for some of those auctions at those levels. Another check-in is obviously welcome this week, Ilya. If we were to get that kind of bounce there, good bid to cover ratios, maybe because we have seen yields rise a little bit, and investors, it's not the inflation expectations that are driving these moves at the long end of the curve anymore. It's really that risk premia, the uncertainty over what policy is going to be doing over the long term to handle all these various issues. So I care more about the 10s and the 30s, obviously, than the 3s on Tuesday. So Wednesday, Thursday auctions matter more than most.
Sure.
I'm hoping something happens here because, Ilya, this feels like a place where we're not going to get stuck for a little while. And I've made this mistake before in recent months, but heck, we have to try it again. So thinking that we have a deadline tomorrow, reverse iron fly, just got to do something. Get away from 111. You've hurt me before, but I'm ready to be hurt again.
Okay.
I just need this to move. I need this thing to break out higher and clear the hurdle of 111. I need it to fall back down towards the lows. And it's got to happen soon. Otherwise, I guess I'm done with the reverse iron flies for the rest of this year.
Yeah, I mean, I think for me, I still have a bunch of short exposure in the bonds, and I'm going to sit on it for now. I have got a good amount of duration in it. I've got 73 days at the long end, and I've got 39 days at the belly of the curve. So this is fine. I'm just going to not mess with it for the immediate moment. But were we to break through these levels that we have here, essentially the current range top is the former underside of a critical level.
Exactly. What, 11 and a half or so?
I mean, clearly, right? Like you can put a horizontal line as we have through this thing and go, oh, gee, I wonder what it's bumping against. Could it be the January bottom? This doesn't require any kind of belief in technical analysis. Just open your eyes, look on the chart and go, right, the market has a line in the sand. Doesn't matter why it has the line in the sand, but it clearly seems to have one. We keep bumping against the same levels and getting rejected, and those same levels have a clear reference point where things were bouncing on the way down before. So you look at this and you go, right, if you close above this level, that's enough of a risk-reward signal to say, I don't want to be short anymore. But in the meantime, you're much closer to resistance than you are to support. So the better risk-reward is short.
It feels like these are all connected. I mean, a few days ago, when you got that Morningstar candlestick cluster that's showing signs of bottoming in the S&P 500, the NASDAQ, the Russell, it occurs alongside what happens with notes and bonds at the long end of the curve. You see it
it's
here.
The same trade. It's the both things go down because oil went up because inflation and the Fed idea. Across both of these.
If equities are rallying, bonds are probably going up too.
Probably.
If bonds aren't crossing these thresholds and recovering meaningfully, I have no faith in any equity market rebound.
I think you got to look at crude oil here to tell the difference. These things have been a little bit looser in their connection the past week, though, as we just said, it's the same setup. There has been a little bit more fiddling here in the correlations, arguably because we're having this debate about demand destruction and whether we've sat at high oil prices long enough. We're expecting on Friday that we're going to get a 1% month-on-month increase in CPI.
Cool.
We're going to go from month-on-month now. We're expecting to go from 2.4 year-on-year to 3.4 year-on-year in one monthly cycle.
Do you know what a 1% month-over-month annualized inflation rate is? 12.7%.
Enjoy, everybody. We were going to solve inflation and stop having forever war entanglements in the Middle East.
Did you? And I'm not 9% CPI in June 22. Then I have something to ruin your day.
Let's be clear. I'm not saying that to pick on the administration nearly as much as I'm saying it to say the markets subsumed a policy direction in their pricing.
Mm-hmm.
That policy direction is not what we're getting. Last year it was.
Now it's not.
The tariffs caused consternation, and also the markets knew what was coming, and they got what they had, and so they were able to more easily shrug it off because it's not like anybody didn't know. The president campaigned on tariffs. He delivered tariffs as advertised. He delivered them in ways the markets didn't like, but they were quicker to acclimate because they got exactly what he promised. And exactly, by the way, what people voted for. You can't knock that. This is not what the baseline advertisement was. This is different. Markets didn't subsume this ahead of the election.
No, I agree there. The markets are trying to figure out where is the new baseline. I think gold is one of the valuable. I don't need this Diet Coke here anymore. Gold is one of those indicators right now that to me over the course of the day kind of tells you what you need to know. Again, these are thin markets. Europe, Asia not really participating, but what do we see as oil's bouncing back here? It's whipping around. Okay.
Yeah.
I've seen oil flash above 113. It was close to 114 earlier, 112 and 76 cents. I can just pull this up on like a 5-minute chart. You can see how this thing is whipping around. What did Trump say? Josh, let me know if you see anything. Rare is the occasion that oil falls 70 cents in the span of a flash of an eye. But that's kind of what we need to be paying attention to, because what you see as oil falls back here 70 cents in the span of a few minutes, gold's now up, $10 in the past 10 minutes right now. And it does speak to that ongoing dynamic where when there's higher gold price or higher oil prices, traders, sovereigns are saying, I'm going to need more cash on hand to pay for these higher energy inputs. So the treasuries, the gold are going down.
Yeah.
The U.S. equities are going down, because why on earth would you want to raise taxes or do QE to fight a foreign-led inflation problem? You just sell the assets of the country that's the aggressor in the situation, right? So not surprised that U.S. denominated assets are being sold off to raise cash levels. Ilya,
not much of a response from S&P futures for what it's worth to whatever is
10-point bounce
going on here.
66, 26.50, high was 66.
Gold's kind of a
42. So, but again, oil is still very much in that driver's seat, right? Oil was above 114
I think that's why
15
I think
minutes
that's
ago, and now
really
it's back below 113, and gold following the same track here right now. So if you're going to be a gold bull, you have to be somewhat bearish on oil in the short term, or at least that oil is going to stop going up at such a clip where we need to be concerned with such things. Ilya, I'm looking at 4,700 here, just to keep it simple. Horizontal line in the chart. Resistance in mid-January, pivot support-ish at the end of January, beginning of February. We have our 1 month. We have our 50-day here. We ran into them last week, couldn't get through them. Today, struggling, holding up on the 1 week, but can't crack through the 1 month. It's kind of a purgatory right now if you're a trend person. But if you are a trend person, note that the 1 week is below the 1 month, which is below the 50. So this could be a sell. I myself, I have enough gold going on for me. I think this is going to turn the corner. If this is the problem that we think it is, gold is going to have its day in the sun again soon. But here, this is just like ES and NQ, NZ and NZB. Oh, here's gold sitting at a former support level. Now turn resistance. Can it clear it? Sounds like so many other things that we've talked about today where we're
absolutely
now ready to make that decision. Which way, Western man, or Western markets?
Put an upward sloping line based at the October 28th, 2025 low and connecting the recent lows, including that swing bottom from February. And I think what you start seeing, those are the bottoms, like right there. So it's an interesting thing. And obviously, I am a horizontal line enthusiast. Make it a little bit steeper to actually catch the lows from February.
From February? Okay.
Yeah, that big spike down. There you go. And so you get that line. You can line it up. Yeah. And so you can see you're failing on a test of its underside.
How dare you bring up diagonal lines like this right now?
Now, I'm not going to place a trade on the basis of this, but notice where that lines up. It's also those February closes on that spike down.
Yep.
It's right there. So
yes,
this is the deciding line. So something is happening simultaneously in the bonds, in the stocks. If you look at the dollar index is at a similar level. Yes. So it's all happening at the same time. The markets are basically deciding, is the war trade still on? And
if we're at 4,800 later this week, Ilya, if you're at 4,800 later this week, Friday close, all of a sudden we're back in the uptrend from late October.
Yes.
Back above our 1 week, back above our 1 month, back above the 50-day. That's a very different conversation than if we're closing, say, at 4,600, where it's like, okay, hold on a second. We're below the 1 week. We're below the 1 month. We're below the 50. We're below the uptrend from the November swing lows that carried us into the explosion north of $5,500, $5,600 an ounce. Just psychologically, it's going to change the charts And I've seen some folks suggest that seasonals matter in this environment. Ilya, I don't think you know anyone else who talks about seasonality the way that I do. And I always look for
certainly do not.
Little intricacies and oddities of seasonality.
Yes.
What happens in the 6th year of a president's term when Mercury's in retrograde? Okay. Some may have poked fun at me for it, and I understand why. I will be poking fun at people who are using seasonality in this market. In 2022, Ilya, when the war was raging on, one of the quips I had, because I was tasked with writing those notes for our subsidiary of IG at the time, and I would include the asterisk at the start of every note. These are averages that don't account for the war. The look-back period doesn't have anything like the Russia-Ukraine war going into it. Take the seasonality metrics with a grain of salt.
That's right.
That's how you have to look at this market here, too.
Yeah,
seasonality is an average. What is average about the current situation?
Yeah, I mean, seasonality implies all things being equal, there are seasonal forces. And yeah, there are, all things being equal. But are things equal? Let's be serious here.
Right, like last year, if you went by the seasonality directly, yeah, I mean, if you started buying the market in March and held it for the rest of the year, you did fine. But then you still had to ride out that month of March into April. And
yeah,
then
and everything
also,
looks great in hindsight, but
yeah, but also if you traded seasonally,
that's the fun part with hindsight.
But if you traded seasonally through August, like I tried doing for the first 2 weeks of August last year, what happened, Ilya? I got out of my bullish positions initially, and then got burned a little bit because the market didn't go down, and then I had to flip back to just being stupid bullish. And then it worked out again. So sometimes the seasonality doesn't work out even when things are normal.
That's
but
right.
This is not the kind of environment where you would even look to. I personally do not. I understand why people do. I just think here you take it with a heavy grain of salt.
You have to. This is not anything we have seen in a very long time.
Ever. Oil above 110 here. Maybe the price insensitivity is something to behold. The fact that this market panicked when oil was like $90 a barrel, 100, and now that it's 112. I mean, Ilya, when you're dead, you're dead. You can't get much more deader than dead. So
it's a velocity thing, I think. I think more than anything. I mean, the market initially freaks out because oil is jumping, and they go, "Whoa, what?" And now we're back to basically those highs. We've reset, we've digested, but now we've gotten there in a very different kind of way. Now the war has been going on for a month and some change, month and a half-ish, and now it's a different conversation. Now the market has been sitting with this reality and pricing it in for a while. So that doesn't mean that the market is going to dismiss the fact that there's expensive oil, right? That's not what discounting is. It's not like the market is going to go, well, I've acclimated to the risks, stocks go higher. No, it's just we've reached a level in oil that the market says, all right, given the circumstances, this is about the price of oil. But
in the short term,
not in the short term, but none of the consequences of the price of oil being here go away.
We're seeing that as we get closer to expiration on the contract roll the next month, the CLM6 is really being dragged forward. Now $98. The back months are not showing much of anything at all. Still 72, 73 and change. So this very aggressive backwardation right now, to me, in the prompt spread especially, because the prompt spread usually go find another time in history when it's $14 and you're not going to see it. We just haven't seen action like this in the market. There's still acute supply issues. I'm watching the shape of the curve here intently. Because if we're going to see that this is a problem, we're not going to deal with horrible demand destruction on the other end of this, and we're looking at normalization, not only should the front month come down, the back months should probably perk up a little bit. It's been this really interesting twist that as the CLK6 contract has shot to the moon, we've actually seen the back months start to slack off some. And that's the surest sign that we're looking at demand destruction being priced in by traders. The supply issues can persist and maybe those months will need to get bid higher at some point, Ilya. But right now, as we look to the future, the state of supply and demand in the oil market is one of extreme supply duress and then knock-on effects thereafter. So 112.82 here. I mean, it's still the trade. You still have to be looking at oil. You can't really be trading anything else unless you are looking at what's going on in oil here.
Well, and you can see why. Take a look at BWET. That's just a tanker tracking ETF. And
BWET.
That's right. That's the one. And so you look at this and you go, is this market unclenching? Doesn't look like it.
Does not look like it in the short term. So what to do? Oil, I mean, I'm been of the buy dips in oil, sell rips and stocks camp. I don't see a reason to change that here.
Agreed.
Structurally speaking, bounce off the 1 month average is still holding up. We want to talk about a support zone here. It's pretty wide, but dips between the 1 month and the 1 week throughout the crisis. If you've been doing that, you have not seen a lower low thus far. How long that continues, who knows? This is a snake eating its own tail at the end of the day because it's a commodity. But
that's right.
In the short term, 95 to 106.5. That seems to be the place where the market's going to find support if it has another pullback here. How are we trading this, Ilya? I mean, look, are we going to see 150 oil? I guess it's possible. I don't know. Maybe we should be using this opportunity to go out to 38 days and think here, short iron condor-ish, 79, 77, take advantage of the vol. Where can we go out to? No, that doesn't make sense. Are you serious? We can go all the way up to 140s? Okay, 148, 150. Ilya, we can go in the 77, 79, 148, 150 short call spread. Should be short iron condor with that short call spread set up at 148, 150 to get a little bit worse than a 2-to-1, close to a 70% probability of profit. Yeah, please, thank you, all day long. If oil's at 150, we have other problems.
Sure.
Don't need to worry about this one singular trade.
Yeah, I mean, I'm a little bit long. I got more duration into it. I've got now a call vertical sitting here with 73 days to it. So I've got my delta diluted. I don't see how, even if the war ends tomorrow, that the market is going to get to rebuilding oil supplies in any kind of hurry. And also, it's not like we're going back to the pre-war normal. The pre-war normal, as it stands at this point, no longer exists.
No. That the world we grew up in is dead, Ilya. Haven't you heard?
Yeah.
66.50 here on ES, digesting these latest headlines. The market going into the final 90 minutes of the day, looking for a little bit of spring in its step. Ilya, the dollar here today keeps slipping. Perhaps this is the place in the market that was giving folks the most hope throughout the session, because the dollar pulling back, the yen being the next weakest currency, that's a bit of good news that everyone can hang their hat on. You want to stop reaching for liquidity if we think that this is ultimately coming to an end right now. We talk about all these triangles and equities, Ilya, or head and shoulders necklines, and stocks and bonds and gold sitting on the precipice. And
this is the same story. I mean, yeah, it's pulling back nominally, but is it going anywhere? No.
But it's a compression. It's a compression near resistance. The uptrend that's carried us here this year, like something's got to give. If we're going to maintain the uptrend from 2026, we're going to have to start to break out higher. If we're going to maintain the range that we've been in for the past year, then the uptrend from 2026 has to die. So one of these two technical narratives is about to come to a close. And one of those comes to a close, given the dollar's role throughout this liquidity crunch, Ilya. I mean, if DXY at the end of this week is at 102, you and I are
better believe stocks are down.
Gold's not near 47.
Down. Gold is probably down. Oil is probably up.
Mm-hmm.
Which, by the way, I mean,
we're at decision points.
I'm positioned for all those, for that exact scenario.
I mean, the play here, Ilya, as we wind this down, 6E right now, euro is the largest component of DXY, 57.6% of the dollar index at 60 days to expiration. I know this hasn't been working in bonds, but keeping something like that in mind, if we're just of the mindset that the dollar is going to move, we don't care which way it moves. It's omnidirectional. It has to go up or down. It's going to break out of that little triangle that's coming together.
Yeah.
The reverse iron fly is your friend in scenarios like this. You're directionally agnostic. You just need it to go up or down. It can't get stuck. Either the range is going to hold and we're going to fall back down towards the yearly lows. The euro is going to rally, or we're going to break out here and the euro is going to fall apart. We're going to go back down towards 113, 112. So
yeah.
You and I have more time to talk about this later on overtime, though, and I hate to cut you off, but I do know the producers want us to get going. So tomorrow's calendar, Europe still really isn't online. It's very much a U.S. data-centric kind of start to this week. More Fed speakers coming up. Durable goods orders, lifespans. Nope. Items with lifespans. There we go. 3 years or longer. Think appliances, airplanes, automobiles, the kind of stuff that you maybe finance if you're buying it for your home. Businesses only make those kind of CapEx decisions when they're confident. So we watch that for the financial stability here. Will American consumers have pulled back on the durable goods spending last month? Let's not dismiss that as an important data point. Ilya, we're done. Tasty Live programming continues next after a brief break, as I've so been told. Dr. Jim Schultz is coming up from Theory to Practice, up next, only here on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the Man. We are back. We are so back edition. This show is, of course, sponsored by Ghost. I mean, it's not actually sponsored by Ghost in reality, but it is sponsored by Ghost in my head. We got a little orange cream today. Autumn let me off the reservation to go refill the supplies. So I'm super, super excited. Oh, and by the way, today, man, what a day. Today's Eli's birthday. So today is my son Eli's 9th birthday. It's crazy. I'm actually the stick in the mud. Like, we are the stick in the mud. Like, they're waiting for me to get done. They're waiting for the market to close so that we can do birthday celebrations with gifts, and treasure hunts and all kinds of fun things. And so, man, we are the only thing in the way between my son and him realizing all of his 9-year-old dreams. And so let's try to get this guy kind of tidied up here in the next 40 to 42 minutes. But I appreciate you guys. I appreciate you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, I don't even know. You can celebrate if you're a bull, I suppose, and commiserate if you are a bear. But don't worry, that's all probably going to change in the next 18 seconds. And of course, drop whatever questions you have for me down in the chat, and I'll try to get to as many as I can right around the second half of the show. So, Paul, bring us in to the market. I see you guys in the chat. You're doing it, man. You are 100% doing it for the love of the algo, man. Look at you guys. Brian Samuel, Point B, Emmett Morrison, Wolf, man, Sergio, Griffin Jones, Stan Lucian is here. N1C is in the house. All right, let's take a look at the market. Okay, EME S&Ps. Up 25. You got the risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product if you're brand new to the show or brand new to the markets. It is not risk-free at all. Man, it's going to soil your underoos in a jiffy. You got the Boomers up 132. You got the Russell 2000 Futures Index up 14 on the day. Lots of green on the screen. It's kind of been that way all morning. I mean, last night on the Futures Open, it was a little bit dicey. And then they kind of scooped them right up and sent them higher. And they've stayed strong for the better part of the day, I think. It's been back and forth a lot. But mostly green. You got bonds up 14. You got notes up 5. Got oil up 80 cents. You got UB40 up 17. Man, even the shifties up $9 today. Look at the shifties out there celebrating. You got silver. What's silver doing? Hunt Brothers doing okay? Yeah, they're up 23 cents today, so up over 73. So silver's looking good. Gold is looking good. I think volatility is even up today. Volatility futures down 49 cents, and then spot volatility up 37 cents. So you got a mixed market between, kind of futures volatility and spot volatility. But yeah, the market's so strong, even the VIX is rallying. Like the market is so strong today that even VIX is up about 37 cents. So, all right, so what I want to do though, let's comb the streets. Let's take a look at our portfolio. We'll address the things that need to be addressed, and then we'll see where the wind blows us. And then, of course, right around the second half of the show, it's going to blow us right into you guys, and I'm going to try to get to as many of you guys as I can. So if you have a question for me, I would go ahead and drop it in the chat box right now, and I'll try to get to as many as I can. Don't forget, I typically move through the questions sequentially, so I'll go all the way back up to the top, and I will make my way down through as many questions as I can get to right around the second half of the show. I typically get to somewhere between 1 to 3 comments per show, and so the earlier you get it in, the better. But if you've missed that window, don't worry. You still can bank on a surprise and delight. Still, drop your question in the chat right now. Drop your comment, drop your story, drop your joke, because I may pluck it out of thin air during the surprise and delight section of the show. So, all right, let's take a look at a couple things going on. Let's have a little orange cream here first. Oh, it's so good. Seriously, this is so delicious. Like, it's so amazing. Like, I don't even want to drink these anymore for like energy purposes or like pick-me-up purposes. I just want to drink them for life purposes. Like, you get yourself a little tuna fish and applesauce and a ghost orange cream for lunch. Man, that is a meal of champions right there. But all right, let's go to MCL now that we're all kind of jazzed up. So MCL, obviously, it's not working out super well for us, but it's about the same as it's been. I mean, nothing has really drastically changed for us right here in the M contract. Again, the front month, well, it's only up 80 cents today. I mean, it was up to 115 overnight. But we can sit tight. We can do nothing. And if we get a little bit of relief, I'm not necessarily looking to scratch this trade. I'm not necessarily looking to even get out with just a $3 or $4 or $5 loss. I mean, if I can get out of this thing with a $10 loss, I'm probably going to take it. Like if I see an off ramp that says exit here and you only lose $13, I may go ahead and take that. Because right now you can see, I mean, the P&L Open Bros, I mean, they've already screenshotted this. It's already up on Etsy for NFT purposes and what have you. And so we're getting rinsed on this guy. Like we're getting absolutely hosed on this position. But that's what you sign up for, right? Once again, here you go for the 97th consecutive show. Do you know what you're signing up for? Do you know what you have signed up for? This is such a critical question that I think a lot of traders would be better off if they spent a little bit more time answering that question and making sure, yeah, I know the gimmies I'm going for. I know the gotchas that I have to absorb to get there, and I've got a game plan to get from A to B. Like that's really what it's all about. It's gimmies, it's gotchas, and it's game plans. You got to get that third G in there. Otherwise, it all just kind of falls apart. And so for us here, It's a directional play now. It's a directional play in oil. We are bearish on oil. I know it's crazy. I understand, like it's all these different things, but I don't know, man. Let's just see, because I heard the same thing from the same folks when we had that short call in SLV, and that guy came back home to roost. So anyway, MCL, we're going to do nothing, and I don't feel amazing about it, but it's okay. It's going to be all right. And so MES and MNQ, these are our two short option positions for the broad-based market indexes. We've got MES. This is actually in a really good spot for us. You can see we're right around a scratch on the trade. And so right now, if MES just kind of exists right around here, that would be great. 66.44 is a great level for us for MES. And so that's looking pretty good. And then MNQ, anything over 24,000 would be great. We have a 24,000 strike. You can see we're actually up a few shekels on the trade. We're up about 130 points or so. But we've already rolled that, right? Yeah, we've rolled that one time. What did we sell that for on entry? Hold on a second. Let's do a bit more digging on this guy. Let's go to MNQ. Let's go to our Allison chains here really quick. And so, so we did this guy on March 19th. And that was kind of the height of a lot of the volatility. And we could go back and check the tapes, but I think that may have been VIX 28, VIX 29, VIX 30, something like that. And so we were able to sell this guy for 630 points. So that's a pretty solid looking trade. Then on March 27th, so about a week later, we rolled it out from April to May, leaving the strike the same. And now we're in a really good spot because it's out of the money and we're out of harm's way for the time being. Again, this could all change in the next 3 minutes. That's why you got to stay tuned to see what happens. Nobody else out there in the investing world even knows anything is going on. They all think it's just ho-hum, it's all hunky-dory, we're all-time highs. But you guys are in the know. Like, you guys know things are moving. You guys know things are shaking. But you only know that because you're here, man. You only know that because you're on the Tasty Live Network. So thank you so much for being here. And it's the least we can do for you guys to let you guys know what's going on before anybody else knows. And so there you go. But for MNQ, I wanted to check out what the original credit was that we brought in on entry, simply because I wanted to know what my original profit target looked like. And so, I was looking to peel off 300 points off this guy. And so right now, the fact that we're up, 130 or whatever, we're not quite there yet. We still got a little bit of work to do. And so I'm going to sit tight for MNQ and do nothing for right now. And then that's going to be that. So there's MES and there's MNQ. And then, you got your Dells and your GLDs and Metas and Microsofts and whatever. There's not really much going on with those guys. The guys I do want to focus on, though, are number one, look at IWM. So I don't know how this even happened. Like, how did we let it get to this point, guys? We have made a tremendous amount of money on this IWM position. This is so out of character for me that I'm quite surprised right now. I've surprised and delighted myself here on this IWM position. Somehow we are up like $300 on this trade, and we rolled it. I think we just rolled it last week. It was not that long ago. And so, with IWM only up $1 today, they must be just absolutely smashing the premium in there in terms of just squashing down the extrinsic value on the trades. Now, we did have the 3-day weekend. We had Good Friday going into Easter weekend. Happy belated Easter to you all out there. And the fact that we're up so much on this trade is a bit surprising. But let's investigate this guy a little bit too. If I go to the chains on this guy, so we did the trade. So we did the original trade on February 19th, and we rolled it on March 27th. So like a month later, 5 weeks later, we rolled it for almost what we sold it for on entry. And that was a product of volatility being much higher, right? Remember, like with volatility being higher, that's great for new positions, but it's also good for rolling current positions. Like that's also the perfect time to roll your current position. So if you happen to be in a situation where volatility has expanded, then that can be really beneficial and advantageous for rolling trades out, whether you're rolling them out in time or you're rolling up and down strikes, what have you. That's the time that you want to adjust. And so, and the basic reason why that's so favorable is, remember, Vega for longer dated options, for further out options, is greater than shorter term options, all other things being equal. Right? Ceteris paribus, we have greater Vega in the back month than we have in the front month. So when volatility expands, it hurts it hurts because we're short premium. We get hit on all of the cycles and all of the expirations and all of our positions. But the prices of the options in the back month are increasing faster than the prices in the front month because of the fact that there's greater Vega in that back month. So if we roll from the current month with the lower Vegas to the back month with the higher Vegas, we pick up that differential. Like we're able to pick up additional premium and additional credit for essentially the same maneuver that we would make in effectively any volatility environments. And so that's why when volatility is higher, it can be a really nice time to roll positions too. It's not just about trade entry for new trades. But yeah, for this IWM trade, I'm really, really blown away that we're in a situation where, I mean, our total credits are 708 and we can buy it back for 370. And so when I look at that math, I'm no Julius Spina, but we're about to pick up almost like a maximum profit on the original credit collected, like on trade entry. So like when I put this on at 383, just to be really clear about this, at 383, I'm looking for 50% of that guy. That's going to be, you can never be sure, so we'll put a squiggly line, about $1.90, right? Give or take. Right now, I'm going to be able to pick up about 330, almost 340 on this trade. Like that's a really nice trade. And so I really don't want to think twice about this. I don't want to let this guy kind of, slip out of our grasp here. Let's go ahead and close this guy down and then we'll be done with this. So that's IWM. Quick little victory lap on that trade. Something that the Boston Red Sox know nothing about at 2-7. Absolute atrocity. Absolute atrocity. But let's go at 370. We'll give it a shot. And we'll see what happens. All right, so we got to fill that 370. All right, beautiful. The only other thing I wanted to make sure we talked about today was Starbucks. Man, look at Starbucks. Right, this thing is ripping higher, up $4. Now, because the market is strong, the market is kind of whatever the market is doing, but Starbucks is strong because Starbucks is ripping today. This is a great time to potentially sell premium. Like this is the time, or a time, I guess it could be either, when we want to potentially consider selling a call and laying out some new premium against our 100 shares. This is a trade we've had on for the last 16 months or however long it's been. It's been a pretty long time now. I mean, if we make it all the way to December, that's going to end up being a 24-month project. Like, man, that's really going to be something. Like, I didn't think we were long-term investors, but I may have to rethink the whole strategy, man. Like, we may have to start doing like some dividend reinvestment plans. Start doing a little DCA action. I mean, I feel like the time has come that we got to start looking at some prospectuses, some prospecti here on the show. We'll read them together and see how they're going to take all of our money. But if we go to SPUX, you got to look at those expense ratios, man, because they'll get you, man. They'll get you every time. And so SPUX, let's see. If I go to Starbucks, oh, we got earnings on May 5th. Ooh, Cinco de Mayo earnings? I've never seen anything more bullish. But I'm kind of thinking, I don't really want to so this is an interesting discussion point. So when you have an investment style cover call, which is what I have right now, right? It's intended to be longer term. It's intended to be more hands off. We're not zigging and zagging. We're not trying to dance between raindrops. We're just trying to, be somewhat thoughtful and strategic. Hey, I've got my shares. I want to keep my shares. And then I want to lay premium out against those shares when I think it makes sense. Well, one of the times I think it makes sense is when the stock is strong, it's rallying. You're kind of expecting it to take a bit of a breather. You're kind of expecting it to cool off a little bit, especially since we're talking about Starbucks. Like we're not talking about NVIDIA. We're not talking about AMD. We're not talking about Open Table or Open Door or Open whatever. We're talking about a company that's been around forever. They're slanging the same C+ coffee they've been slanging for decades now, right? They're not doubling. They're not tripling in a couple of months. It's extremely unlikely. And so when the stock is strong, in my opinion, that's a great time to consider laying out some new premium. So when I look at a day like today with Starbucks up 4%, I mean, I don't even know how that's even possible. That could be a bad quote coming through the old pipes there. But assuming it's correct, this is the time to sell premium. Okay, you've got an earnings date that's kind of smack dab in the middle. Now, if you've been following the show for any length of time, you know how I feel about that, generally speaking. I don't like to do new short premium trades with earnings, 2 weeks, 3 weeks, 4 weeks away, because I feel like you're making something that's already pretty difficult that much harder because you've got implied volatility expansion. It's going to eat away at your positive theta. A lot of things I've talked about many times before. But there's a lot of new people that find the show for the very first time today. Welcome aboard. I hope that you stick around. So I don't always like to completely gloss over things I've mentioned before. Sometimes we do a deep dive, sometimes just kind of a light dusting off the top there, and there you go. So for our purposes here, though, I don't think I'm going to let the earnings be a dissuasion against my selling premium because it's not the same type of trade in 45 out of 30. right? In at 47, out at, 22 or whatever. In at 45, out at 30. No, it doesn't make sense. In at 45, out at 21. It's not one of those trades. This is intended to be longer term. So generally speaking, earnings are kind of, it's not something that's going to kind of enter on the radar screen too often. You don't want to be completely aloof to earnings either, but I would not let them kind of be the ultimate decision maker behind what you want to do with, putting on premium, taking premium off, and things like that. And so I'm not going to let the earnings here dissuade me from putting out some new premium against my shares. I'm going to go into May with 39 days to go. And I'm kind of thinking, man, let's just sell. I mean, we could sell a 100. We could sell a 100 for 260. Wow, that's a lot, man. That's a whole lot. You know what? So normally, this has been a really good teachable moment. So normally, with an investment style covered call, and if you guys have been following for the last year and a half, hey, thank you so much. I really appreciate that more than you probably will ever know. I'm usually opting for like 15 to 20 to 25 delta options because I want to leave plenty of runway. I don't really want to put myself in a pickle where the short call is in the money, even though that's a good scenario, just to be really clear. It still becomes a little picklish when it comes to how do I adjust this? How do I roll? How do I move the strike up and down? I'm paying debits at times. I'm doing other things other times. It's just a little bit trickier when it comes to kind of the decision tree and how it kind of unfolds, forward into the forest. For our purposes here, though, I'm actually going to actively choose the 35 strike because I think it would be really good if this thing went in the money. Because not only is that a good scenario for us, but we've only had a few reps and they were kind of early on in the life of the Starbucks trade. So this would be like last March and last April. And so we had to deal with this when it went significantly in the money. And, spoiler alert, we didn't do anything, but we talked about it for days and weeks on end. And so there was no lack of commentary around our not doing anything. But I would like to get into a similar situation now so that you guys can see and learn from, hopefully, kind of the different things I think about and how I analyze a situation where you have an in the money covered call. What do? Especially if you don't want to lose the shares. Like if you want to just give up the shares, then you just give up the shares. It's not that big of a deal. But if you don't want to lose the shares, then there's a lot of different things that kind of are involved there. And so I'm going to sell the 35 delta in the hopes that maybe, potentially, we might find ourselves in the money on this guy. So, all right, let's go ahead. Let's see here. Let's go to a 250, 255. Yeah, 264. I'll try like 262. On the 100 strikes. So no takers on that guy. That's all right. Let's try, all right, 258 is your mid price now, apparently. All right, so we got improved to 260. So there you go. So we got improved at 260 on Starbucks. So we now have on a covered call on Starbucks, again, taking advantage of the huge up move in Starbucks today. And then SLV, look at Snapchat up 9 cents, Snapchat. Man, just carrying the portfolio. Oh, and then look at SPX. It's really funny about SPX is I completely forgot about this trade. Because, you had the long weekend. We had, NFP on Friday morning, which was, it was a complete dud. The NFP was, it was just as made up as it's ever been. But in terms of like market reaction, like I had an eye on it. I was taking a look at what was going on. Literally nothing happened. But they should have just shut it down Thursday night because nothing happened at all. And then I totally forgot about this SPX trade. And then I logged into my portfolio this morning. I'm like, is something burning? I'm like, did somebody leave a pan on the oven? Like, man, this is not going to be good if we don't address this the next couple of minutes. And then I look down, SPX cash, complete ashes, just completely gone. And so, unfortunately, it did not work out. So if you happen to have a banana natty on hand for a Monday at 3:00, that would be an absolute power move. Just go ahead and pour a little bit out for this guy, if you don't mind. So that's SPX. Unfortunately, it did not work out. But all right, let's go to you guys. Man, we're about halfway. We're actually ahead of schedule here, so there you go. Let me see. Where do let me find somebody. Can I surprise and delight somebody? I think I can. It's our show, right? We can do whatever we want. Robert Panel's in the house. What's going on there, Robert? I don't recall you having been in the chat before. It's so good. It tastes so good. Seriously, it's not as good as a sour pink lemonade. We've already gone over this. So, Robert, I'll get to your question in a second. But just in case there are some new people tuning into the show, forget about strangles. Forget about investment style cover calls. You don't need to remember any of that. What you need to remember is that sour pink lemonade ghost and the sour green apple are number 1, number 2. It's 1A, 1B. It's actually 1A and 1A minus. It's not. It's so close for the top spot You're going to be so happy with either choice. The orange cream, I kind of slept on for a little while. It very much does taste like a liquefied creamsicle. And so they really nailed it in that regard. So if you like creamsicles, then you're going to love it. If you don't, then you're probably not. But Robert's in the house. What's going on there, Robert? If I normally buy a 20 Delta SPX 45 DTE call, but I wanted to reduce my risk, is it better to reduce to 10 Delta, or should I buy 5 calls and keep the 20 Delta? I hope that makes sense. Let me read that again. So if I normally buy a 20 Delta call, but I wanted to reduce my risk, so your buying options, is it better to reduce to 10 Delta, or should I buy 5 SPY calls and keep the 20 Delta? I hope that makes sense. So you're buying them. Did you mean to say sell? Because if you're buying options, I'm going to treat this as if you meant to say sell, and I'm going to have to read it again in that context. Because if you're buying options, obviously your risk is, it's controlled to, whatever you bought it for. And so you can easily, kind of toggle that up or toggle that down depending on how much you're willing to lose on the trade. Now, we're typically on the sell side of the option contract, just generally speaking from a Tasty ecosystem, in case you are brand new to not only my show, but the whole network kind of writ large. And so let's see, if I normally sell for 20 Delta SPX 45 calls, and I could be wrong, I might be misrepresenting your position, but I'm trying to follow along. But I wanted to reduce my risk. Is it better to reduce to 10 Delta, or should I sell 5 SPY calls and keep the 20 Delta? So I'm trying to track here. So generally speaking, when it comes to selling options, let's zoom out. So what I'm going to say can apply to not only your question if I'm reading it right, which I may not be, but it can also help us all kind of understand selling premium just in general. So selling puts, selling calls, either side of the chain, it really doesn't matter. Selling 20 Delta, selling 10 Delta. You're trying to figure out, okay, I want to potentially reduce my risk. Should I consider going to a lower Delta? The answer is yes, maybe, sometimes. If that's not vague enough for you, just give me another 5 minutes. I'll make it even more confusing. Generally speaking, it's a balancing act, right? Whenever you sell premium, the higher deltas that you sell, the more risk you have in the trade, yes, but the more credit you're collecting on the premium, and the lower the probability of success you have on that trade. That is the classic gimme gotcha exchange that you have to make when it comes to selling premium along the entire option chain, on the call side and the put side. If I sell a higher delta, I pick up more premium, but I have a lower probability, and I do have higher risk. If I sell a lower delta, then I'm going to pick up less premium, I have a higher probability, and I have ultimately lower risk. You could really go with either, Robert. I mean, if you want to sell a 20 Delta or sell a 10 Delta to potentially reduce risk, that's fine. The thing that I would be very cautious of, though, because the 10 Delta is going to be a lot less buying power than the 20 Delta because it is less risk, right? So, in fact, here, I'll even show you. Like, if I'm in SPX, because you were talking about SPX. So, let's say that I wanted to, I'm at 40, I'm at 39 days to go, right? I'm at 39 days to go. I'm looking at a 20 Delta call, and I'm thinking about selling a 20 Delta call option. So that would be, the buying power on that. Whoa, wowzers, $100,000. Yes, I may not be reading your question correctly, or maybe I am. Shooter McGavin, welcome to the show. So I'm very glad that you are here. But either way, I mean, whatever the number is, it doesn't matter. The relationship is going to be the same, and this can apply to every stock, everywhere. If I sell a 20 Delta call, it's $100,000 in total risk, in total capital that I have to put up to do that. If I move all the way down, let me go all the way down to the 10 Delta. So I go all the way down to a 10 Delta. Now, it's only going to be 90,000. So that's not as big of a difference as I was kind of hoping it would be, because sometimes when you run into a similar situation, you're going to see, wow, it's significant buying power savings. And so naturally, what do people ultimately do when that happens? They at least consider and sometimes act on it. Man, instead of doing one, I should sell two because I'm collecting a lot less in total premium. So to make up for that shortfall, let me sell two, let me sell three, what have you. Well, this is kind of what Tony was talking about this morning on the Skinny on Options Abstract Applications with Tony and Nick. That's your unit risk, right? So now you have a lot more units. So now all of a sudden, yes, they're low deltas now, but they could expand. They could explode even in the event of a huge move. And so a lot of times outlier moves are to the downside. I mean, that's the negative skew that exists in the marketplace. That's why puts are oftentimes really juicy in terms of their premium. But outlier moves in this specific market, they can happen to the upside too. I mean, you get some U.S.-Iran, positive news that the market really likes, whatever that might be. I mean, who knows these days? But whatever that might be, I mean, I could see the market ripping 2%, 3%, 4% in a day, no problem. Like no problem. And so I would just be really careful. If you want to go to a 10 delta, that's okay. Just be really careful with, the consideration of amping up your unit risk to make up for kind of the premium downfall. And so I hope that helps there, Robert. My apologies for not being able to track completely with your question, but I appreciate you there, Robert. I really do hope that helps. And so let's see here. Let me do where are we at? Let me go back to the beginning. Man, I see you guys in the chat. I see lots of birthday wishes to Eli. Man, I will let him know you all said that. Stan Lucian's in the house. Man, Emmett Morrison, Mark Hutchins. Man, I appreciate you guys so much. And I will let him know that you said that. Or Denu. Thank you guys very, very much. But if I go back to the beginning, the Preston is in the house. What's going on there, the Preston? Man, you're the king, man. I don't know about that. What are your thoughts on Microsoft? Great job this morning with the bats, my man. Man, I appreciate you so much. Thank you for watching my show and the skinny and stuff. It's awesome, man. I appreciate you there, Preston. Well, so for Microsoft, I already have the position on, right? We're already short this put spread that it's 11 days to go, but we put this guy on when it was like 27 days to go or 23 days to go, whatever it was. And so it was intended to be kind of a quick turnaround. So I'm not necessarily, we're inside of 21 days to go. Like I understand that, but that's kind of, that's what I signed up for on trade entry. Like I knew we were taking this thing all the way to the end. If we had to, of course. If it would have been easy from the beginning, we would have taken it off and all those things. But right now, I'm just going to sit tight. Like we're a little bit bullish on Microsoft. I don't feel great about it. I also don't feel terrible about it. I'm kind of neutral about the whole thing. And so I have no thoughts really one way or another about Microsoft. But the IV rank is incredibly high right now, 88. It's a little tricky right now because you are first week of April. You're looking at a lot of earnings. They're April 29th. Right? All the heavy hitters are coming out. All the heavy hitters are coming on down the chutes, right? Your Microsofts, your Metas, your Netflixes, your Teslas. They're all coming, man. And so you got to be a little bit careful, in my opinion, with doing a lot of short premium in individual names right now because you're going to have to contend with those earnings events at some point in the fairly near future. And so Orgdenu's in the house. What's going on there, Orgdenu? I saw your opinions. I hope you had a great Easter. You too, my friend. I saw your options portfolio webinar. Man, I appreciate you. What is, according to you, a good delta for bullish portfolio? Ooh, that's a great question. And it varies too much. It varies way too much based on account size and what you're trying to do. And so you may have already seen this one, but if you haven't, and for everybody else that's watching, if you actually go to the Tasty Live YouTube channel, which you guys are obviously already there because you're in the chat, there's a portfolio management crash course. If you hop into the Google machine or have your AI agent do it for you, punch in Tasty Live Portfolio Management. It should be one of the first hits. And in the very beginning of the episode, you're going to see me start talking about Portfolio Delta and Portfolio Theta. And so if I start talking about Portfolio Delta and Portfolio Theta right away, then you're in the right spot. And so I actually work through some numerical examples of how to figure out what an appropriate portfolio delta should be for you. Now, I can't tell you, or Daniel, I can't tell anybody what it should be for them. You have to think about so many things. Like somebody with a $150,000 account and somebody with a $30,000 account are obviously going to be completely different. And not to mention, if one of them wants to carry, 2x leverage to the index, and one of them wants to carry 4x leverage to the index, and somebody else wants to carry half an x leverage to the index, those are all fine. It's not a right or wrong type of discussion. It's a, hey, what are you trying to accomplish type of discussion. That's just, it's going to be too different. It's not, I can't do that right now. I do get a feeling, I have a sense that we may be having a calculated risk on this very, very soon because I think we need to. And so in the interim time, though, you can go to the YouTube channel and you can watch that portfolio management episode or crash course, and it will walk through exactly how to do that. Hopefully that helps, my friend. Sam L's in the house. What's going on there, Sam L? Doc, it's Monday again. We're professionals until the first move. Yeah, the first move is always a sucker's move, man. Like the real traders, the seasoned vets, we know that the first 9 moves are never the move. It's always the 10th move, which also happens to be the second move. So you can, kind of take it down to the lowest common denominator there and just be out the door after a couple of moves. But I appreciate you there, Sam L. Brian Ratkins in the house. What's going on there, Brian? Thank you for being here. Absolute Beginner is here. We should update this commercial with a verse for Jay Powell and whoever's next. Oh, yeah, I saw the Bernanke deal that was right before me. Yeah, that's funny stuff. All those guys should be updated, man. That would be really, really awesome. And so A. Wills is in the house. What's going on there? A. Wills. Give my best to Mrs. A. Wills, of course. We did it. We survived another weekend. I suppose we did. Taco Tuesday tomorrow. I mean, it's written in the Constitution, man. It's right there in the bylaws, man. I mean, Jefferson signed off on it. Quincy Adams signed off on it. The other Adams signed off on it. And so it's Taco Tuesday, man. It's right there in the, the founding documents of our nation. And so I think we're going to be, okay. N1C is in the house. Absolutely says, yeah, JP plays the decks at nightclubs. Yeah, that's pretty good. That's pretty funny. Sam L says the algo running, logic strong, execution questionable. Yeah, that's right there with a little Dr. Jim strategy, if I've ever seen one. Griffin Jones, what's going on? Still slinging some CL, rolling out in time, staying small, and 100% cash futures covered. Theta for the win, 100%, man. Man, if you're selling Theta in CL, which it sounds like that's exactly what you're saying, man, that is a power move, my friend. Because CL, I mean, that thing will kick you in the kidneys, take your lunch money, and then punch you in the face as it runs away. Like that thing will really get you in a number of ways. And so my hat's off to you. My hat's off to you, my friend. It's right there in the, oil, silver, and natural gas. I mean, they're all, man, they're crazy. Now, I haven't traded natural gas in a while. We do a little natty light ice with UNG or whatever. But like the actual futures, which is what you were talking about, plenty of experience with silver and oil, not too much with natural gas, but I know I've read the stories, man. I've read the biographies. I've read the obituaries. Like I know that it can be pretty bad. And so Sergio's in the house. Greetings, Doc. Always good to be here, man. I appreciate you being here, my friend. Thank you so much. Sergio's here. Greetings, Doc. Oh, I just read that. There you go. What's going on there, Sergio? Point B is in the house, man. What's up with Microsoft today, man? I don't know. It's only down $1 though. I mean, it's not too bad. Maybe it's supposed to be higher, I guess. I mean, what are all the other mags doing? Apple's up. Amazon's up. Where's Google at? Google is up. Yeah, Meta's up. Netflix is up. Google or Microsoft is down, and then Tesla's down. Wow, 350? Wow, Tesla's getting blasted. What is Tesla doing? Man, my father-in-law, ooh, man, I'm no technician, but even I know that does not look good. Man, my father-in-law, he did look a little grumpy when I saw him the other day. And now it all makes sense. I don't know if I saw him like here or if I saw him here, but either way, I saw him here too, and he was pretty happy. And so I think now I can just I can correlate his mood to the daily chart on Tesla. Yikes. Oof, man, they need a tweet. They need something. They need some kind of Elon rescue plan to kind of right the ship there. But anyway, let's see. Wolf is in the house. What's up there, Wolf? Sam, algo processing data, still trying to outsmart itself. Yes, it is. It's already outsmarted us, so it's already taken the low hanging fruit. Now it moves on to bigger challenges. Point B, 0DT SPX trade. My second one was a home run. Nice job, my friend. Very, very nice job. There's Emmett Morrison getting in there for the love of the algo, man. I appreciate you. Joe YQ is here. What is up? Yes, happy 9th birthday to Eli. Appreciate you, Emmett. Stan, thank you guys again. Sergio, N1C, thank you guys so much. Point B is in the house. Point B. Wow, Point B says, I heard of Eli when you were off during the Where Do I Start Options 101. That's crazy, dude. That's crazy because that's correct. So I did that show with Brittany in 2017. Eli was born in he's 9 today. So obviously, I mean, I'm no Julia Spina, but even I can figure that one out, right? He's 9 today. It's 2026. That's crazy. I still remember. So this is a funny little story. I still remember. So he was obviously born in April, right? We're doing some high level math today, guys. So I hope you can keep up. So we were on the road that year. Like we were on the road for, it was either the he said, she said tour. I can't remember, but it was me and Tom and Tony and Liz and Jenny. It was great. It was amazing. It was so much fun. But we went to San Diego and Los Angeles at the end of March. And I remember, like, I was on the fence as to whether or not I should go because Autumn was pregnant and, like, she was late with Penelope. And so it's like, all right, if they're late once, they're usually late again. Like, I mean, whatever these, old wives' tales are, I don't know. We're reading tea leaves. We're doing whatever we can do to figure out when Eli's going to be born. Well, we go to San Diego and LA, like, at the very end of March, like March 30th or March 29th, like, very close. Like, she was, like, 39 weeks pregnant or whatever. And his due date was actually like April 1st or April 2nd. So it wasn't April 6th. It was actually earlier than that. So I remember talking to Tom. I'm like, hey, man. I'm like, listen, Autumn's pregnant, right? Second child. I'm like, I don't know if I should go. He's like, you got to go. I'm like, I don't know, man. I'm a little on the fence about this. He's like, you can't miss, dude. You got to be there. Like, he could give two rips about that. Tom's an amazing guy, but he was like, man, you got to be there, dude. He's like, you got to be there. So, of course, I went. And the whole time I was there, I was like, am I going to get a text and a phone call that Autumn's like in labor? And so Autumn wasn't super excited about that. I paid a steeper price for that than I had to pay for missing the groceries on the porch, 2 weeks ago, just to give you guys a reference point. But we did it. I went to San Diego and LA for the tour and then came back, and then Eli was born. And then I actually did miss the next stops, which were Austin and something else. And I was, we were having so much fun on the road. I didn't want to miss, but I kind of had to for obvious reasons. But anyway, I digress. And so Don Duke is in the house. What's going on there, Don Duke? Dr. Jim, please let us know who's going to win tonight. Oh yeah, it's tricky, man, because it's my Huskies and my Wolverines. You're asking me to choose. It's like asking me to choose between my children, man. I really can't. I mean, I clearly have some favorites, but I don't know, man. I'd probably just take the chalk. I'd probably just go ahead and lay the 7 points with Michigan and just call it a day. And just, it's like walking over into the corner and picking up a pile of cash. And so there you go. But let's see. Mark Hutchins, appreciate you. Oh, Denu, why is the SPX trade going wrong? It should be a little green at least. No, we missed the strikes, my friend. And so this is what happens when you do a butterfly, right? Like you can see, you've got to get, especially with no time left. There's only, this guy's going to expire today. You've got to get close to that short strike to make some money on that guy. Now, if there's more time left and you get it moving in your direction, you can get a little bit of profitability, but you really kind of need to get the directional move right, A, and the magnitude of the directional move right, B. So you need both of those guys. Otherwise, you run into a situation like we have here, which, I mean, SPX could rally 30 points going into the close the next hour, right? I mean, it's not likely, of course, but we're just one tweet away. We're just one tweet away from greatness. And so it could happen. And the great thing about it is it's cash settled. So I don't have to babysit this guy. Like I don't have to be at my terminal, like watching the SPX close to make sure I close it really quick so I don't get assigned. It's all cash settled. So that's what makes SPX such a nice product for like a zero DTE type of world, because you can take your shot and then it doesn't matter. It just all gets settled to cash at the end of the day. And so that's kind of nice. Let's see. Oh, Mark Hutchins says, Dr. Jim, do you expect the market to end green or red today? I mean, it's been strong all day, right? So I would imagine it's probably going to stay green going into the close. I mean, it might limp into the close. It may not be like a super strong, robust close, but I'd be surprised if they gave it up going into the close here. I mean, all eyes are on, I guess the deadline is tomorrow night now at 8 o'clock or whatever. I mean, the deadline's already been shifted. I mean, nobody shifts goalposts better than this administration. Like I've already seen it, 8, 9, 11 times in the last couple of weeks. And so now it's all eyes on tomorrow night at 8 o'clock. And so, it's going to be very, very interesting to see what happens. Griffin Jones, talking about SLV at 66. Is it at 66? Yeah, it is. Look at that. So that's looking pretty good. We're up about $1 on the strangle. So that's pretty nice. Let's see. Robert Darcy's in the house. What's going on there, Robert Darcy? It's like Mr. Darcy from Pride and Prejudice. Yes. What's going on there, Mr. Darcy? That's crazy, man. I'm going to tell Autumn that Mr. Darcy watches my show. She may start watching the show because, I mean, again, on any given day, on any given Sunday, for my Willie Beeman fans that might be watching the program today, it's a zero delta that Autumn's going to see the show. So we are totally safe. Man, we could say whatever we want. We could talk about whatever we want within reason, of course. As long as you guys don't rat me out, man, we are good. We have never been more safe. This is a safe place. This is the safest place in the world where Autumn will not hear or see or feel anything that is said. But if I start telling her that Mr. Darcy's watching the show, she may pop in from time to time. And so what's going on there, Mr. Darcy? Yeah, ES failure of acceptance at 66.50. I don't know, man. We'll see. You might be right. We will see. And there's Organia. I appreciate you. Oh, there's Sam L. Doc teaching the setup. iPod Touch already took the profits. That's right. That's exactly right. I'm going to show you guys the theory. iPod Touch coming in with the practice, man. Like that's how we do it. That's a little 1-2 punch for you guys. Let's see. Brian says, I just threw up in my mouth. That must have been the tuna fish and applesauce comment earlier, but you can't knock it until you rock it, dude. Like, have you tried it yet? And I'm not talking about albacore. Like, you've got to I want the chunk light stuff in water, and it's got to be unsweetened applesauce. Like, if you're going to do it, you got to do it right. You can't be doing this faux version of something that I'm not going to co-sign on. It's got to be the legitimate, the OG. Chunk light, the stuff that you can get a 30 pack for $3. That's the stuff I'm talking about. Right, the stuff you can get at the Dollar Tree that expired, 6 to 9 months ago. That's the stuff I'm talking about. That stuff with some unsweetened applesauce. Oh man, it's like a little taste of heaven. And so if I go to, Griffin Jones, increase your chance for surprise and delight by sending bling to the producer. Yes, you should do that. You can send it to Paul. You can send it to Josh. You can send it to Beth. You can send it to Laura. You can send it to Ryan. Send it to James. Send it to Matt. There's a number of people that you can send it to. And so, yes, that is correct. Or Daniel, honestly, I don't know what the doc wants to get out of the MCL trade. Yeah, we're just playing it short. We're just trying to, whittle down the losses a little bit. In my opinion, and again, I could be wrong. I mean, time will tell, right? And you got to blaze your own trail. But what I personally like to do when I'm in a trade and it's giving me fits and I'm hemorrhaging losses, I'm doing whatever, I don't typically like to just exit at in my opinion, the worst possible time. Now, it could get a lot worse. Again, I don't know. But looking at it right now, it's pretty bad, right? It's pretty bad. I typically like to just sit tight. Let's just sit tight. Let's make sure the size is in check. I'm okay. If we end up taking more losses, I don't love it, of course. It's not what I want to have happen. But I have simply found through experience and through just kind of, being in the arena for many, many years now, oftentimes there will be a more favorable off ramp at some point in the somewhat near future. There's no guarantees. I don't know what's going to happen. According to the internet, oil's going to 250 by the weekend at the latest. Right. So if Johnny Poole is 47 and 48 and 49, they're all kind of posting and retweeting each other. And they've got this kind of, this team atmosphere going on. If they're all correct, then we're going to be in a real big world of hurt. But in the event that they're wrong, which they've been wrong a time or two, we may have a more favorable off ramp. So that's what I'm playing. That's what I'm going for. And, time will tell. We'll have to see. And so let's see. Darren Munson is here for the algo and for Eli. There you go. My man. I appreciate you so much. P&L Open Bros are the Bears. Yes, they kind of are. Samuel, happy birthday to the future market wizard. Hopefully inherits the brains and not the dad bod strategy. Yeah, hopefully so. He doesn't have a strong interest in trading. Like, he'll see me doing it. He'll see me looking at the markets. He's not super interested. He does have the math genes though. He has kind of grabbed onto that. Penelope, not so much. She's more like reading and language. Like, that's where she really excels. Amelia wants to be on camera. She wants to have the microphone. So it's very interesting that she's kind of gotten that aspect of it. We'll have to wait and see. I mean, she's only 6, and so I don't know. I mean, her earning strategies are amazing, but the fact that she can only count to 20 and still do that is pretty impressive. And so we'll have to wait and see on all that stuff. But man, I'm out of time. Wow, it's so fast. You guys have no idea. You literally have no idea. But I appreciate you guys, man. I appreciate you guys so much. I got to roll. I got to get you guys over to Tim. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Hello, everybody. Tim Knight here. Welcome back from the long weekend. We've got full trading weeks going until Memorial Day. Paradoxically, I kind of consider this time simultaneously one of the most boring but terrifying moments in recent market history. It's boring because we're just kind of stuck waiting for like the event. And the event being, of course, some decision, some resolution about what's going to happen next. Because what we're getting now is kind of a version of the first Trump administration's the Chinese talks are going well shtick that went on for months and months. Of course, there was the Chinese trade wars, and it all wound up nowhere, really. But they found there was almost like an elixir, a drug to give the market to keep assuring them that trade talks are going well, trade talks are going well. And that helped things sail along. The big difference this time is that when you're having trade negotiations with another partner, they're all looking kind of for a win-win. They all have each other's, mutual collective interests at heart. They want a deal. This one, the psychology is a little different, but you do still have two sides that have their own motivations. This time, not very aligned. And the trouble here is that the goalpost keeps changing, because let's say NVIDIA was going to have their earnings announcement next Tuesday. And on Monday, they said, actually, it's going to be Wednesday. And then Wednesday morning, they're like, you know what? We've got some big things to talk about. It's going to be Friday. People will be losing their minds. Now, it's a stock, so they'd probably kill the stock. But I'm trying to make a bit of a metaphor here that if the market is waiting for some given something that will provide them information to make a decision, and that something keeps changing, people simultaneously go crazy and get sick of it and bored of it. And that's kind of what's happening now. Because, this what's next with Iran thing, like, okay, we're going to give them 48 hours. Now we're going to give them 5 days. Now we're going to give them 10 days. And then when the 10th day shows up today, it's like, remember, the deadline's tomorrow. It is. It changed. I watched the press conference. He's like, so I guess I gave him 11 days because it's the day after Easter and I want to be nice. That's almost a direct quote. So that was the live reason for another 24 hours being added. I don't have a lot of faith tomorrow that at 5 p.m. Eastern, or 8 p.m. Eastern, I guess it is. In my head, I'm always subtracting 3 because I'm on the West Coast. That, this is it. Here we go. Ostensibly, the event's going to be by, again, this changed so many times. I hope I get this right. 8 p.m. Tuesday night. If they don't have a deal they like, then in a 4-hour time span, they're going to blow up every single bridge and power plant in the whole country. That's it. I strongly suspect that something will happen so that doesn't happen. Either there'll be yet another delay, he'll talk out on it, or there'll be some kind of deal that like, well, we're going to give it a good hard look and, something. It's boring. It's just, can we just make this thing go away? Because the stock market, if you'll recall, used to be about products and management and profits and revenues and growth and all these other things, and not like, what's he going to tweet next? But that's one tweet is way more powerful than all the earnings announcements you can think of right now. I call them tweets as shorthands. I'm not going to call them truths, but one tweet can move trillions of dollars on or off the collective wealth of the stocks of the world. So, strange world we live in, and I have, for all these reasons, lightened up. My options portfolio, I talk about commitment level. It's at 29%. Whisper thin. My short portfolios are way under 100%. Not only am I not using margin, I got cash just sitting around collecting dust, losing value. So I'm keeping it light, because I can't make decisions in this environment very well. Well, I can, but they are fraught with this other big uncertainty that can make all my lovely charts sort of irrelevant with one tweet. So keeping things light, that's what I'm saying. Having said all that, let's look at the charts for what it's worth to see what's cooking out there. And I'll say a thing or two about them because I've always got an opinion. Here's the ES. Everything's green now a little bit. The market's up about 0.5% or so. The big bounce was last week. This is the ES with the Fibonacci's drawn. We are kind of hanging out in this huge range
As I mentioned last week, sort of the easy part's over, because the higher we get here, the more mass we get of activity, all that overhead distribution, so slows things down. So, if one were like a loony-eyed bear, which sometimes I am, it's probably a great time to just short everything with a ticker symbol. But this could be all upended with one tweet, like I keep saying. So I'm not going to do it. No thanks. I would also say, get off my soapbox in a sec here, that if it's like, that's it, no deal, guns ablazing, it's not like the entire market falls in the opening 30 seconds the next day. If you look at when this war started, after February 28, it took weeks for things to fall. The reaction the following Monday was down, but it was down just a little compared to the whole thing. So what I'm saying is that if you're like, I want to get in on the short side, you got more than 4 seconds to do it. If things start to turn south again, I think it'll last a while. Crude oil is up. And it's very confounding because crude oil was up very strongly, especially you can see this massive bar. I guess that would have been on Thursday. But we're right now at the highest, looks like another record high close, and the equities are like, whatever. Which is astonishing because energy is an important cost component of everything, and it's basically doubled in price in about a month. But equities seem to be past carrying at this point. The diamonds are approaching a gap. The gap's right there in orange. Little wiggle room here, but that's not a terrible place to think of in terms of price resistance. The small caps, the IWM, aren't near a gap per se, but they are just beneath this rectangle of the distribution top, basically equaling the high we saw here. So you can see we had formed this top, fell hard, pushed back in briefly, fell again, hit resistance, fell harder. So this was a new low for the year on Monday, I guess, and then up again, matching this level. So you can see this level counts. There's a reason that things are pooping out at about that level. The buyers run out of gas at that point. As far as the cubes go, those are up 0.5%, and it's kind of the same deal as the small caps. There was an easy pop last week, but there's a lot of overhead supply going all the way back to September, and that's holding things back because you've got however many hundreds of billions of dollars of ownership are represented at those price levels, that some portion of which is glad to get out even and sell. There's a certain portion of those folks that have been waiting to get out as a wash, and that selling pressure keeps things suppressed. Over in semiconductor land, which is a bit of a fixation of mine, SMH, nothing's really changed from when I saw you on Thursday. We are still within the confines of this trading range that we've been in for some months now. We briefly got below it last week, all too briefly, but went leaping higher. This was, of course, Monday. We opened quite weak, but it's been up ever since. And we've essentially undone the big damage we saw on Thursday, Friday, and the following Monday. So we're basically returned to this area. So here we are about, if you kind of think of this range as 0 to 100, we're kind of at the 40% mark right now. But it's, as I keep saying, that the easy pop is sort of behind us. What I'm certainly not sure of now is if Iran right this second said, we cry uncle, Mr. President, here's a blank sheet of paper, you write the terms. That would be bullish, but I'm not sure how much of that bullishness is already factored in. I don't think they would hand him a piece of blank paper, but I'm being a little facetious to make the point of I'm not sure how much of the this will be fine psychology is already built into equities based upon the bounce we saw last week. Because as I've said before, if this war had never happened, if February 28 and 20 came and went and none of this had taken place, there's other things going on to think about besides Iran that affect the value of the stock market. So, so this is just this is a delightful noise we're having to deal with right now. SOXL weirdly is a better behaved chart than SMH, even though it's leveraged. It did a perfect tag of its price gap, absolutely perfect to the penny. So we'll see. We'll see if it respects that or not. As I said, I'm keeping it light. NVIDIA, which is a key portion of that, looks way more like IWM, not IWM, it looks way more like SMH, obviously, being in the confines of that big range that's been grinding out. This one even longer, all the way back to July. This has not really resolved yet. We hit our low last Monday, which basically equaled the kind of low we saw back here in early September. But ever since July 11 or so, we've just been grinding around in this range. And until it definitively breaks below it or above it, there we go. We'll just continue. And the longer it goes, the more potent the breakout or breakdown will be once it does take place. Gold, still below its price gap. Not doing much of anything, down about 0.5%. The miners, almost exactly the same, down a little more than 0.5%. And obviously very little down in any meaningful ways on the short list today. Just a few interesting ones. And these are so zoomed in, you're probably wondering, why is he even short these? Where's the pattern? If you look at the entire history, you can see the pattern. For the sake of timeliness, I stay kind of zoomed in on this, so you won't necessarily see what on earth I'm thinking, but I really am short these. So here's Dow, DOW. This down about 2% plus today. ALB, this one you can see. This is ALB, a beautiful little head and shoulders, not complete yet, but if it gets below the rectangle, it will be. That's going well. That's down 2.7%. And then HPQ down not quite 2%, and I'll stick with that so long as it stays below that lower high. A few ETFs of interest. The financials, XLF, also getting near a gap, right like so, where that orange line is, that dot's highlighted. And then XLC, which is, I believe, communications. This one has a nice, clean resistance line on it as well. For myself, I'm not short any ETFs except being bearish against SOXL by way of those puts, and earlier today, a modest size, boring old SPY short position. Neither of them very big, but yeah, I'm not really into any particular ETFs in a big way. A couple of country funds are interesting too from a gap perspective. Canada, EWC, you can see the price gap right there in teal, and EWW, that is Mexico, another little teal gap right there. Nice, clean gaps showing the points of resistance. ARC, I still think it's worth keeping an eye on. It's it's kind of a twist looking at the cubes. It's got a pretty clean top here. It did push back into it some, and it's below it again. Now it's pushing up against that big rectangle. But you can quite plainly see here the very definition of downtrend: lower highs and lower lows. And so the point to watch here is, can it manage to push its way back into the rectangle, and if so, how far? That seems a pretty potent top to my eyes. But as I say, Spider is the only thing I've got a straight up equity short on. Very simple, very dull, very clean top, similar to this one. And I would say, if you look here, I mean, it's as plain as day. Rectangle, dip, retrace, plunge. Rectangle, dip, retrace, question mark. You know, what's next? I don't know. Hopefully a plunge, but if something crazy happens, if the aforementioned blank sheet is pushed in front of the president's desk, it could well just like rip right into that rectangle and render it moot. There is no statute that makes it forbidden for prices to do that, but this is a situation of probabilities and historical comparisons. So as we stand here right now, it would seem to me the more likely outcome is something like what we had back here. That'll be informed, I think, also by what Bitcoin's up to. Bitcoin's having a strong day, up well over 4%. So long as it doesn't exceed this high here, we still have a chance of completing the analog I've talked about so many times. But Bitcoin's been relatively robust, especially yesterday and today in light of all this. One last real quick one. Rarely do investment banks offer any sort of sell signal. I think JP Morgan did one against Tesla. Tesla has since December lost almost 30% of its value. Rather amazing. I have no position. I will mention, though, just before the show, just for the fun of it, I laid down a Fibonacci from the low here to the lifetime high. And interestingly enough, we're coming right up against that fib retracement light. So ironically, JP Morgan's sell signal may coincide with a pretty decent buy opportunity. Who knows? Okay, well, tomorrow when I see you again, maybe we'll have a little bit of clarity. 2 days from now, we'll know for sure if the deadline is passed or not, or if there's a new deadline. But it's a little exhausting. I suspect some of you feel the same way. I'll see you here tomorrow regardless. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME Futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm, hey, ring the alarm, boys! Turn up the charm, listen up, y'all, get out the damn stall. It's the last call, hey, the last call, the last call, the last call.
Jamal, my friend, we are back for the last call. We've got E-mini S&P 500 futures shopping up 23 right now, 66.45, touched 66.50, I think was the high of the session. No, I'm sorry, 66.61, the high of the session, but this has kind of been the high of the last couple hours here. NASDAQ up 129. You got the Dow up 111. You got the Russell up 12. Everything up between 1/4 and 0.5% here. Very muted day, a low volume day with the E-minis only trading just under 1 million contracts here as we go into the close. You got oil futures at 112.58. They were down a little bit in the early part of the session today, rallied up into Trump's little press conference there near the high of the session here. They got 115 in the overnight session where we had a little bit of weakness, a little bit of a pullback in the market. When we first opened on Sunday, bid in oil, that kind of came down into the early morning session here. But again, chopping around here. You've got volatility futures at 24.09, the VIX at 24.43. both volatility across the board has kind of been compressing a little bit down here at 24. Bonds have had a little bit of two-sided action. We've chopped around 113 to 114. We're at 113.28 right now, up 10 ticks. Gold down a point here. It's been kind of choppy in this session, as well as silver at $73.13, up 21 cents. Bitcoin has been steady at 70K here on the futures spot at 69.7. What do you make of this market today? I know we were talking off air kind of about just the low volume choppiness of today's market. I was seeing that, Europe was closed. The Europe markets were closed for Easter today. Do you just take this as kind of a grain of salt day? Like, I know nothing really to take from the market today.
I don't see how you can't. I mean, we've had essentially kind of a 5% rally from the last time you and I were here a week ago, and we are all the way back to levels from the Wednesday before. I mean, I don't see how you can really take a whole lot of inventory from this today. Oil is higher. I mean, that's the big thing that we haven't been able, that's the big circle that we haven't been able to square, right? Like, oil is much higher. If I would have told you this a week ago that oil would be at this level, you would think we would be certainly near lows. A lot has transpired there. I would say the other thing that's interesting on a day like today is Bitcoin being at 70K. I mean, we should give
risk
that
on.
It seems like it, right? And it's interesting. I had my good friend Kevin Dav from the NASDAQ in this morning. We were talking OTCL. We were talking, obviously, most things NASDAQ. But right before the show went on, I said, wow, look at that. Bitcoin is 70K. It was my first time noticing it. We were starting the show. And he's like, you're excited about that? And I was like, yeah, for that exact reason. I think it's a risk-on sort of measure.
I would think so. I would put it in that bucket. I mean, to your point, we've gone over the last 2 weeks. We're kind of back to where we were on the last Monday. That was like kind of an up Monday. Last week, it was kind of a down/flat close there. I will say that the move in oil, in a vacuum, you say, oh, oil's at 110, 115-ish. How did the market do? On Thursday last week, we ended the session basically unchanged. It's kind of a wild one there. And then today, you have oil higher, market higher, volatility contracting, bonds actually rallying a little bit, which is kind of weird too, because you expect, we have some CPI data coming out at the end of the week. You expect that to be higher. I know we had Glenn on where they projected it to be 1% higher, which I think to myself, okay, you put a real high ceiling, you come in right below that, it's sort of bullish, right? We only had 0.9% inflation. We thought it was going to be 1%. That's kind of it's like a manufactured story of sorts.
It does seem like that's something could happen. Do you think we're going to move on that? I mean, everybody knows we're obviously in a higher inflation environment as long as oil is high. So I guess I almost think like it's going to be somewhat of a non-event. We already know that inflation is a problem because oil has gone up.
Yeah.
How are we going to, I don't know. I just don't feel like.
I feel like the surprise factor is out of the market.
That's what I'm trying to say.
You're seeing it a little bit. You got oil at highs. You have oil volatility near the higher end of the session here, but significantly off the highs. The little bit of a bounce we've had in equities as well, kind of speaking to that. Like, maybe we're kind of in that it's bad, but it's going to like resolve at some point sort of soon. And so like, why get, all crazy?
Well, I don't know if recent history is any indication. We've had a couple of days over the last several weeks where we'll get a smaller range. I won't say smaller range. And then we usually get it followed by a big one. So, I mean, today, 94 points in range here in the ES. 140, obviously, you talked about Thursday. That was a wild day. Mike and I were on the floor. That was pretty strange. April 1st, only 92 in the orders and 230, obviously, on the 31st. So, yeah, I mean, there's been some days where we have a smaller range followed by a bigger range. Maybe we got that coming at some point or another. But, yeah, definitely a somewhat of a throwaway day compared to what we've seen more recently.
For sure. Throwaway day is a perfect way. I mean, you look at gold and silver, basically, not much action there. Gold futures, only 86,000 contracts traded today. That is abysmal in terms of volume. Oil's been kind of choppy here. E-minis have been in a 15-point range pretty much all session.
Yeah.
Volatility at 24. That's very, very tight range. We got filled on an SPX Iron Condor today at a 10% profit target. So we did it at $4.40 and closed it for a 60-cent winner. 3 minutes and 37 seconds. Wow. It took us to get 60 cents out of it. It was almost like, we opened, traded for about 30 minutes, and then the day was over. That's kind of what it felt like today. Was like, okay, we're going to button up the hatches a little bit and then be done for the day. That's kind of what it's felt like.
Yeah, it's kind of anticlimactic. Kind of like many of the games that we saw this weekend.
Yes. Who do you like tonight? 6.5 point spread.
I've been saying Michigan was going to win it since I was asked 3.5 weeks ago. I said I like Michigan. I said I like Houston.
It's a decent amount of points. 6.5.
I know 6.5 is a decent amount of points, right? But do you really feel like, I really don't feel like a former 2-time champ, which still has a senior on that team in Caravan, I don't think they're going to beat them by 6.5 points. I think it's going to be close.
You think it'll be close?
I think it's going to be close. I think it'll be a game of runs, much like the Illinois game the other day. I mean, Illinois was up 10 at one point, and then it was a game of runs. They never really quite came back.
Michigan's just been...
A lot of things happen when you get in a championship game, man. People get a little tight.
Yeah. The pressure's on. That's...
Dude. And whoever gets going first, you know what I mean? I think it's going to be a really good game.
I think so, too.
The big dude for UConn going up against Mara. I mean, that's gonna be an interesting matchup. I think it's gonna be a fun game to watch.
Yeah. I was saying because if Illinois would have won, which I was rooting for Illinois, we wouldn't have been able to bet on
anything.
I would have to go to Indiana. I'd have to drive over to Hammond, maybe play a couple hands of blackjack there, Horseshoe.
I know.
And then get my bets in. That would have been an interesting spot, which is the silliest rule.
The only real bets I had on were at this point were stuff to win the championship. So I had I had a South Carolina and Michigan winning championship. I also
South Carolina for women's?
Yeah, so they got obliterated yesterday. Did not plan on that. They were a 1.5 point favorite. UCLA smoked them, bro. Wow. I don't know. I wonder what was the last time that Dawn and South Carolina lost by that many points, let alone a championship game. I mean, period. That just doesn't happen too often with the ladies teams when you get
it's usually them versus UConn every single year.
Yeah, and it's usually not a blowout for the most part, not by 20 plus points. That was something else yesterday. So that didn't go well. But I had a UCLA women's and I had a UConn as well. So I will be cheering on your UConn in that way. But I thought from the outset, Michigan had a really good shot to win it all. I still think they might tonight.
Yeah, they look good.
They do. I mean, how are you going to feel about that? That's a Big Ten team.
I know. I gave a lot of flack to the Big Ten. It's been a while. I mean, Vanetta brought up the last time a Big Ten team won was Michigan State. I think it was 2000.
2000 probably, yeah. I remember that team. They Wisconsin faced them, obviously during the regular season, but in the Final Four. Wisconsin, who used to score 40 points a game, Wisconsin, when they were kind of boring to watch. They went up. I was actually in Madison at the time during that Final Four. It was fun times, man. Fun times.
Yeah.
But I remember that. I didn't realize it was 2000. It had been that long since the Big Ten.
It's been a little while. I mean, Kansas won 3-4 titles in between that time. So.
You guys did. You guys won with Chalmers. Was that 06, 07? Were you there then?
It was
08. It was 08. It was against Derrick Rose. This is the intersection.
Yeah, you're right. You're right. That was the year before.
I used to do a lot of sports trivia.
Watch that. Yeah.
Yeah. All right, that was a good game against Memphis.
Derrick Rose missed 2 free throws.
Yes, and then Chalmers hit that crazy shot, right? Yeah.
In overtime.
I bet that was good times.
Yes.
That had to be fun.
Yes.
You guys won one since then? I can't remember.
No, we got a couple Final Fours.
Yeah. No, it's been a good tournament, though. It was really fun. I'm going to miss it, but on to the Masters. Masters is here.
That'll be fun.
You got a dog in that?
Yeah, I'll wait for Mikey to give me his full break.
He was talking about it a little bit. I was trying to pepper him a little bit.
He has little nuggets.
Oh, my God, dude. He is.
Strokes gained, lefties because they can.
He talked about that today.
Yeah. Well, I'd listened to him all day long. So. Back to some of the stocks, some of the things moving today. You got some of the
if you can find them.
Healthcare stocks. You got Tesla down 50 or so from over the last couple of weeks here. It's looked pretty awful going.
What's going on with
SpaceX? I think it's kind of the SpaceX IPO. You got
Isn't that good for Tesla?
I'm starting to think that it's. I think all of these IPOs, you have $3 trillion, let's call it, of IPOs coming. The liquidity is going to have to come from somewhere. I think some of it's going to come from these Mag 7 stocks. Like, you got to get it somewhere. And I think a lot of people are like, you know what? If I own, $100K in Tesla that was $10K, 10 years ago, why not take half off the table and buy SpaceX with it? I think that's kind of what you're looking at.
Dude, I'm glad you brought this up. This is the lowest level since 9/11.
Yes, it's
like 9/11 of last year. Huh.
Yeah.
I think this is a point. I'm going to have to step in here.
It's been a dog.
The IPO's not coming out until
I don't think
fourth quarter, I think. I just saw something a little while ago. I think they said the fourth quarter.
Oh, really? I thought they were trying to go
maybe
earlier.
I'm seeing something wrong.
I don't know. It's still very undecided. There's no specific date there.
Yeah, I don't know. Oh, maybe I'm wrong. So the report suggests June 2026 listing. I don't know. Either way, I think this is an interesting area here. Might have to do a little something. Maybe it's time to line up a calendar call.
There you go.
400 strike, long the May. Short what? I can't short April 20. Maybe I short April 24th expiration. That's
Go
not
into
bad.
the earnings.
360 for one that far out.
Vol's pretty cheap there too.
So that was actually an interesting thing, as you mentioned. Again, Kevin Dowd from the NASDAQ came on the show today. In the last 2 weeks, he's mentioned this, and you can pull it up and look at it too. The idea of skew to the upside is way more cheaper right now across the board.
Via the skew index, you looking?
No, just and look at Qs, look at SPYs.
Oh, sure.
Downside compared to upside. Skew is historically pretty cheap to the upside right now. Upside is cheap, I should say. Forget about skew, but the idea of how cheap upside is, it's relative. It's pretty cheap historically across the board. So, point being, if and when we do get a bounce, right, it could be vicious to the upside at some point.
Yeah. So if you go, the quick, easy way to do skew is either equal distance out of the money, or you could go to delta. Just go into the 20 delta in May, 545. You look at the 20 delta on the upside. We'll say right here at 622. So you got about $34 to the upside, and to the downside you have almost 43. So you got a pretty significant skew to the downside just when you look at the Qs. I think that's across the board. I mean, the downside move that we've had has been fairly orderly. You've had some big days, but I feel like it's been pretty well telegraphed, and I feel like we've been sufficiently hedged. Like, the market volatility has remained high. You've had a little bit of choppiness. You've had these face ripper bounce backs. I feel like if you had been buying over the last month, just like straight up puts, just like long puts, you probably didn't make all that much money, just because volatility has sustained a high mark. You haven't had these washout moves. It's been pretty choppy in between. If you were doing short-term puts, you got killed because you would buy them into the weekend, and Monday was the top of the week. You buy them on Friday thinking the weekend was going to be crazy. The weekend gets crazy, and then Monday we're up 80 handles. It's just been kind of a very contrarian market here.
After 2009 and 2010, I used to spend a decent amount of time trying to predict the next big down move and buying.
And how'd that work out for you?
Did not work out well.
It's hard.
And so that's why when you get in environments like these, I don't love the idea of trying to buy puts, because there's not always the follow through, Nick.
Yeah.
Look at Thursday. Thursday, man,
it looked like
we should have been down 150, 200 points.
Yeah.
And stayed down and not come up.
Yeah.
And then ugly over the weekend, a long weekend, might I add. And more rhetoric, especially the rhetoric we heard yesterday, which went around the world. Everybody saw that. And still, we come in today and we're basically flat. We're up 20 points. And so the follow through, and again, I'm not wishing for harm for the markets. I don't want to see that.
No.
But it just seems to me, it just seems to me to make sense that when you have the environment that we have and you have the rhetoric going around, that there's going to be fear. Yeah. And the fear doesn't always manifest itself. So the idea of buying the puts, I think, is really hard. I would rather watch the market fall and have cash available to make the play to the upside.
Yes, agreed. That's a way easier trade. Quick little PSA. Booking Holdings had their split. I think today was the first day. Stock's up $8 and change. So it'll have options which should be more tradable, but these options right now are just horrific. I would stay far, far away from these and trade only the round numbers here when they are a little bit more liquid. But you can see no volume, very little open interest here. No open interest, very little volume, I should say. But that one is on the table. One of the standouts to the upside today, along with some of the memory stocks, you have like Micron in there, SanDisk, STX, Western Digital. Those are doing their thing.
They're back.
Yeah, they're back. You got a little bit of a move in Boeing. I put on a call diagonal spread in AXP. I got bored while we were sitting here before the last call because nothing was happening today. MasterCard was another one that's having a decent day. Some of the bank stocks, but really not much like jumping off the screen to me today. It's really been kind of a oil-driven market. I mean, I've been trading a lot of oil, USO, CL futures, MCL, if I want to get into the smaller ones. That's really where the moves have been.
Yeah, no, that's where they've mostly been concentrated. But yeah, overall, I mean, it's been those names that were like the biggest ones moving today. A lot of those storage names. I mean, they're back, man. They've been smoked and they're trying to make a return. Actually, for those who've been seeing Signal or Noise, this new segment we've been doing, that was actually one we highlighted today, Micron. So be on the lookout for that over the next several hours. It'll drop sooner or later. It's a really interesting trade that went up in there. But yeah, man, I didn't. I mean, how many trades did I do today? I'm trying to think.
Today was one of my lighter days. I did.
Yeah, as it should be.
27 today, which is, it sounds like a lot, but it's pretty light.
I mean, first of all, I did like 3 or 4 closing trades. I think I did 7 trades a day.
Oh yeah,
4 of them were closing. Yeah. 2 of them were, well, one, I had this crazy, I mean, it's crazy in the term of traditional tasty trades, but
sure,
I was long a bond straddle.
Okay.
For the weekend. I was like long it. Like, hey,
bonds have been crazy. Why not?
See what happens.
Yeah.
It didn't work. Bond vol came in. So I just closed it out this morning. 30% loss on that one. I was long corn and soybeans. Similar deal. Long those for the upside play.
Yeah, I'm not.
Trader Hermuz, fertilizers. They really haven't done much. Close those for smaller losses. That's kind of been the day. I actually had an oil call spread that I had on the 105, 107. I was up $500 on that. Closed that out. But yeah, it was mostly closing trades. The only real additions today were the Tesla calendar calls I just put on and a Boeing crab trade that came from the YouTube chat. That's pretty much it.
Yeah, Boeing, I put on a strangle there today. It was high volatility, and I really haven't traded it all that much, but I think that speaks to, a day like today where volatility is contracting, nothing's really moving, pretty low volume. You're kind of going to the fringes of your normal trade setups to find something. Boeing, I don't think I've traded in quite some time. I was like, okay, well, it's kind of in play right now. Might as well.
Should be.
It's the only thing really doing anything today.
If you look at a heat map, it actually looks like what I love to call the Christmas tree type of days, where there's a lot of red and green sprinkled all over the place, and you can't make heads or tails of any one sector standing out, which basically screams rotation.
Yes.
Basically screaming rotation on a day like today.
Yeah.
Especially on a day like lighter volume. I think everybody's kind of getting their ducks in a row, doing a little bit of management and getting ready for the next huge move, which who knows what direction that's going to come in.
Yeah, for sure. There's a couple other things this week. There's an FOMC. I think the minutes come out this week. I don't think that matters all that much. But I think it's more of, tomorrow you have the deadline, the big deadline.
What's tomorrow?
8 p.m.
Tomorrow?
Yeah.
Wasn't today supposed to be a deadline of reducing no strikes? But obviously, after saying you're going to bomb them to holy hell, then I guess that doesn't really matter.
It's been
Wait, what's tomorrow?
Tomorrow's the deadline.
The deadline?
Okay, you missed this one.
I did miss this one.
And you missed annihilation. I guess
tomorrow's annihilation?
Tomorrow is the deadline for something.
Wasn't a year ago?
I don't think we know yet.
It was a trip because on Thursday, it was a year ago that I think it was supposed to be Liberation Day. And then also a year ago, either today or tomorrow was like the big move to the downside last year, April 8th, right? I feel like.
Yeah.
We're getting it again? Is that what's going to happen?
I don't know.
I took off my Mayhem trades. Maybe I took them off a little early. We'll see. I still have VIX calls. That's the last thing I have right now.
Ooh, spicy.
I got VIX calls, the 23 and the 24 calls. So
yeah, volatility has been a weird one. You have, we're below 24 right now on the volatility futures. The VIX itself at 2430. It's had a pretty swift vol contraction. We actually, for the month of March, we had a great 0DT segment today. The VIX averaged 26 through the month of March. So it just stayed perpetually high. We're below that now. So it seems like for the moment we've digested it a little bit, but my former Super Bowl Chris Vecchio, who you'll get the pleasure of listening to after this one in 5 minutes, he's still not on board. Which makes me sad.
Well, yeah, I mean, this is not the way that he likes to look at the market. I mean, this is borderline falling knife for him. So he wants the market to be at 7,200. And then we're all like, oh no, we're fading. And he's like, oh, I'm buying. Yeah. Going higher. That's the kind of market he wants. It's no surprise he's not interested here.
E-minis, much of nothing here. They're up 24. You got the NASDAQ up 122. You got the Dow up 143. You got the Russell up 9. Do you have any static delta across the board? I'm short the Russell, long the NASDAQ, and kind of a little heavier on the Russell side. I think the move in bonds has been a little goofy. I feel like if there is a big move lower in bonds with rates and yields going higher, you would expect Russell to go down pretty significantly. That has not played out.
I am my main position, core position, is the NASDAQ currently straddle now, long trade.
Yeah.
Start as a strangle, currently as a straddle. That's my core position. I do have a super bear trade on an SPX for this Friday. I put that on the week, like 10 plus days ago.
Yeah.
I got to make a decision on that in the next couple of days. And then I oddly enough, I have a super bull that I put on a while back. That's on the 20th. So I really want the super bear to work in the short term so that the super bull will work in the longer term. But
perfect.
You know,
I like it. I don't
know if it'll work out that way, Nick. The way this market has been.
Listen, it certainly can. I mean, I have not put on a lot of new positions. I put on that Boeing strangle. I put on an AMAT strangle as well, just kind of getting itchy fingers here because nothing has happened.
I know.
But a lot of the trading over the last 2 or 3 weeks, from a delta perspective, it's been trading around my position. You have put diagonal spreads on that I put on in IWM and SPY and the Qs as kind of ways to get some short delta, but not be statically short delta, via the micro contracts. Into an up move, I like to leg out of the short puts. It's a way to get some more short delta into better prices because the market's higher, but you're not putting more risk on the table. With some of the stuff that has worked, I had a Jade Lizard on in Oracle, I took that one off kind of quick, just trying to take off risk and take money when it comes and not think about it and just kind of cycle through positions. Sort of how I've been trading around this market, because it wouldn't be a shock to see us down a couple percent on the week and then up 2 weeks from now. You've been getting those sort of moves, so I kind of like that as a trade setup.
That was the idea, and that was the idea. I put on early last week with the idea that there's going to be a Friday where we're going to be probably the end of the week selling off into risk.
Yeah,
didn't happen last week. We'll see what the script is this week. So far, slightly up.
The market has seen the patterns. I was getting that email of because I was seeing it too. Everybody
works for so long.
Every Monday, we had 5 or 6 weeks, I think, where the Monday was the up move for the week, and then pretty much from Wednesday to the close of the week, we reversed basically the whole thing and then some. And it was like that every single week. You have this
every single week of March.
Yeah, every single week was face ripper Monday, and then you have a steady decline through the rest of the week. Last week, we bucked that trend where Monday, we had kind of a strong close where we closed not at lows.
Sitting right here talking about it,
But the trade would have been after that kind of move to just sell into it. And then we had a face ripper the rest of the week. And so, I think it goes to the whole market cuts. If you see it, it's too late. Yeah. You know what I mean? If you're I've seen this pattern, it's going to work this next time, you're too late because everybody's seen it and everybody knows it. And,
it's happened all too many times.
It's happened all too many times. As we go into the close here, we got 15 seconds here. E-minis at kind of the highs here, 66.50. up 29 and change. You got the NASDAQ up 142, the Dow up 175, the Russell up 11. You got oil futures up 95 cents here, 112.50-ish. Volatility futures at the lows of the session here, 23.84, just getting smashed into the close. I think I call this one a nothing gained, nothing lost today.
It's exactly what it is. Very quiet day. We'll see what the rest of the week brings.
That's it for us. We got more coming up after this. We got overtime with Chris and Ilya coming up next. Stay tuned for that. We'll see you tomorrow morning. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want, with Tasty Trade.
Another deadline looms. It's Monday, April 6, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We are here to take you through the rest of this half an hour, 27 minutes as we wind down the trading day. I guess we're back to our typical Mondays, Ilya, where the market gaps open lower, at least for stocks, only to trade higher by the end of the day. We do get a green close here for the S&P 500 back to 65, or rather 66.51. NASDAQ up by 0.6%, 24,365. The Russell up similar amount, 0.4%. It's a pretty decent day for risk, even though oil prices continue to nudge up. 112 and change is where we find ourselves now, 112.30 cents. After hours, just below the open outcry close of 112.41. So it's an Easter Monday where oil opens higher and more or less stays there from where we were in first call. But there's not a lot of trading volume in today's markets, with most of Asia still on the outs, Europe on the outs. Ilya, S&P 500 only gives us 1.04 million contracts traded today, which is fairly light. The lightest volume day that we've had since the war started. So where are we now, Ilya? We find ourselves back to our 1 month moving average, where we find ourselves back to our November 2025 swing low. We look at a crossroads here in the S&P, the NASDAQ. What to do when you take a fork in the road, Ilya? Do you take the fork? Can you have your cake and eat it too here? Or do you need to pick a direction?
I think for me, as somebody inclined more directionally, just generally, as a strategic kind of view, I think if you're going to do anything, then what you have is a short about as clear as you can slice it. So when we look at all of this, we end up with what ultimately? Let's do that experiment when you take the chart and you flip it upside down. If this were a chart pointing in the opposite direction, how would you treat this? A rounded bottom, a break of neckline resistance, a pullback to retest that, buy. At least that's the risk reward that would be on the menu, right? You would say, okay, we're sitting right at the dividing line between what could be a breakout and maybe not. And you'd say, okay, well, we're really close to where the resistance is. Let's say NASDAQ, what we have on the chart here, really close to resistance. Maybe a little fuzz here. Resistance and support are never just a line. They're usually a range. So somewhere around here, you're really, really close. And support is, let's say, back to 2,300 or 23,000 rather on NASDAQ. Back to, let's call it 6,350 on the S&P. Let's say 64. Let's not be greedy. Okay. So you've got the ability to risk a little for a shot just to come and revisit the lows again, which is several times over your risk. As far as I'm concerned, this is a short. Now, you don't have to do that here, certainly, but to my mind, that's the best risk-reward idea. I would certainly not be a buyer, though, as we discussed on Futures Power Hour, there are some signs of maybe bottoming, if you want to believe that that thing you're looking at is a head and shoulders pattern, but it's not until it is. And for that, you need a break. And so your invalidation point here would be the same either way. In the meantime, I think the bias is to be a seller. And from there, if it is a head and shoulders, it'll invalidate your short exactly the same way as if you were just looking at a horizontal level. And so, okay, if it invalidates, you don't just get out, you flip it over. I'm on that kind of time this year anyway.
Yeah, what time is it? Well, I mean, if the market isn't able to clear its 1 month tomorrow, Ilya, you have some false starts here, technically speaking. They look like inverse head and shoulders patterns. You can see a market that is trying to find a reason to go higher throughout this crisis. It's looking for every little bit of hope. Today, Trump says we're talking about a potential ceasefire. The market goes up. Iran denies it, rejects it. The market doesn't go down. Mm-hmm. Stocks are trying to turn the corner. They're trying to look through the other side of this right now, even if there are still significant supply chain issues burbling. So have we cleared those necklines yet? Look, low volume, not on the other side of the holiday, not on the other side of the 1 month moving average yet. 66.58 here in ES. We don't get a close through there. We're about 10 points away. For the NASDAQ, similar situation, 24,358 here, 367 is your 1 month. The Russell is through the 1 month, but it hasn't cleared the 50, which has been more important on the way down, in my view. 25.67, it goes to there, and we're currently at 25.54. So a push higher tomorrow gives you a lot of technical confidence, but this is a point I raised on Futures Power Hour today where you sat in on for Thomas Westwater. Thanks very much for that. Do you trust technicals? Do you trust seasonals in this environment? Do you really believe in these patterns for follow through, or do you just have to take it day by day with whatever system and mechanics you use?
I think the notion that you trust this or that is itself kind of a misplaced notion. I think what does it mean to trust an indicator? Should you trust an indicator? Should you trust a technical pattern? Should you trust anything ever, really? No, you should be managing risk. And you should be looking at this in a probabilistic way and saying, what is the thing that is likely the thing that I can use as an anchoring mechanism to arrange my thoughts, but most importantly, to manage risk. I think when you look at basic technical analysis, what are you looking at? The price. Should you look at the price when you're trading something? Yeah, you should. Should you be looking at this or that indicator because it is the holy grail of indicators? Well, you shouldn't be doing that anytime because you're just asking for trouble. There is no such indicator.
No, there's not.
Is seasonal pattern watching something that's a robust framework here? Well, anecdotally, no. Because we're not looking at like-for-like comparisons. This is not the same April type of environment that there has been other Aprils. There's a wonderful opening to the Passover Seder every year that goes, what makes this different from every other day? And you look at this and you go, well, it's pretty easy to see what makes this different. I mean, how many Aprils in the annals of seasonal history do we have a Middle East war where the Strait of Hormuz is closed to compare this to? Not many. Let us say.
It's like in 2022. There's not many analogs. It's like COVID.
That's the thing. Like seasonals, what?
You follow the seasonality in COVID, for example, if you decided to get long in the middle of March, it actually worked out really well. If you did that in 2022, it worked out miserably. Worked out well in 23, 24, 25, but there's in 2022 versus 2020, there are crises that are happening. One of them is something that the markets can paper over to a certain extent, as long as there's enough liquidity to keep the music on. The other one is a supply chain disruption of molecules, right? Where even if people want the supply chains to stay open, they can't because of war. The supply chain disruptions coming COVID were self-imposed. We could reopen at any point in time. And, 2 weeks to stop the spread eventually got thrown away and the commerce resumed, Ilya, right? So it's a little bit different through each scenario, but
yeah.
We do have a market rally here today. That's certainly, folks were taking a look at the tape action from the end of last week. They were looking at the weekend's news and they determined today was a good day as ever to get more of all of it. Retail stocks were the leaders to the upside. XRT, you have your home construction ETF with yields staying constrained. That likewise is a bit of a bounce there. The banks are showing some signs of improvement, which I think is very welcome given the private credit concerns and the gating of more redemptions in recent days from various funds themselves. KRE getting a little bit of a bounce here. And, this is one of those reasons why I feel like you could see a market that doesn't want to give up yet. KRE as well. This thing, downtrend, November 24, September 25 highs, trying to hold the uptrend from the April 25, November 25 swing lows. I mean, we're doing it. We're trying to do it. So it feels like we may be at a particular turning point. This deadline tomorrow night with Trump, let's see if it's another one that just comes and goes by the wayside. He says 8 p.m. Eastern tomorrow. Over the course of 4 hours, every bridge and energy related piece of infrastructure in Iran will be bombed and destroyed. So the clock is ticking. Iran has already responded with a very pithy 8 p.m. doesn't work for us. How about 1 or 2 a.m.? Which I'm not joking. It is legitimately what the comment was put out. So it seems like we're on some sort of collision course here for tomorrow night. The market, Ilya, it feels like we're banking on a Taco Tuesday, given how stocks close.
I mean, either that.
I don't buy it though.
Yeah,
at all.
I mean, either we're banking on that, or we're banking on somebody caving, or the market just doesn't know what to bank on. And I think that's probably the most obvious readout of what's going on because nothing has gone anywhere.
Well, it's not that nothing's gone anywhere. It's everything's returned to trend, right? I mean, for example, just look at XLY, trading back towards its 1 month, which is sitting below the November swing low now. You have XOP. and XLE, which have both fallen back to their 1 months, but they're holding the trend support that's been in place for the better part of the entirety of 2026, basically. If you've been buying XLE or XOP at the 1 month, the yellow line, we've had a pretty decent run here from 45 up to 60, a quick little 33% gain. XLF right back to former support. I mean, we're almost through. Industrials, huge leadership group from last year, still sitting on the wrong side of a trend line. So a little bit more price improvement, Elia, than, I take off whatever short delta views I've had. I stick to the directionally neutral things because the volatility is still fat enough and rich enough where if you want to give us 7,200 and 6,000 as strikes that we can operate around and still get a 60 to 70% probability of profit, and maybe not such a fat 3-to-1 or 2-to-1, but you want to give me a 4-to-1 or a 5-to-1, 600 points away in ES, we can't look the gift horse in the mouth. And I know that's something that we did earlier today on Futures Power Hour, ultimately, but it is worth revisiting here. You and I have a little bit of a different take on this. I see that this isn't just one or the other. If I wanted to get short, this is the place to do it, yes, but also 57 IVR, VIX is still sitting above 20. You could do both. You could take a little bit of short delta. You could also go directionally neutral on a longer term basis if you don't think the risk to reward is great here on getting long just yet.
Yeah. Yeah. I mean, if you wanted to go directionally neutral here, you could. I mean, the question that would immediately come to my mind here is, what is your urgency to put that position on and tie up that capital? And I think there's an argument that, look, this isn't going to get
bills to pay, got mouths to feed.
I'm saying this isn't going to get any clearer, right? Like, this situation is not going to, it's not going to get any less fuzzy. So if you're not sure what to do, you've reset to the point where nobody is sure what to do. So if you're going to have a breakout from any spot in any direction, this is as good as any. So this is a good spot to be, I would argue, directionally neutral, just looking for a break some direction.
I'm trying to think of the timeline here because geopolitical risk always comes to pass. Sure. That's to say that we become like frogs boiling in water. The initial shock of hitting the hot water gets everyone jumpy, but then eventually we go, okay, yeah, we'll survive this. It happened with Russia, Ukraine. That war's still going on. It happened with Israel, Gaza. Israel, Gaza, Ilya, October 7th happens. The market bottoms. The market bottoms on Friday, October 27th.
Sure, but I think it's important to remember that neither Russia, Ukraine, nor Israel, Gaza, in fact, even less so Israel, Gaza, has the kind of economic impact that a closure of the Strait of Hormuz has.
Of course,
this is not those wars.
It's not those wars. I'm not suggesting it's worse or better than those.
I think it's much more economically disruptive. I think that much
for sure. No. I'm definitely with you there. I'm curious, at what point does the market start to stomach that this is the baseline? Because there's the initial shock of this just happened, we're reacting to it, and then you have folks holding out hope. This is a temporary setback. I don't need to adjust my baseline. It's just temporary deviation. At what point does the market say, okay, 25 VIX is the norm, 20 VIX is the norm? It's just going to be mostly background noise for what it's worth. We're going to have to deal with this. Prices are going to be higher. ISM services prices paid today, the subcomponent for March, came in at the highest level since October 22. So inflation's coming back. The CPI is expected to show a 1% increase on a month-over-month basis. That's 12.7% annualized inflation right now, higher than anything we saw during the 21-22 episode when inflation peaked under the last administration around 9% in June of 22 that year. We know this is all coming, Ilya. Isn't the whole ability to take risks, the uncertainty, the inability to forecast the future? If we know with a high degree of certitude that this is going to be a problem, can't we just etch that into stone and move on with our lives at some point?
No. And the reason you can't, and maybe the markets can take sort of moments here, but the reason that you can't is because all of this boils down to the same thing. And we've seen bonds and stocks lock in and respond to the war the same way in almost identical moves. We've seen gold come down as a function of all of this. We've seen the US dollar come up. That tells you very clearly what the read-through is for markets. This is at minimum an inflation shock that stops rate cuts in their tracks. And if this does become a story where there are rate cuts, then they are the wrong rate cuts. And in that scenario, maybe stocks and bonds diverge, maybe gold and the dollar start to do some different things. But for the moment, that's not what you have. For the moment, you have an inflation shock and no rate cuts on the menu. For the rest of this year, maybe one next year. That's the issue. This is why you cannot ignore this, because you cannot benchmark what it means that there are no rate cuts, that there is no easing in an environment where we're worried about the state of the economy and demand destruction. We're worried, and you can see that because the break-evens are tellingly starting to come down even as the price of oil keeps going up.
The five-year inflation swaps have been crushed over the past 5 weeks.
And likewise, you also have this private credit issue, which looked manageable as long as there was easy credit, but maybe not. So I think the issue here, I mean, we just saw the service sector numbers from the ISM this morning tell us we got the first contraction in employment in what is by far the biggest employer of Americans. Something like 80% of Americans work in the service sector somewhere. That employment is contracting.
Few of us.
Suddenly. And at the fastest clip since December 2023. Now, that's not happy days in an environment where the Fed can't cut because inflation is expected to go up 1% month over month when the numbers come out this Friday.
1% month over month. Oh, that's so fun.
Bananas.
So fun.
From really 2.4 to 3.4% on the year-on-year number in a given month. You were annualizing the 1% rise when we were talking on futures power hour. What does that look like annualized? Double digits, like 12-ish%?
Mm-hmm.
Yeah. That's higher than the COVID peak for CPI.
Yeah, I think that we're looking at like cumulative food inflation of about 34% now since COVID started, which is the CPI basket. So I don't know if that's everyone's lived experience, and it's certainly not mine. But I live in a very high cost of living area, as do you.
That's right.
That said, I mean, we're probably still looking at some pretty gross inflation coming down the pipeline if all things hold equal, which isn't great. The commodities to me, I mean, thinking about the exposure here, commodities, GJP, DBC, how these tracking indexes have moved in recent weeks and recent months, they still suggest that this is the area of strength. So in 2022, right, because it became clear we benchmark ourselves to the risk, eventually vol comes in, but equity prices keep falling because we now know, we have higher input costs on at least for the foreseeable future. And until those kinks work themselves out, it impact earnings. And how long did it take for the market to bottom out, right? You don't recover until the pre-Russia-Ukraine war highs for a few years. It takes until late 23 to get back there. And for some of the indexes, the Russell effectively does nothing for 4 years. 5 years, it only breaks out last year. But DJP, DBC, these, I think, tell you all you need to know right now. If there are dips in commodity names, companies that make their money on commodities, these are the places to continue to look for bullish exposure. I know that you are looking at things like EM or EWZ, I should say, the emerging markets, which may become downstream beneficiaries of a continuing
ILF as well.
recalibration. EWZ has had a very aggressive bounce here over the past 2 or 3 weeks. Up more than 10%, for example. ILF, you point this out, we had hit former swing highs, Latin America ETF, and it has since bounced. So,
and this,
not all equities are created equal. And we saw that last
Yeah.
year. The S&P 500 went up, but there were a lot of other markets that came out as winners on the other side of Trump's, shaking. I actually have a snow globe here of him shaking the globe economic system.
Mm-hmm.
So, I mean, why not continue to think that the same influences could very well be in play right now? I see this as a total accelerant to the concerns that were developed last year thematically that allowed foreign equities to outperform their U.S. counterparts. And by historic basis, Ilya, those are just coming off of multi-decade lows in terms of relative valuation. So there's still a lot of capital that can move around and chase stocks higher. It doesn't need to be here in the U.S., so we should keep that in mind.
Certainly. I just think it's very important to also keep in mind, as you have all those thoughts, that while all those thoughts may well be valid, and Lord knows I have exposure around those same ideas, we just mentioned EWZ, for example, something I've been long all year last year and am still. There's that. But also, when markets panic, correlations go to 1, and these distinctions go away. So just be careful here. Just because Brazil, let's say, just take the EWZ example, might be well positioned to take advantage of the US-China rivalry because they supply to China those things that China would ostensibly lose from the US. Think soy, think oil, think vegetables, all kinds of things. Wheat. But if there is some sort of correlation, one event, and that's certainly on the menu here as a risk, as a much more elevated risk, frankly, than usual, those kinds of narratives are going to go on pause until whatever panic washes over the market. And risk is just going to get sold, and it won't matter what it is.
If risk is going to wash over the market and we're going to just forget about this, I mean, that's the setup right there. This is the bull setup right now. The market just benchmarks this. We get Trump's deadline tomorrow, whatever the catalyst is, we're trading at 6,700. You got an inverse head and shoulders pattern working for you. I'm doing a simple doubling of the neckline here, Ilya. You said earlier today you want to see 6,700 cleared. I'll give you that. We'll go to the lows that we had last week. That would give you a measured move up above 7K, which is one of the reasons why thinking about directional neutrality here as we go out, thinking about like the 53 days to expiration, you want to give me 60, 50, 6,000, and then again 7,200, 7,250. Even on a potential recovery rally that eliminates most of March's losses because traders just shrug it all off in some highly, hopium-induced scenario, you're still not getting to 7,200 by this inverse head and shoulders pattern. Mm-hmm. So I'm comfortable looking up there. And if we were to rally, it is a rally that I think we should be thinking about scaling into short deltas. But Ilya, this is a conversation that you and I will not continue tomorrow because you're out the rest of this week, which means we have an interesting rotating cast of characters to join me for overtime. Tomorrow, Tony Batista sits in for Ilya. Join us right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak, enjoy your vacation. I've been Chris Vecchio. I'll be here working. Good luck trading. But Ilya's sticking around. He's got one more segment left in him. He's here for Macro Money. Coming up next on Tasty Live.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME Futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're making our own way. We're making our own way. We're making our own way, Watch the world fly by. Watch the world fly by. Madrugada chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
The markets are in a holding pattern. Apparently, we are waiting for something to happen on this ultimatum that President Donald Trump issued to Iran about opening the Strait of Hormuz. And so there isn't conviction on the board for now. what's coming this week, and can we get some conviction, and can we figure out what in the world is actually going on here? That's what we're going to try to figure out right now. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as ever, what we are going to do is first and foremost take a look at the price action, see what that is telling us about what is on the menu here. And from there, see if we can't figure out some next steps. Because, of course, the key here is, as ever, what is the price action whispering to us? Because certainly attempting to make sense of this news flow seems like a dangerous kind of an idea instantly, just because the markets are so headline sensitive that everything seems to be switching in rapid form. So let's first and foremost take a look at what the prices themselves are telling us. And from there, maybe we can make some sense of next steps. Here's the view on the bogey du jour, of course, crude oil prices here holding steady against the spike high that they hit when this whole episode began. And we can see here that we gap a little bit higher at the start of the week, but we don't end up actually going anywhere. We're just hovering. And so, on the one hand, there's conversations after an Axios report overnight that maybe there's a ceasefire being discussed. There are conversations about perhaps we are going to have the president make good on this ultimatum that he's made, where he very clearly said, listen, I'm not backing down from this one if Iran is not going to reopen the strait. And the deadline for that is essentially overnight here. If that's not met, then we're going to start to bomb all manner of energy infrastructure. The market seemingly not sure which way this goes, but they're pointedly not putting conviction behind that outcome or this one. So what we're seeing is the market is clearly unsure of whether the president means it, whether Iran is going to meet him halfway. They've certainly been sounding a defiant tone. Whether there is a ceasefire to be had, that Axios reports claimed that a whole range of countries are having these discussions, including the U.S. and Iran, and that Iran asked for this, which, of course, then raises the question as to who we're talking to and who is talking back when the president makes threats on social media. Because, again, that defiant tone coming out of social media on the Iranian side ostensibly isn't the same group of people that's negotiating a ceasefire if that ceasefire negotiation is in fact occurring. So the fog of war is particularly dense at the moment, and the markets don't want to make a call this way or that. We can see the same thing from stock markets. They attempt to get a little bit of traction, but ultimately they're holding back at a familiar level. If ever there was a clear cut, if the trend stays, this has to hold. And if it's going to break, this is the spot. This is about as classic of a chart setup as you can imagine. This is the deciding one. And we'll recall there was something very similar here, for example, in this instance, where we had a clear band of former support become resistance. We broke through that. We gapped to test it, and ultimately the trend held. Once we came down to this support, we came back again into this same area. Couldn't hold it, broke down. We've retested the underside here before, broke down. We're retesting it again. Not unlike we tested this 2 times, 1 time closer, 1 time more distant. Now we've tested this 1 time closer, 1 time more distant. Let's see if it holds. But for the moment, the markets are not prepared to jettison the war trade as an idea. Same thing with the bonds. We can see they're also pointedly testing the former area of support that they broke, and they're not finding conviction to overturn what has been a trend toward lower bonds and higher interest rates since this thing began. Same thing for gold. And the trend motivated in the same way. Gold, of course, doesn't yield anything, and so is a natural foil for interest rates, and as an alternative store of value is also a natural foil for the dollar. Well, what have we had against the backdrop of this war, where the melt up in crude oil has given us what we just saw in the bonds here, right? Higher interest rates, born, of course, of inflation expectations surging. And what do we end up with? We end up with gold lower because, of course, higher rates don't do it any favors, but also a higher dollar, which also doesn't do it any favors. And so we end up with a situation here where the market is ostensibly looking at this and going, well, this whole thing in its sort of sum total is an inflation risk. Nothing that we've seen so far suggests it's become any less of an inflation risk. Maybe we are going to have some variety of change, of course, here eventually. But for the moment, this is the story that we're looking at, and the markets aren't prepared to let go of that narrative, even as we see the sort of fog of war really descend on markets and obfuscate whether maybe we have some on-ramp here. The hopium, in other words, is not strong here, but neither is the panic. It is worthwhile to mention, though, that the markets have had more hopes for an on-ramp than they appear to be entertaining now. And that's something to keep an eye on, of course, because as ever, this is the story. We can see clearly that the markets are looking at this situation through an inflationary lens, where when you have a run-up in oil, or indeed any kind of concerted move in oil, it would seem, the lag for that to appear in headline CPI inflation seems to be about a month. And what you end up seeing here then is everything that we just saw in the price action across the major assets kind of cascade from that idea that if you have this surge in oil, and if it becomes sticky, especially since if you were to reopen Hormuz in full today, it would take months in the best case for things to normalize, and normalize they maybe could, but the reality is we probably can't go back to the status quo before the war, because now if Iran is going to continue to have control of the strait under this regime, they want to charge a toll. So that's baking in a higher price perpetually in perpetuity. If it's a capitulation and a new regime takes hold in Tehran, well, there's no telling what they'll do with the strait and how quickly they can get everything back in order. And if it's the U.S. controlling the strait, well, then who's to say that it's not going to get used as economic leverage, especially against China? So there is a whole range of options here, but none of them seem to end up with this not being an inflation shock, at least for some amount of time. And when we look at where the world was, this is as of January here, these are the OECD countries, and we can see that 50% of them were already looking at inflation rising before this war, even though, of course, inflation had normalized significantly since the COVID spikes. And by, let's call it the middle of 2024 going into 2025, almost no country had rising inflation. Before this war, clearly it was a different story, but now it is almost certainly an inflationary risk because whatever comes as a consequence of this war is going to come on top of what we're seeing here, which was already starting to become inflationary by itself. Now, of course, the counter argument is if this goes on long enough, the higher price of oil and the higher price of everything that is transacted through the strait, be it aluminum or helium or fertilizers or the petrochemicals that are needed for all manner of fertilizers and plastics and what have you. Something like 50% of global polyethylene, the most common plastic that really goes into almost everything you see around you, goes through the strait. So there is all kinds of an inflationary shock here beyond just energy. But of course, if you keep that squeeze long enough, people are going to start to say, well, we need to pay for those necessities that are now more expensive, like energy, like fertilizer, and we're going to, as an offset, start to claw back spending elsewhere. If it was a temporary shift, we'd just bite down and take the squeeze. But if it's going to last for a long time, well, then we need to make some more lasting adjustments to our spending patterns and pull spending from those things where it can be foregone to now cover these extra costs. And that kind of demand destruction has been starting to show up in inflation expectations. We can see here the 5 and 10-year break-even rates, which measure the inflation expectations baked into the bond market. They've started to come off recently, in particular at the longer end here, as crude oil has continued to march higher, even though, of course, the initial march in crude oil since the beginning of the year fed inflation expectations. And then, of course, the war amplified that by many orders of magnitude. And so we saw a surge in the violence of this crude oil move, and with it, the inflation run-up got another big shot in the arm. We now see these things diverging a little bit. And that could be because we're getting into that demand destruction risk part of the equation. And not surprisingly so, because just like 50% of OECD countries had rising inflation before this war began, so too 50% of them had rising unemployment rates. And so we were already in this uncomfortable location economically where global economies were starting to feel the stress even as inflation was starting to perk up. Well, here it is, the overlay of overlays on this thing. With the war, both of those things get worse. Now, you wouldn't know it looking at U.S. employment data that came out on Friday. 178,000 jobs added to non-farm payrolls. That's well in excess of the 60K expected. The unemployment rate ticking down from 4.4 to 4.3%, reversing the rise in the prior month. But there is more than meets the eye here, it would seem. This is not exactly the rosy report that it appears to be at first blush. And you see that when you start to look under the surface. The actual tenor of these numbers is perhaps much more worrying than these headlines suggest. And you really get it when you start to look at the breakdown in the various subcomponents here. And what you see immediately is that the overwhelming majority of jobs here is once again coming from healthcare and education. And that isn't altogether unusual, because when you consider what this seems to say, it follows a familiar pattern. We know, looking from the recent history, certainly a couple months back and longer than that, that this has been a structural sort of jobs growth. Take a look at the way back here. This is as far back as the data goes, about 3 years here. What you see is this pink area in the middle seems to be the largest one of the bunch, and that's, of course, education and healthcare services. Now, why is this consistently the biggest driver of employment growth? Well, rocket science, this is not. As of March, the U.S. hit the highest population of 55 years and older Americans on record. Unless you think that this is somehow proportionally matched by younger Americans, it isn't. We also hit the highest share at nearly 31% of the population for those Americans. So we're approaching a third, let's say, of Americans are now 55 years or older, the highest ever. These records go back at least to the 1950s, depending on which data you look at. And so when you consider what this means, well, of course, there's job creation in education and healthcare, in particular in healthcare. Somebody has to take care of these people. There's obviously a lot of demand here for services that target this cohort. Now, on the one hand, this means that job creation is not so cyclical, and so were there to be a big squeeze, these people 55 and over aren't going anywhere. And so you do need to still create the jobs that support them. On the other hand, it also means that everything in these other sectors is at best anemic. And so if there were to be some sort of a major economic shock, it wouldn't be very difficult to overwhelm the kind of structural baseline that occurs for this healthcare work job creation engine with all the losses that you might see were there to be a recession and a meaningful round of layoffs. And so it's, on one hand, a source of insulation for the job creation that there is now, to say that it is structural rather than cyclical. But on the other hand, the cyclical part is not exactly spread in an encouraging way. Most of it is modest, if anything. The second biggest job creator after education and healthcare services, for example, for March was leisure and hospitality, exactly the kind of thing where you might see people trade away to finance extra energy costs. And so encouraging, this is not. Now, we also got some ISM data from the Institute of Supply Management, a view on the service sector. And here, still looks like we have generally solid output growth. We come down a little bit from the heady levels that we saw in the prior month in February. That was, of course, the highest since back here in 2022. So very strong numbers, and a little bit of a pullback probably doesn't hurt here and probably makes a little bit of sense in context, but look under the surface and things look much more ominous. Employment contracts for the first time since the middle of last year. As ever, this is done in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so you can see here, this is perhaps the first time that you're below 50 since back here, call it latter day 2025, October, November, but it's also the fastest contraction since December of 2023. At the same time, costs are surging. The price component here flying higher and is now at the highest since, let's call it July or so of 2022, mid-2022. Very much still around that shock that we have on the prices front post-COVID. Before the Fed's rate hikes that they start in March of that year really start to take hold and beat inflation back. So as we look under the surface, all of those risks, both to inflation and to employment and thereby to growth, all of them are materializing here. And we start to see how you get from an inflation shock to demand destruction, which is, of course, precisely the fear and precisely what the markets seem to be looking at here as we consider what comes next. Now, the biggest read-through from this, of course, is to what the Fed may do next. And here is perhaps the biggest risk for markets, because with the Fed's objectives seemingly in tension, we have a kind of rock and a hard place situation. From where the expectations sit currently, the markets don't expect any policy changes from the Fed this year, and they're flirting with the possibility of maybe one cut next year. That's not hysterical concern about demand destruction, but it's certainly a recognition that we don't have space for hikes or cuts this year because, on the one hand, the economy seems to be under threat. On the other, inflation is on the march. Now, we can see that even under these clouded circumstances, the stock market is responsive. As we've seen this surge in the policy outlook that erases rate cuts for 2026, the S&P 500 has come down. As you see the demand destruction part of the conversation start to come into the conversation at the beginning of this month, beginning of April, and coming out of March, as things get a little bit more dovish, as you start to put some rate cuts back into the mix for next year, stocks come back up a little. Now, there's a couple of things this week that are going to impact this closely. First, of course, is going to be minutes from the Fed's latest policy meeting. And we're going to see if this sit down, this is, of course, the March sit down, if reading the tea leaves there gives us any clue as to what the Fed might be biased towards, the sticky inflation or the demand destruction side of the equation. It seems like the vibe going into that meeting was inflation was the bigger worry. And of course, that is what the markets would be afraid of, because if the Fed is afraid of inflation, then whatever rate cuts are on the menu here may be too many. And if this starts to move back higher again, because you start to factor those out even for next year, well, then stocks probably get pressured lower. The next bit here is going to be the CPI report coming out Friday. And not surprisingly, we're looking for a big jump. 2.7% expected for the core, 3.3% expected for the headline. So a dramatic increase in inflation that's coming on the menu. Of course, that much seems clear from what we saw in our kind of mental map of how all of these things appear in sequence. First, you get the spike in crude oil. Then a month later, you get the build in inflation, give or take. But the question really is going to be, do the markets expect the Fed to look through that? Or is this the kind of thing that, in simple terms, takes this down 33 basis points expectation for next year, which is basically one cut in the 50-50 chance for a second, and trim that back? And if it does, well, then we can see the implications. And of course, from there, cascade all of the other major assets. So if the story after these FOMC minutes and the CPI numbers this week end up being the Fed is concerned about inflation first and foremost, and the story from labor markets looks like the kind of thing where the Fed is going to justify doing something like that by numbers like this, even as what's happening under the surface is vulnerable and perhaps is already deteriorating if the ISM numbers are to be believed, well, then the read-through ends up Stocks probably find a way to hold this level and come back in. Bonds probably find a way to hold this level and come back down. Gold probably follows suit. And of course, the dollar probably has legs to punch through this resistance. Now, with all of that in mind, the exposure that I have on the menu here, still very long the dollar against the Aussie, the pound, the euro, the Canadian dollar, and in my spot exposure against the yen. That 6J contract is just too big, so I use spot rather than the futures. I am still short the bonds at the middle of the yield curve and at the long end, looking for rates to go higher. Still short risk. In fact, I've just extended my maturities a bit here for both the NASDAQ. That's now 46 days out. S&P is now 53 days out. I still need to work out what I'm going to do with the Russell and probably push out that one as well. But still short risk, long oil with plenty of time on the docket, and looking for the higher interest rates, fewer Fed rate cuts, and all of the implications thereof to wash over the markets from here. And that is macro money for today and for this week. I'll be back next week. I'm out the rest of this week, though. The show is usually here Monday through Thursday after overtime. That's the show I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next week. Live and on-demand recordings for the rest of this week. Happy trading.
Get tasty, free market. Come on, you know it. Can you feel